Okay. Good morning, everyone. Thank you so much for joining us for today's Marathon Trader Summit for the month of September. My name is Greg Lewis. I am the Marketing Director here at MetaStock, and it's so great to have everyone here. We're looking forward to a great day. 8 speakers, 8 hours, all free, all fantastic. And we really look forward to your participation and your attendance. And I see there's a lot of people here already. Do please make sure to say hello. Say hello right now. Chat into the box here on YouTube and say hello. Hey, if you haven't heard of MetaStock, we are the purveyors of charting software and market data for active traders, active self-directed traders, just like yourself. If you haven't heard of us, stick around. Clearly someone will discuss us to some degree. Today, hosting will be Jeff Gibby, and the first guest presenter we have is one very popular, Steve Bigalow. So that'll all be starting here in about 7 minutes. Today, you should know that we are simulcasting from GoToWebinar as well as YouTube. Make sure I'm actually broadcasting. Test. Yeah, looks like everything's good. If you can't hear me, I'm sure you'll chat in soon enough. Can't hear you. Anyway, so like I say, we'll be starting in about 7 minutes now, and today is going to be big. There's a lot of things going on. We really encourage you to go ahead and participate in chat. We are simulcasting on YouTube as well as GoToWebinar. If you're watching on GoToWebinar or YouTube, the experience is essentially the same, but the speakers see different chats. So if you're on YouTube, when you chat in, we will go ahead and pass that information on to the speaker, and usually they're pretty good about responding, so don't hesitate to ask questions and make comments, and snarky or other. Well, try not to be snarky. You don't have to be positive, but we just ask you to be polite in your comments and honest. And we always appreciate your honest feedback. So go ahead and give that to us. I got 5 minutes. I think I'll head. There's Jeff Gibby from Taylorsville. I'm going to go ahead and play a little tape about who we are. A little tape. Yes, it's 1971, and I'm going to roll the tape. I'm going to go ahead and push this button, and a digital video is going to come up showing you a little bit more about MetaStock. Here you go. Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes, and I'll tell you.
MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, I hope you enjoyed that. I made that in my basement last year during the pandemic when we were all quarantined in our homes here in Utah. We no longer are. I know that that's not the case for everyone in the world. I hope that everyone's doing well and staying healthy wherever you are in the world today. Right now in the world, we are in Utah, and it's looking to be a gorgeous day. It's about almost 8 o'clock here. We've got about a minute and 30 seconds before we start. So, hey, why don't you take a moment right now to like and subscribe and hit that little bell so you'll be notified every time we have a live event, because we do have live events just about every week, usually 2 to 3 times, and you don't want to miss any of them. We have a lot of great speakers, including our very own speakers here in-house, and also a lot of guest speakers, and they always have a lot of great information, and it's a lot of value-added information and stuff you'd want to not miss. So also, again, one more time, do make sure that you participate in today's event. We love your feedback, we love your participation, we love your comments. Don't be shy to just chat right in with comments and questions. That just lets us know you're engaged. Okay, we're going to be starting here in about 45 seconds. So I'm going to mute myself for about 30 seconds and give myself a second to drink my coffee before I hit the start button. Thank you. Oh, wait, I have to say hello to Vincenzo. Good morning, Vincenzo. Super fan from Italy. Also, thanks you. Good morning to Vascos. Thanks for saying hello. Make sure you all say hello. Okay, now right in the wire. Hello, Scott Gow. Okay, we're starting in about 10 seconds.
Okay, hello everybody. I hope you're doing well. Thanks for joining us today. We are going to have a great session. Thanks for coming. Good morning. I hope you enjoyed Saturday. Welcome to the Trader Summit. Let's go ahead and read a legal disclaimer, should we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, as I said just a minute ago, I want to welcome you today to the Online Trader Summit. Our registrations look fantastic. Everything's looking great. We have a great lineup of guests I'm really excited about today. So I do want to say really quickly, thanks for our 2 sponsors. We have a brand new sponsor today, but it's not Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring us for the last 9 years. Ever since we started the Online Trader Summit, they've been a sponsor. We really appreciate what they do. They've been publishing articles since 1982. They've got over 1 million active subscribers and 17,000 trading articles in their archives. So if you registered today, you will get a free copy as long as you opted to get a free copy. And if you're watching us on YouTube and you want to grab a free copy, you need to do this today. So unfortunately, if you're watching the replay, so actually you could do it tomorrow as well, but as long as you do it by Monday, you can also get a free copy of the Stocks and Commodities Magazine at metastock.com/trader summit. I also want to recognize our second sponsor, brand new sponsor with the Online Trader Summit, sponsored by MetaStock, is the CMT Association. And I'm not sure if you're familiar with the CMT Association, but they are one of the most reputed bodies for that CMT. It stands for Chartered Market Technicians, and they do qualification courses that include risk management, quantitative system design, portfolio management, and applied behavior finance. They train some of the biggest hedge funds and brokerages in the world. And if you're interested in learning more about the CMT Association, you can go to cmtassociation.org. So we're MetaStock. We're going to be running the event today. And let's get right on to it. So our first guest speaker is Steve Bigalow. Steve's a very good friend of mine. I really appreciate a lot of the stuff that we've done with Steve over the years, the ability I've had to really know Steve. And I absolutely love the advice that he gives. I like a lot of the stuff that he talks about looking at for decisions on charts and not trading when things are indecisive. And I always love to hear what he has to say. So we're going to go ahead and you can see him now. But Steve, welcome to the room today. Let me unmute your microphone. How are you doing?
Good, Jeff. Thank you for inviting me today.
Right, cool. You're always welcome. Every single time you can come.
All right.
All right. I can see your screen. I'm just gonna let you kind of kick it off and run it from here. Thanks for coming, great. Steve.
All right. Welcome, everybody. The first question I ask is, how many people have seen my presentations before? This way it gives me an idea of how detailed I need to explain each chart. Number one. And number two, let's see. If you've seen my presentations, just type in Y. If not, put an N. Oops, somebody's asking whether the session has started. All right, no. And also, while we're doing a presentation, feel free to ask questions as we go along. Okay, so far it looks like half and half. All right. I started using candlesticks approximately, I hate to think, 30, 40 years ago when nobody else was using them or knew about them. So I was a stockbroker for 8 years. I left the business because I realized brokerage firms didn't have any more idea about what made prices go up or down. So after I left the business, somebody threw candlesticks on my desk. And they said, "You were a stockbroker. What do you think of this?" And I thought anything as sophisticated sounding as candlesticks wasn't worth the time and effort to look at. But they kept badgering me. And the biggest facet that I got when I started looking at candlestick charts was, this makes sense. And the more I learned about candlestick analysis, the more sense it made. So Jeff and I have worked on putting the candlestick signals into their program. So this is what candlestick analysis is basically identifying when there's been a change of investor sentiment. But we can also identify when there's very powerful trades. So, and that's what the MetaStock scanning process does is looks for these strong candlestick signals. So we're going to look at what we call power signals and patterns. And it basically is, it's telling us when there's been a major breakout. And I always illustrate this because my brother, I had to convince him, and I said, well, that's a breakout. You might consider looking at it. While we were talking, he actually bought some at 73 cents, which I usually don't recommend stocks at 73 cents. And he got out near the $17 range a couple months later. Not because we were any great stock pickers. It's because that gave us information that there was something new going on in that investor sentiment. So this is what we call the rare result, which is basically if we see a fry pan bottom, which is one of your 12 major signals or one of your patterns. Let me backtrack a little bit. Out of the 50 or 60 signals, there's 12 signals that I call the 12 major signals, because not only do they occur with great probable results, but they occur frequently. You are going to see those 99% of the time. Jordan, you can post here. This is being recorded. So here's the result of a fry pan bottom. It looks like a big fry pan bottom, and there's the breakout. And we know what to expect as a breakout, a very strong price move. Now we call this the rare result. Rare result is research analysis, reverse engineering, which means if there's a breakout, it alerts us to go find out what the news was that created that breakout to see whether there's going to be more upside to that. So anytime we can use candlestick charts and see a signal that tells us there's a new investor sentiment, that puts us in situations that tell us we can stay long as it stays above the T line. Now, the T line is the 8 exponential moving average. And this is what I call my most important panel on my PowerPoints. If the candlestick signals are the graphic depiction of what's going on in investor sentiment, and the T line, the 8 exponential moving average, acts like a natural support and resistance level of human nature, like a Fibonacci characteristic, when you add those two together, you've got a very simple trading program, or a very powerful trading program. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now that's important because there's areas in here that tells you maybe there's time to sell because of a candlestick sell signal, but it didn't confirm and never closed back below the T line. Conversely, if you see a candlestick sell signal and a close below the T line, you can stay short until you see that candlestick buy signal and close back up above the T line. On time frame, candlestick signals is a graphic depiction of everybody buying and selling during a specific time frame. They work just as well on the 1-minute chart as they do on the monthly chart. I used to trade the E-minis off a 1-minute, 3-minute, 10-minute combination. I trade futures during the day off the 10-minute chart. I'm a swing trader as far as stocks, meaning I'm using the daily charts, and then I'll flip to the 10-minute chart with the caveat that the caveat is you can stay long until you see a candlestick sell signal, or the further away you move from the T line, especially in the overbought condition, the higher the probability it's going to come back and test it. That makes your candlestick reversal signals that much more relevant. So the process for analyzing the probabilities of being in a correct trade is we know there's different patterns. This is a scoop pattern. But the more elements that we can put into our analysis of There's our little bullish harami. There's a flat handle. Most people would consider that a resistance level. Then we can see where the buying started. This is your best friend signal, a doji followed by a gap up. And you can see the scoop pattern. And then when it breaks out through this level, how long do you stay long? You stay long as it doesn't close below the T line. So the rhetorical question always is, do these always make big price moves from a pattern? And the answer is definitely not. But the probabilities of being in a profitable trade is greatly enhanced, and the prospects for being in a big price move is greatly improved. So every time I put on a trade because I can see a candlestick pattern or signal, it definitely puts my probabilities of being in the right place at the right time. So this is what we call 2+2 analysis. If we can see the signal setting up, the dojis are, or a doji is one of the major signals. It tells you there's indecision between the bulls and the bears. Looks like a little cross or very small trading range. But then as you can see, the bullish confirmation of these little indecisive trading days also tells us we've got a J-hook pattern setting up. And we know the prospects of a J-hook pattern. Wave 1 and wave 3 will usually be approximately the same level. So even if I've missed this move, I can be buying right in here because I know the magnitude of this move is going to be approximately the same as this. And then you could even refine it more. This is what we call a bobble breakout, which is basically a J-hook pattern that you can even see more clarity. You can see exactly where they failed. There's a bearish engulfing signal in the overbought condition. Now, my overbought condition is I use stochastics of 12.33. And so logic from the Japanese rice traders say, if you see a candlestick buy signal in the oversold condition, more than likely that's where you're going to start to see a reversal. If you see a candlestick sell signal in the overbought condition, the probabilities are pretty strong. That's time to start selling or taking profits. Now, if you see a candlestick sell signal in the oversold area, that doesn't mean anything. That's not a signal. If you see a candlestick buy signal in the overbought area, that doesn't mean anything. We're looking for the change of investor sentiment in the appropriate conditions of the trend. So there's only a couple of rules. The first rule is, let's see, like the J-hook pattern. Okay, Jim. Remember, the first rule is the T-line rule. If you see a buy signal and it closes above the T-line, you can stay long until you see a candlestick sell signal and it closes below the T-line, with the caveat that the further away you move from the T-line, the higher the probability you're going to see a reversal. The doji rule is very simple. It just says that the price will usually move in the direction how they open after a doji. So here's the simple logic to all this. If you see candlestick reversal signals in the oversold area, and then you see it confirm, you've got an extremely good probability investor sentiment has gone the other way. I often tell people the reason that they like to put me first in these sessions is candlestick signals can be the brick and mortar, your bread and butter, the ABCs. You don't have to be a sophisticated technical analyst at all to understand or recognize what the signals are telling you. The most consistent indicator in the world is human nature. And all the Japanese rice traders have done over the last 400 years is identify when human nature is changing. So this is what we call convergence analysis. You can see doji, 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 where it was occurring, right smack dab on the 50-day moving average. And then it went positive. So where do you think everybody was buying? They were making their decisions of buying at the 50-day moving average. We can just see immediately that that's where they were buying, number one. Number two, look where they closed. Candlestick buy signal to close above the T line. The probabilities are extremely strong that you're going to head higher. This is what we call a doji sandwich. They gap it up and do a doji, not very decisive. But we know that if it opens positive the next day, we can be buying because the magnitude of this candle is usually the same magnitude as this candle, giving you a doji sandwiched in between, and it implies there's going to be more upside. So all this information is built into Candlestick Analysis. Is just stuff that once you learn it is just common sense that you can now have much more clarity as far as what's going on in human nature. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and that's exactly what the candlestick charts tell you is what's going on in investor sentiment. Have noticed that the tighter the formation, the fewer candlestick signals. That could be, but that's what it's telling you, is that if there's waffling, that's what's going on. It's waffling. You don't want to be trading that stock. Here, exit, take profit by T-line, moving average, or candlestick, or both. The first criteria for any of this analysis is the signals themselves. I could take everything off this chart and leave the T-line and stochastics because the signals themselves are the number one criteria. Anything else added, like the 50-day, the 200-day, I think I also have charts with a 34 EMA. You can add whatever enhances the analysis of why things are occurring or reversing at those levels. So that information built into candlestick or the doji makes for one of your strongest power trades. Let me make sure I'm getting all the answers. We'll ignore candlestick when it is not in overbought. Yes, if a signal formation occurs and it's not in the right condition of a trend, like the stochastics or midway, yeah, that's just a formation day. When you say high probability, Jeff, somewhere in that range. I would guess that over 70% of my trades are going to be positive. Now, that positive might be 0.3%. It might be 300%. All I know is that I'm probably going to have a good, profitable trade. But there's another statistic that goes with that, which took me a while to figure out, that 30% of the trades might not work. And that's just as important an analysis as getting into a trade that is working. And that goes back to that sage advice that most money managers will give you to cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Candlestick analysis does that very easily. So if I get into a trade and I see that the next few candle formations tell me this is not working, I close it out and move on to something else. Is there any false signals and candle patterns? Yes, occasionally. But remember, we're working with probabilities, that every time we see a trade, we know the probabilities are extremely strong. And again, the reason that we know those probabilities is we wouldn't be looking at those signals that the Japanese rice traders have illustrated for us after hundreds of years if they didn't work. Remember, the Japanese rice traders that developed candlesticks did not become wealthy. They became legendarily wealthy in Japan. They were the financial powerhouse, and they were trading the most boringest commodity in the world, rice. And it wasn't because they knew what prices were going to do up or down. They were just looking to see what human nature was doing to move those prices. So the best friend signal is very simple. It is a doji followed by a gap up. again, there's two major factors in a best friend signal. Not only have they told you which direction they're going, but it's usually going to be a very strong price move. We recommended LPI here at the breakout, and it closed above the T line. So look at all the factors that we can look at. Right here at the 200-day moving average, in the oversold area, they did doji gap ups, which is your best friend signal, a very powerful reversal signal, and they closed above the T line, which told us, and we might not have found this until we did our scan that night. And what's our criteria for getting into this trade? If it opens positive, it's basically confirming our reversal signal, number one. Number two, it's telling us the T line's not going to act as resistance anymore. Number three, looks like it's breaking this downtrend. This becomes a very high probability trade. How long do we hold on to this one? We're still long this position because, as you can see, there's never been a sell signal and a close below the T line. Now, there's your bearish engulfing signal in the overbought area. What would have been our criteria to get out of this trade? If they had opened it lower the next day and traded lower, we'd have closed it out. The fact that they opened it positive told us they were still above the T line. We continue to hold. So this is not rocket science. This is just very simple analysis of what occurs in human nature. So the first aspect of any of our trading is, which way is the market going? Obviously, up here, when you saw a sell signal and a close below the T line, we knew that there was going to be a downtrend in the markets. Here's one of your 12 major signals. It's the inverted hammer. Why was this relevant? Well, number one, the inverted hammer is one of the 12 major signals, and it has a statistical probability that's not anything more than me identifying what it does over the last 30 years. It's very simple. If you see an inverted hammer in the oversold area and it opens positive and trades positive, you've got probably about a 95% probability or greater that it's now in an uptrend. And when it closed more than halfway up this candle, that now became a morning star signal in the oversold area. And look how far away it was from the T line. So these were all probability factors that said there's a major change of investor sentiment. Thursday, when it opened positive, it was confirming the signal, as well as confirming that it was closing back up above the T line and breaking this downtrend. Friday was a consolidation day. But what does that do as far as our analysis? It tells us as long as we're above the T line, the probabilities are that we're in an uptrend. JM, the T line is the 8 exponential moving average. Jim, I've got, I would buy the High Profit Candlestick Patterns book. It's got a green cover. I've written 3 books, and everybody seems to understand them very well. They're simple logic built into the candlestick signals. So if we know that there's been a major change of investor sentiment, that kind of adds to the fact that if we see a strong buy signal, now we've been following QuantumScape because of their solid state lithium battery that they're developing. When was it time to buy? Now we've started accumulating some more down here, but on this past week, look at your doji gap up. Now that led us to go find out what the news was, but you can see what the results of it has been over the last few days. This is what we're looking for. Is this information right here that tells us there's a dramatic change of investor sentiment. We also, oh, that's right. So look at Salesforce. There's your doji gap up. Right up until this point, there was no reason to look at this chart at all. There was just nothing there that made it intriguing. But this right here on Thursday told us there's a major change. Now that major change could be earnings announcements, something that warrants that it could go higher. Volume does not matter, William. Now I've already cultivated my trading universe to wanting more than 200,000 shares a day traded. Because every time I want to get into a position, I want to get in and out with relative ease. I don't want to be sitting for 5, 10, 15, 20, 40 minutes trying to close out a trade. Number one. Number two, the more volume, the more fluid your candlestick signals will be. So a lot of people say, well, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If nobody's willing to sell you stock as it's going up, that means it's going to go up on lower volume. Now, if there's a major volume spike at a reversals area, you can use that as added fluff to say, well, there's a major change of investor sentiment at this level, which usually means panic sellers are selling into the smart money, or at the top, it's the smart money taking profits into the exuberant buying. So that was a long answer to say, no, volume is not that relevant. It seems several SMA also doesn't matter at this point. In this case, no. Remember, the number one criteria is the signals themselves. Everything else is just a confirming indicator. So here's what we call 2+2 analysis. We recommended buying VET, one of the oil companies, because there's our J-hook setup. And look at your best friend, Doji sandwich, that took you back up through this level. So when we can recognize this as a J-hook, and this is the confirmation telling us they're breaking through this level, we can be buying on positive trading, because what do we expect after a best friend signal? More upside. What do we expect from a Doji sandwich? More upside. If there's more upside, what's that tell us about this level right here? It's not going to resist. We've got wave 1, wave 2, wave 3. Works just as well on the bearish side. If you're long, and you see them start gapping up in the overbought condition, again, look at the alert for taking profits. Look how far away you've moved from the T-line in the overbought area. If you see a gap up doji, that tells you there's indecision, and you're way up here, we're starting to take off at least half our position. If it gaps down the next day, you're obviously out of all of that position immediately, and now you've got a good prospect for going short. So anytime you see a doji gap down, that's your bearish best friend. That tells you there's a lot of force to the downside. This one's occurring right now. There's your doji gap down. Now, why is this relevant? Because remember what the market has done over the last few days. It's been up strong. The force of the signal is much more important than what the markets are doing. You can see they're still selling this off even though the market has been up strong. Are you asking whether it was overbought, Kathy? Remember, the candlestick signal or the stochastics are an indicator of where you are. It's not a reason for buying and selling. The signal is. So simple logic says I'd want to see candlestick signals in the oversold area. I want to see, usually you're going to see stochastics in the overbought area when a pattern breaks out. How do you find these stocks that are tradable for those signals? It's not stocks that are tradable for those signals, Mark. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether you're trading stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed. whether you're trading Forex, and it becomes very beneficial if you're trading options because it gives you much better timing to know when there's been a major change of investor sentiment. So all stocks have the same signals. Now, obviously, the more volume, the more fluid those signals will be. All right, so one of your most powerful signals is the kicker signal. The kicker signal is very simple. You usually have a dark candle. The next day, they gap it up at or above the previous day's open and go positive. How do you scan? That's what Jeff will kind of show what we've built into the MetaStock scanning software. How do you find what securities are forming these kinds of signals? That's what the scans are for. Let's see. Is there a way to scan for potential opportunities like this? Yes, that's the whole point of us sitting here today. Is that you're going to find the or you're going to identify the signals with the scanning software packages that we've set up with MetaStock that identify those signals for you. So even if you're not fully familiar with the signals, when you see something like this, and I'll let Jeff explain it more, you're going to see that this was a kicker signal. So you learn much faster when a strong signal is forming. Do you have automated scans to identify new candidates? Yes. So here's a fry pan bottom. One of your candlestick patterns. Looks like a big fry pan bottom. And what do we expect coming out of a fry pan bottom? Oh, mercy. We expect a big breakout. Now, notice your stochastics are up here when the breakout occurred. But that's exactly what we're looking for, is that fry pan bottom breakout, which is a buildup of investor sentiment. This is what we call a bullish flutter kicker. Look at your dark candle. The next day they gap it up and do a doji. Not really intriguing, but what's our doji rule? If it opens positive, it's going to trade positive. We call this a bullish flutter kicker signal because if you took out this little flutter, you've got a kicker signal. This helps you identify where you might want to put your funds the next day on a positive open. Going to make sure I'm not running over time here. This is a trend kicker signal. Notice that it opens here, closes here, coming out of this fry pan bottom. When they trade it back up, what's that telling you? This breakout is still in process, and this is the type of result. Again, the reason we're looking at these patterns and these signals is because they've been identified through hundreds of years to be very high probability trade results. Now, again, the reason Jeff likes to put me first is because this is kind of your bread and butter, the ABCs. You're going to see a lot of good trading programs here today. I use candlestick signals as my #1 criteria to confirm other trading programs. You might be using a very successful trading program, but if you overlay candlesticks on top of your analysis, it's going to dramatically improve your ability to confirm that trading program. So the trend kicker signal is very effective. You can see the pattern. You can see how they sold it off and then gapped it right back up again and took it off with strong price move. So basically, we're looking at the price move and trying to identify what's happening in investor sentiment. Here's one we call the message. The message is very simple. This was a fry pan bottom breakout, but notice what they did. They opened it here and they closed it down here. Not very intriguing. However, what was the message? The message was They wanted to start buying this with great enthusiasm, and then there was profit taking. So what do we look for? We look for when the profit taking is over and we can start buying. We're still long this stock right now. We took some profits here and we bought back here. Notice the next signal that occurred right here. There's your doji sandwich back up above the T line. What's that imply? More upside and you're above the T line. So this has happened in Marin, our MRIN. This week, Wednesday, they gapped it up, profit taking. What were we looking for? Look at what the white candle tells us. That even though this traded lower on Thursday, it was telling you after they opened it, they were starting to buy. We would still be buying this one with the expectation you've got a big breakout, look for more upside. A fry pan bottom, yes, it's just a buildup of investor sentiment. You couldn't trade the fry pan bottom if you wanted to because it's so junky up and down, but it's a slow buildup of investor sentiment, and you're looking for the breakout level, which is usually where that pattern started. So the benefit we have with candlestick analysis is the more pieces of evidence that the bulls are in control. There's your bullish engulfing signal. Stochastics in the oversold area. There's your doji sandwich that closed right up here at the T line. If they opened it positive, what's it telling you? They're confirming this signal, and they're telling you the T line's not acting as resistance, and they're forming a scoop because you can see kind of the flat handle. And what do we expect coming out of a scoop pattern? A slingshot effect to the upside. What was the right time to enter Marin? Still the right time. If it trades positive, we'll have a pattern, what we call the 45 degree, which is, it's going to probably be a good steady uptrending stock at that point. Analysis on higher price stocks greater than 100. Yes. You can make your universe whatever you want to. If you're only looking at stocks trading greater than 100, you make your universe that. If you're looking for stocks that only trade or have options, you're only looking at stocks that have options to trade. If you like to buy the $1 to $3 stock, you make that your trading universe. I use stocks that are trading greater than 5 because most brokerage firms will not margin a stock that's trading less than 5. And I want stocks that are trading more than an average of 200,000 shares a day. That takes the trading universe of 9,500 trading entities down to about 3,000. But every day when I do scans, which takes less than, if you don't know what you're doing, takes less than 20 minutes, usually in about 7 to 10 minutes, I can scan and find the best trades for the next day. But I'll have 5, 7, 10, 12, 15, 20 good trades for the next day. Then it just becomes a process of knowing which one of those trades have the strongest potential, like a best friend or a kicker signal or a fry pan bottom breakout. Now, those are just a few of the patterns. Those are the strongest ones. Due to connection issue, I missed the T line. The T line is the 8 exponential moving average. Called the T line. It's the trigger line or trade line, but it's got a very simple process. If you see a candlestick buy signal and a close above the T line, the probabilities are that you're in an uptrend until you see a candlestick sell signal and a close back below the T line. If a stock is a fry pan bottom closing above and below the T line, if a stock is in fry pan bottom closing above and below the T line, when you get in, Manuel, that's usually it doesn't matter. You're buying the pattern, and usually the T line will probably be falling right along the bottom. Slow stochastics, 1233. Elsa, you can use whatever you want to. I used to make good money with candlestick signals. Now, I say good money. I was a stockbroker for 8 years, and I was one of the worst investors in the world because there was no way of figuring out what stock prices were moving up or down because of fundamental research. When candlesticks came along, it made so much sense that prices do not move based upon fundamentals. They move based upon investor sentiment. I started making money. Then when the T-line came along, it was one of my private training students, Rick Sadler, that identified the T-line. And so once I added the T-line, so this is the great benefit of candlestick charts. We know the signals work, or we wouldn't be looking at them 400 years later. If the T-line adds to your analysis of when to stay in, you use it. If somebody says, put the XYZ indicator on your chart, see how it works. Well, if you put it on and it doesn't do anything, take it back off. As you can see, my charts aren't very cluttered. I've got the 50, the 200, simple day moving average, not because we use those to make our decisions. We're using those to see what everybody else's decisions are at those levels. The 34 EMA works relatively well enough to have it on your chart. And then the T-line is the most effective. What is the settings? Stochastic number I can arrange in just in case. 1233. Is there a particular candlestick time frame to use to see most of the, I don't know what the rest of the question is, but no, candlestick signals work on all time frames. Yes, the 8 EMA is based upon the open and the close. All right, so somebody was asking, we'll still be buying this one on positive trading on Monday. Now, we won't be buying it if it opens down here. What do we anticipate, or what should we expect based upon this gap up message and then the profit taking over? This is telling us there's a lot of bullish force. We should be expecting this. We shouldn't be seeing this. And this is another major facet of candlestick analysis. It also tells you high probability results for when to get into a trade and when not to get into a trade. Do you use technical analysis, or do you combine with, I don't know why we're not getting the full question on these.
Hey, Steve.
Yeah.
If you make the box bigger, you'll be able to see more of the question. Like if you stretch it out to one side.
All right. I'm trying to grab it.
But I can also read the rest of it. Do you combine technical analysis with fundamental analysis?
Normally, no, because the candlestick signal is the graphic depiction of everybody buying and selling, and it's usually based upon their decision of what the fundamentals are. So all we're doing is seeing what their decisions are based upon their fundamental analysis. We're not trying to figure out what the fundamentals mean. We're just seeing what everybody else's decisions are based upon the fundamentals. Now, on something like this is what we call our rare process, research analysis, reverse engineering. When this happens, we want to see what news was that created that. If it was an upgrade, all that told us was that people that are following the person that upgraded it are buying. That's just a aberration of supply and demand. But if they announce that they had developed a new product, or one of their products that's being approved by the FDA, that's usually going to tell us, yeah, there's probably more upside. Do you place your stop below the T-line? Yes, in certain cases. I also will close out a position if it's moved too far away from the T-line and there's a sell signal, because it's expected to come back to the T-line. And we do in our members area, we have a chat room that's open all day long. Got 200 people or so in there, which a lot of people that know how to trade candlesticks put out good recommendations each day. but it's a good way to learn how to use candlestick analysis very quickly. We also have an options room where we discuss the appropriate trading strategy to go with specific candlesticks. Oops, I better get moving along here. So I think bullish engulfing, doji sandwich. Oh, we did this one. We went backwards. That's right. The more pieces of evidence we can put in that the probabilities are in favor, the higher the probability you're going to be in the right place at the right time. Again, Salnick, you can use whatever you want to. The 8 exponential has worked very successfully for years. Mr. Answer yet? Use the close. Steve?
What he's asking, Steve, the way I'm reading it, is the 8 exponential moving average based on the close?
Yes.
So it's an 8 close exponential moving average.
Yes.
If that's not the right way to read it, Steve, I'm sorry, type it again. Otherwise, yeah. And we want to stop out, particularly too, you talk a little bit about how you want it to close below the exponential moving average in order to stop. So you don't want it to penetrate. You just want it to close below. Is that correct?
Close, yes. The most important aspect of candlestick analysis from the Japanese rice traders is not how it's traded during the day. It's where did it open and where did it close. Those are the 2 important parameters that create a candlestick signal. So there's your doji sandwich, breaking out through this resistance level and the 50-day moving average. Why is that important? Because everybody has the 50-day moving average and they're waiting to see whether it's going to break out. We can see immediately that it is. There's your bullish engulfing signal right here on the T line. What's that pattern setting up? Positive open tells us we've probably got wave 1, wave 2, wave 3. 2 plus 2 analysis. There's your fry pan bottom. Where do you expect the breakout to be? Right there. And how did they do it? With your best friend signal. What did that imply? There's a big breakout. So look at your stochastics. You're in the overbought area. Simple analysis. You buy your signals in the oversold area. The patterns are usually going to break out when your stochastics are in the overbought area. Swap, it works on all time frames, whether you're trading off the 1-minute chart or the monthly chart, depending on your time frame. So here's candlestick logic. If we can see a J-hook pattern setting up and it breaks through this level, what can we assess? Wave 1, wave 3 is definitely taking us through this level, and as soon as it does, that confirms we're probably in a good strong uptrend. The 50-day is a simple moving average. The 200 is a simple moving average. That's because every major money manager in the world uses those 2 moving averages to make their decisions. What kind of news will imply more upside? If they've developed a new product, if they've gotten a product that's approved by the FDA, what we're not looking for is somebody's upgraded it, because that's just or upgraded or downgraded the stock. That's just a temporary supply and demand difference. So candlestick logic, if we can see a J-hook pattern, which we know wave 3 will be the same as wave 1, and it's breaking out through this level, that tells us that's a good breakout area. The dumpling top is the opposite of the fry pan bottom. It's a slow rounding top, and then it breaks down. And why is the candlestick patterns important? Because we're short this position right now, and look what the market has been doing. Market's been up strong, and this is still selling off because of the pattern. You can use RSI, yes. Use whatever confirms that you're in the right place of the trend. Again, obviously you're not buying a candlestick buy signal in the overbought area. You're looking for a candlestick buy signal in the oversold area. So the importance of the patterns is telling you exactly what the force is of investor sentiment. So we've got a couple of short positions on right now because it just, you're always going to make money on the short side even if the market's going up. You're always going to make money in long positions even when the market's going down. But our overall positioning is on the bullish side. There's the opposite of a dumpling top. Your fry pan bottom, there's your J-hook pattern. And what other pieces of evidence can we view on this chart that this was a J-hook pattern? Because look what was happening right here at the T-line and the 50-day moving average. Indecision and then bullish confirmation. So what's this tell us? That they came back and tested the 50 to see if it was going to act as support. And when they did, they're all confident that it is, and they're still buying. We could see immediately it was a J-hook pattern. Should we use it in a range market or trending? It doesn't matter how you use it. You're going to be able to identify whether you're in a range market or trending. That's where you're going to be able to make your decisions. So this is what we're going to be doing. We've got a free option training session on October 2nd, next Saturday, to say, what do you do with these type of patterns? Look at the breakout and upstart. We were recommending it right here because you could see where the fry pan bottom was breaking out. You could see where it was a big breakout. And how long do you stay long on this one? We're still long, but we're getting a little bit ready to take profits because look how far away you've started to move from the T-line. But this is what we're going to be going through on our free option training session Saturday, which usually only lasts a couple hours. We might put spreads on up here because way up here in the overbought area, but a more effective trading strategy with less risk would be putting on some option spreads. What is the time frame of candlestick bar? You can put whatever you want to. These are daily charts, but this is also could be a 10-minute chart. If I was trading soybeans and today they gapped it up and traded it positive, you stay long. So anyways, all this is built into, and I'll let Jeff tell you about it, built into the Candlestick software that we've put on MetaStock. And the free option trading strategy, again, October 2nd, I don't have the link for it right now. Jeff, did Abe email you the link?
Yeah, I've got one. Let's see. If you're done sharing the screen, I'll share it on the screen right now.
Okay.
I did also put it in the chat for GoTo, and I asked Gregory to put it, or Mr. Greg, to put it up as well. But here's the link you can use. It is stephenbigelow.com/options-101.
All right.
And so this would be for your October 2nd, 2021. It's at 10 a.m. Eastern, which is a great starting time.
That's right. Where is recommended profit target? SL, there is, unless you can see something like a going from the 50 to the 200, that becomes a potential target. Now, I say potential because with graphics to candlesticks, we can see what the nature of the investor sentiment is as soon as they hit the 200, whether they're going to go through or whether you're starting to see sell signals.
We had a question that came in through YouTube a little bit a minute ago, and I thought I'd let you. I promised I'd let you talk about it for just a second. But Ajit wanted to know how you used the 3 EMA.
Oh, it's just as an added. The further away you move from the T line, the more sensitive or the more indicative the 3 T line becomes, and it also can be used if you see a reversal and a candlestick buy signal closing up above the T line and the 3 T line comes up through that level. It just adds as a little additional confirmation that investor sentiment has changed.
You're welcome, SL. Thank you. Thank you for the question. It was a good one. Fred wants to know, would candlesticks work for a triple reverse stock like UVXY, which moves crazy fast?
Yeah, as far as is that a triple leveraged? Is that? Yeah,
it must be. Yeah.
Yeah, it works on all charts. So what it's going to do is if you've got something that's choppy, the chart's going to tell you it's choppy. So you make your assessment right away. You say, well, this is choppy right now. I probably don't want to be trading this. I want to move my money to where I can much more identify a good trending stock.
All right. That I do want to show the scanning real quick. And actually, something came up that was awesome yesterday. One of my favorite patterns of yours, Steve. So I'm going to spend a few minutes just talking about the scanning, if you don't mind.
Go right ahead.
George wants to know if the options session that you're doing is going to be recorded and set to registrants.
Yes.
All right.
Yes.
Cool.
We record everything. Yep.
Steve, great session. Thank you for coming. I appreciate it.
Thank you, Jeff. Thank you, everybody.
All right. Let me go ahead and I'll just go ahead and dismiss Steve. Again, we do really appreciate Steve. He does such a great job. And you can go to the free options October 2nd, stephenbigelow.com/options-101. Now, one of the things that I want to talk about in 3 minutes is the add-on that we worked on with Steve for a couple of years. That's been one of our most popular add-ons that we've done, that is built to kind of help identify these patterns on a chart for you and kind of help you explain what they mean. And just to kind of give you a list of the patterns that are found, here's a big old list of the multiple day patterns that we identify. And here's a list of the single bar patterns that we identify. And by identify, I mean, if I come in here to MetaStock, I actually did a little bit of a scan of the S&P 500 for the doji patterns this morning. And you'll notice right here that a doji best friend, you had that doji followed by a gap up, followed by a remarkable move up in Costco last year. Costco's been a great stock this year. I didn't buy it yesterday. I wish I would have done the scan yesterday, but we went to a movie instead. But Costco has been such a great stock to trade this year. And what I want to do, this came up on an exploration that we ran, and I'll show you how to run that real quick. What I want to kind of point out real quickly is this template that we've designed with Steve is going to include all of the indicators that he uses, but it's also going to help you identify these things on a chart. So for example, right here, you've got the slow curve, a bullish engulfing, a bullish engulfing, a bullish engulfing. Yeah, all of these patterns are actually automatically identified for you, including this doji best friend pattern, which is one of the ones that is one of my favorites that Steve does. So we also do have in here, as part of the candlesticks for every one of these patterns, we actually explain what they mean to you in, let's say, an English definition. So like, for example, if I come in here and I open up this English the commentary, the expert commentary, I get a little bit of a black bar that appears right here on the chart. And it's actually going to tell me that the doji best friend is a doji that's in an oversold condition, followed by a gap up, which is exactly what we're seeing there. Okay, this is a bullish signal, and again, it's kind of like what Steve talks about. The doji is the indecisiveness. We don't want to trade if there's indecisive, but that gap up means that decisions that are made, the bulls are in charge. And certainly if I would have ran this scan yesterday, the bulls were in charge in Costco all day long yesterday. But you'll get a bit of a definition right here, and I'll just kind of make it a little bit bigger for you of what that is. And below that, with a lot of the one sec. With a lot of the patterns, you're going to get enhancements, which is just ways for it to kind of tell you what's working better. Now, one of the things I absolutely love about the MetaStock engine is I can go in and I can architect a scan, and I can say, well, okay, show me any of the stocks that actually have this pattern. So the scan that I ran to kind of pull up Costco today was this doji dynamite, which will look for doji at the top, doji best friend, left, right bullish, left, right bearish, and all of these other patterns. Okay, they haven't broken up into different categories. So if you're interested in like the J hooks, that's a different scan that you can run. But I just ran it against the S&P 500, and that kind of gave me a list of all of the stocks that have those patterns. And that's kind of how I found Costco. Again, I wish I would have run this today or yesterday instead of go to a movie, but it was a good movie. But what a great signal. Here you had that doji, that indecisive bar, followed by the gap up, and it just went up all day long Friday. So this will finish in just a few minutes, but basically it's just going to give you the results down here of any of the stocks that meet the criteria. Right now, we're rejecting about 99% of the stocks. So instead of looking at all at 500 stocks, the S&P 500, and you can use any instrument class that you want. If you wanted to look at ETFs only, you could, or if you wanted to look at optionable stocks, you could. Heck, if you wanted to look at stocks that are in India, I know that we have lots of people that come and watch us from India that trade Indian stocks. We have a lot of customers in India as well. You can use it on just about any asset class that you want. And here what we have is, you'll see right here, you've got the doji best friend. And this was the only one that came up as a best friend pattern. That's why there's a 1 in this column. But yesterday, if we would have ran that scan yesterday, you would have had that doji, you would have had that gap up, and you would be able to identify that fairly early in the trading activity, or fairly early in the day. Okay. In addition to that, you've got AutoZone, which was a left-right bullish. You can see that because there's a 1 here. Tesla was a left-right bullish. All these things are going to be identified for you, and then you can kind of look at them and decide which ones you actually want to trade. But the advantage here is instead of looking at 500 different stocks, I'm just looking at the ones that match. So we are kind of running a little bit on time. So and we do definitely want to move on to the kind of keep the sessions moving today. But all in all, I'm very proud of this product. It's won multiple Reader's Choice Awards by itself. We worked on it for a number of years with our programmers here. It includes the 6 different scans that I showed you, the expert advisor that identifies all the patterns, the commentary, the layouts, and all in all, there's about 36 different patterns that have been kind of put in there for you. And I just think it's so helpful. Like if you're brand new and you're just learning about candlestick patterns, it's going to explain them to you. But then if you like them, like for me, I'll go in and I run a fairly busy day at work, usually. And sometimes it's actually hectic, but usually I can go in and kind of take a look at my stocks and run a quick scan and know within a few minutes whether or not I want to buy anything that day. And so it's very, very effective way for us to kind of filter out all of the noise and just focus on what works. So the candle profit systems we do offer at a one-time cost, so you don't have to pay for this over and over again. It's normally $499. Here at the summit, we're going to offer it as with a 30-day money-back guarantee. It's going to be $399. You can actually give us a call. We can kind of send you samples, screenshots. You can ask questions. You can also order it, 800-882-3040. You can also chat online with us at metastock.com/saleschat. So it is also going to be, we're going to have some of the best add-ons that are available for MetaStock available today on a discount. That includes Steve Bigalow. Coming right up, it's going to be John Osborn. He's going to talk about his micro-quant trender. We're going to have Tompkins on today, Jeff Tompkins, and he's going to talk about trade trend. Anne-Marie is going to also do a session. We have a great lineup today, and some of the best add-ons that we've designed for MetaStock, and we're going to offer them all as a package. Normally, if you bought all of them individually, it'd be about $3,836, but if you can buy them all today, for $1,974, so $1,974. All of them come with a money-back guarantee. If you're new to MetaStock and you need to get a subscription, we have some specials on that as well. But we're also, as part of that, we're going to give you 3 months of learnmetastock.com. Our home training video courses on unleashing the power of MetaStock and how to run all the scans, 2 years of Stocks and Commodities magazine. So to take advantage of that, go to metastock.com/summit deal. Give us a call at 800-882-3040. You can also visit us at metastock.com/saleschat. So very quickly, I do want to just say thank you for Stocks and Commodities for sponsoring the event today. They do a great job. They've been supporting the event for 10 years. Yeah. Ever since we started it. It's funny to think that it's not 10 years yet. It's 9 years, but they've been sponsoring us since we began. So if you go to metastock.com/trader summit, and you register for today's event, we will send you a free copy of the magazine as long as you opt to get it as one of the special offers. There's lots of special offers you can get there. So if you're watching this on YouTube and you haven't registered yet, swing on over here. Register. It'll take you a few minutes. It's free, and you can kind of sign up for a free magazine and a bunch of other bonuses if you want them. So I do want to also say thank you to the CMT Association. They've been started sponsoring our event as of this time. CMT is a great organization, very well respected, very well established. I'm actually really proud that they're actually sponsoring us. So cmtassociation.org. You can also give them a call at 646-652-3300. So thank you, CMT, for the sponsorship today. And let's move on to our next guest. We are running just a minute late, but actually by a minute I mean 6. But let's go ahead and get into John. Sean, how are you doing today?
I'm doing great. Can you hear me okay?
Yes, I can hear you, John. You sound like an angel. John, I'm going to do a quick intro for you. John has been working with us. How long has it been now, John?
Oh, 3 or 4 years, maybe, something like that.
That sounds right. One of the things that I find really, really surprising about John is how good of a demo he does, how good of programming he does, and just kind of the different variety of skill sets that he has. Because he not only did he actually program all of the stuff that he's going to show you today, he does a really good job of showing it off as well. So, John, welcome to the room. I'm going to go ahead and get out of the way, I think. Welcome.
All right. Well, let me figure out if I can.
I need to turn over the presentation to you. That'll help.
Yes.
Okay, let's do that first. Okay, let's see. Make presenter. Okay, so it should pop up just a note that says, "Hey, do you want to share your screen?" I'll make sure before I run out. Also, yes, we do include with the MetaStock, with that package, we'll show you exactly how to use that scan too. Thank you for that question. I know there are a lot of people that actually there are a lot of questions that I missed just because we're a little bit behind on time. I'm going to go back and answer those for you as soon as we get John started as well.
Okay.
We can see your screen, John.
All right, great. Well, thank you, Jeff.
It's all yours.
All right. Thanks for being here and hosting us and having all of us come in on a Saturday. And thanks to everybody for being here on a Saturday. And I appreciate that. And I want to make it worth your while today. I also want to thank Steve Bigalow. I mean, I've been following Steve for many, many, many years, and I use candlesticks all the time in just about every single one of my trades. So that's really good stuff and really helpful stuff. So you guys are lucky to be able to hear from all these experts today and have ideas about how they're making money in the market. And so let's go ahead and let me show you how we can make it easier to make money in the market. And I'm John Osborn, and I'm here to tell you that we're going to change the way you look at charts today forever. And that's because you're going to be able to see some new technology that we're using that's able to route traders through a chart to find the best trade. So we want to go ahead and get started here. Since we're going to be talking about trading, I do want to mention, of course, that trading is risky. We all know that. It's that risk that we have in trading that helps us make some money. But what's important here is don't trade with money you can't afford to lose. All right. We've done our best to ensure the accuracy of the information I'm sharing with you. And the purpose of this webinar is to provide you with information you can use so you can make your own independent trading decisions. And of course, past performance isn't indicative of future results, but we count on the past performance to help us determine where we're going in the future. Bottom line is the markets are unpredictable, so you want to be prepared. And of course, we have to show you CFTC Rule 4.41, and the government wants you to know trading has both rewards and risks, which you know. Again, don't trade with money that you can't lose, like food money or rent money. Partly because, too, is you're not going to be a good trader if you're using that kind of money. You want to use money that you can afford to let walk away, and you can adjust your trade sizes to make that happen. I almost guarantee you that you're going to have better trade results if you can do that. And again, I'm not soliciting you to buy stocks, options, futures, or any other securities. And I always like people to trade with paper and become profitable in paper trading, even with what I'm going to show you today, because I want you to have real money left over to trade with when you finally get the system and you understand how to use it, because it's going to make you some money. At least I believe that's the case, and I'm going to show you some examples of why that's the case. So today we're going to talk about how to completely transform the way you're trading. And I'm going to show you some examples of why that's the case. So today we're going to talk about how to completely transform the way you're trading. So today we're going to talk about how to completely transform the way you're trading. And I'm going to show you some examples of why that's the case. So today we're going to talk about how to completely transform and start to seriously grow your account by using a very powerful technique that I like to think of as a stock market GPS. Now, imagine being able to approach the markets every single day armed with the sophisticated yet easy to use software. So simple enough that you can use it, and that traders have taken to double, triple, and even quintuple their accounts. And do you think you'd possibly improve your trading if you had a tool like this? And just imagine being able to identify trades with pinpoint accuracy, just like a hedge fund does. Do you think you'd be able to drastically grow your trading account if you had that ability? Because if you've never thought it was possible until now, I have some great news. It's totally possible for you to do this with what I'm going to show you today. And I'm not just talking about incremental change here. This is technology that's been in use by our best traders and even in powerful automated systems that I've written and that we've sold access to. And today we're going to show you and help you learn what a stock market GPS is and how it can improve your trading. And like I said, this isn't just an incremental change. It's a powerful, fundamental way to identify trading routes that lead you to profits in the stock market. And transformative trading like this is a 700% gain in Tesla, which amounts to, Tesla was around 1,000. So that was a $789 per share gain using in this technology, getting the signal and following it through to its peak. Here's a 76% gain in Amazon using the technique. That's a gain, Amazon's a little more pricey, but that's $1,535 per share. So it's one share. And this is what I mean by transformative trading. And if you think finding trades like this could make a noticeable difference in your trading, you're in the right place. Now, Jeff introduced me a little bit and said, and I wanted to give you a little background about myself and also why I do this. And why I'm so passionate about helping other people do this. So I've always been interested in the markets. And even when I was a kid, I watched my dad trade by looking up stocks in the newspapers, and he showed me how that worked. And you didn't have anything that we have today. We had to just wait for the paper to come, and we had an evening paper, luckily. But I think even that was yesterday's news. But that was how people traded back then. But my dad would read that and stay informed in developments through reading magazines and things like that. But he was one of those traders who bragged more about what he did wrong in the markets than what he got right. The best way to make money in the market is to do what I don't do the opposite of what I do. But still, he did okay in the markets. And he was also an engineer. And I know he always thought he could have done better in the markets. So he did well enough to get me inspired to learn more about the stock market. And he made sure I understood that making money in the markets was how to stay ahead of inflation and get where you want to be. So I dabbled with trading here and there as a kid. I tried to do it a little bit here and there. And even as a young adult, and like my dad, I tried to teach myself, and I did okay, but I wanted to do better. And throughout, I always invested, which is different than trading, of course. But I wanted to trade, and I started actively trading more in the 90s when the whole .com thing started. That's what really got me interested. And when back then, even monkeys could pick a winning stock portfolio, and they actually had monkeys picking stock portfolios, if you remember. But when March of 2000 came, many traders, including myself, learned the hard way that markets don't always go up. And I realized that if I wanted to continue trading, I needed to learn more about markets and how to make money, whether they're going up, down, or sideways. And if I could learn how to trade myself, then I could teach my dad to do the same so he could be a more confident and more successful trader. So I took all the courses. I spent all kinds of money for many, many, many years. And just like I know many of you have, and perhaps you can relate to my experience with all that time and money and with all that training. And I know I felt like I was going in circles, trying one thing after another, but never quite finding the success that I wanted for me and for my dad. And it wasn't until I got involved finally with microquant and Basecamp trading that I really learned how to read charts correctly and was able to focus on trend and price action. And I finally learned how to trade. Unfortunately, by then my dad passed away, but I was able to teach. I was never able to teach him what I learned. But since I wasn't able to teach my dad, I want to teach others about trading in hopes that they can reach their goals, and they can teach others to do the same, could teach even more people. So it could make a big difference for many people. And maybe some of them would even be able to teach their own dad or maybe their son or their daughter. And I know that helping so many others to achieve their own goals in trading is something that would make my dad proud. And that's why I keep trading trading today. So today, I'm going to let you in on a technology that can help any trader be a better trader. And I'm going to explain why this powerful tool can make a huge difference in your trading. And yes, I keep using the word transform. It can completely transform the way you trade and the way you pull money out of the markets. So I hope you'll share this with your family and your friends and help them achieve their own goals. Okay, so let's get started. I see somebody posted audio is on mute. Is that true? Can you guys hear me okay? Might be just one person with an audio issue, but I'm assuming you guys can hear me okay.
Yes, control room here, John.
Okay.
Everything's coming through great. If
All right.
for those of you that do have audio issues, well, you probably can't hear this anyway, but we just recommend either refresh or join us at the YouTube channel. One of those two. Go ahead, John.
Thank you, Jeff. All right, so let's look at an example here, because an example is a great way to get a point across real quickly. So I'm going to share this example with you now and see if you can relate this to your own trading. So here's an example of where traders can misinterpret what the market's telling them. It's a common pitfall for traders who don't have the information they need to make the right entries. So here we see a really nice run higher. And of course, we see this move right here. And we say, all right, well, let's go ahead and buy on this pullback right here. So we jump in, maybe a little bit late, but we're ready to run here because it looks really good, right? We had a breakout and we're moving up. Only what happens? It pulls back. As soon as we jump in, it pulls back. It's like they were waiting for us. And it pulls back more than we thought it could. And we get stopped out. Wherever that stop is, down below here or here. I mean, this is what happens sometimes. Sometimes we call this getting into a trade on the wrong side of the mountain. Like if this is the mountain and we're jumping in as it's dropping. But how did we know? How could we have known that it was going to drop right there? And this thing ended up moving sideways after falling down here. And to make matters worse, there was another possible entry over here, which we were saying, oh, maybe we're going to break out here. And because we got burned on this one, then we're hesitant to take this trade here. So we skip this one. Then what happens? Of course, that one, when we enter right here, that one runs higher without us. Have any of you ever had that experience where the trades you get in seem to move against you, and then the ones you give up and don't take because you're not confident end up running without you? Has anyone ever felt that? Because I know I have in my trading. Sometimes I felt like the market was focused on me, and the market makers were like, they had my name and they were figuring out what trades I were taking just so they could give me a hard time. I'm still seeing people having sound issues here. I'm going to assume that it's individuals here, and I'm going to keep going here. But how many people here have had this happen to them where the market seemed like they just reversed on you, and it's so hard to have confidence when this happens? Manuel says every day, and Lee says, yeah, that's what happens, unfortunately. Well, that type of flawed chart reading, and that's what that is, by the way, it's unable to really understand what the charts are telling us, and that can wreak havoc on your ability to profit in the markets. You know, the setup looks good because the information that you have says to get in, you jump in expecting it to run, only to have it go against you, and that's so frustrating. And when you brush yourself off and vow to, follow your rules and be right the next time, that next setup comes along and doubt creeps in, right? That word doubt, and you skip the next trade and your confidence gets even more beaten up. And it's just so frustrating. I know there were several times when I was ready to just give up because it just felt like the market was after me or out to get me. And, maybe you guys feel that same way at times, but it is so frustrating. And finally someone said, you know what, the market doesn't even know you're there. It's not them. They're not after you. But if this is something you've experienced, you're not alone, because I felt it. I'm sure other traders have felt this. It's typical for new traders once they get over that initial, oh, everything's great. And then traders aren't able to identify the real route through the market, because that doubt is just one of the negative energy sapping things. There's so many other negative emotions that can jump in, and they all wreak havoc on you. And there's no place for any of these concepts or emotions if you want to be a successful trader. Every time you think about the negative parts, it's going to hold you back. You're going to convince yourself you're not worthy of it, and you got to get that confidence. You got to be able to say this works. You have to have confidence in your system, and you have to have confidence in your ability to execute it. And that is what is missing for a lot of traders. But the most important thing that traders need to get that confidence and to have confidence in a system is all down to one word, and that's clarity. And what traders really need is a clear signal that shows when to get in and when to get out of the markets. It's that clarity that gives you the state of the market so we can know when a market's bullish, bearish, or neutral, and we can make confident decisions about the market's next move. Then we can brush aside all those negative emotions we just saw, brush aside the doubt, knowing that we can trust our technology and our trading system. In our system, we don't want to depend on just one algorithm, by the way. There's not one algorithm that works in every single market in every situation. We know markets are more complex than that. And when we created this technology, we realized that we could combine together multiple trend-finding algorithms into one and then show just one easy-to-follow signal. Then that provides the clarity, get rid of the doubt, and make it easier for people to be successful traders, even when we get emotional in the heat of the moment, because when we're in the heat of the moment, the emotion can kick in. So we need to have it be non-complex. It needs to be something that just says, do this. And that's what we want. And finally, we have something that can help rebuild that confidence that we know we need as successful traders. And it's something that can help anyone who trades be a better trader. Now, we've all heard the axiom, the trend is your friend, but if you're not able to hear, if you can't hear what the chart and what the market's telling you, then you can't act on it. And we built this tool to give traders the clarity they need because we know they're struggling, because we've been there too. And clarity comes from being able to see what's behind the chart's movement, because that market's not out to get you. It's actually telling us what to do. We just have to have a way to hear it so we can get where we want to go. Now, we've built this tool. It's been around for a couple of years, but this is the 3rd generation, and it's our best version of it. And it can interpret and see that hidden info, and it can see different layers that allow us to use it at different times. So the same tool can work in multiple market environments. And it helps traders navigate their way through the charts to find optimal entries. It's just like a GPS guides us to find the best route if you're in an unknown city. And once you start using this tool, you're going to see that it's not always in alignment with what you'd think when you're looking at a chart. In other words, you may not agree with what the tool is telling you sometimes based on what you would typically see, but that's what you're looking for, isn't it? If your system tells you to get in when the market's about to, get in long when the market's about to go short, then your system needs a little tweaking. So there's going to be times when you get this and you put it on your chart, it's going to tell you do this when you think it's going to do that. It's going to take a little while for you to start to believe that that was the right answer. But I hope you're not arguing with your GPS, right? Because just like you think when you found the fastest way from point A to B in a place you live, going the same path that you've always taken, you turn on a GPS and all of a sudden it comes up with this new way that you never knew that was hidden and takes you from point A to B in half the time. That's what it feels like when you're using a hedge fund quality tool like this. It's like lighting up the best route right on your chart to get you where you want to be. So what is this? It's called MQ Trender Pro 2.0. That is the market GPS I'm talking about. And we talk about it so much at Basecamp Trading that we have a few different names for it. I often refer to it as Trender Pro and most often as MTP2 for MQ Trender Pro 2.0. And let me show you how it works. Now, MTP2 is going to help you by mapping out the actions right on top of your chart. It's kind of like having Google Maps right on your charts, on virtually any type of chart or symbol. And it does this with really simple, logical color coding that'll make sense to you immediately. You'll instantly know what to do and when to do it. And remember that part about eliminating doubt in your trading that I mentioned? Well, with MTP2, your confidence is going to increase, which will help you get those bigger gains because you're not only going to get in at the right time, more importantly, you're going to stay in trades longer, maximizing your profits. And that's going to boost your confidence even higher because you're going to have tools you can trust and trust in your ability, in your own ability to execute really good, high winning trades. And all of this adds up to one other important thing, and that's that it gets rid of fear. Because just like Google Maps gives you the confidence to get where you're going, even when you're first driving into a place you've never been, Trender Pro can give you guidance that gives you the confidence that takes you further in your trading than you've been before. So how does it do all this? What does it look like? Well, MQ Trender Pro can help us see the market in a new way, and a new way that simplifies understanding of that market. So just like a GPS system tells us which way to turn to reach our direction, Trender Pro lays out a route for us right on the chart. It tells you which way the market's heading. Very simple. It's green for bullish, blue for sideways, and red for bearish. And the core point behind MTP2 is that it helps simplify your trading so you can easily make the decision to get in and out of a trade, even when it's best to stay on the sidelines. Now, as I said, we've been using Trender Pro for many years. I think it's been maybe even 4 or 5 years now. It goes fast, but it's gone through several iterations to increase accuracy and provide some additional features. And the version that has been created for MetaStock has the latest innovations that we built into the tool. So MTP2 on MetaStock includes a couple of extra special color codings. One is it can detect when a market is starting to get extended, meaning it's gone too far for too long. And it indicates an extended market with the color gray. That gives us a heads up we're running for quite a while in this direction and that we may not continue. But we don't just jump out of a trade at that point, because even extended stocks can continue running further sometimes. When we see the gray, we are in an extended market. We just tighten up our stops and preserve our gains, perhaps take partial profits, but we're going to stay in that trade and let it continue to run. That's important. And then we also have what we call the trailed stop bars, which indicate pullbacks against the trend. And this indicates the trend is pausing and perhaps reversing, but not always. Sometimes just a pause. And we use these pauses as the opportunity to trail up our stops, or maybe even get out of a position or take partial profits. And I prefer to use the bar that follows the golden bar to help me understand whether I get out of the trade. And I'll explain that in a little bit. Now, we call these trailed stop bars golden bars, or I call them golden bars, because we use yellow for the color, but also because that's where we take our profits. Now, all of these colors automatically appear right on your chart. It's almost like I say, having Google Maps overlaid right on top of your charts to show you exactly how to get where you're going. So let me show you how to make this transformational difference in the way that you change the markets. Let me check a couple questions here. Okay, I just see questions about sound, but I think we're okay here. Now, let's go back and look at that same example we did earlier from just a few moments ago. And when I got into the trade at the wrong time, remember that one that we said we got in at the wrong side of the mountain when the market was ready to fall, but we couldn't see it. Now, you might remember what we did is we got in right about this point here. And our point was that we were going to take it higher at that point. And then it reversed on us. We gave our expletive and we ended up going sideways after that. And this is what we're trying to avoid here. Now let's turn on MTP2. Now we have MTP2 overlaid on top of our chart. And if you look closely here, you can now see that we were actually extended in that gray area here at the point that we were looking to get in. If we're extended, we're not going to jump into a trade. So MTP2 was already saying, hey, we've run too far since we made the move from down here. So even though we're trending higher, Trender Pro saying that's too high. We actually got a golden bar, and it turns out that we were more interested from a Trender Pro perspective of taking a short here and making money on the way down rather than jumping in up here. So Trender Pro was able to tell us to avoid taking this trade and then gave us the indication to go even short and make some money on the downside. Okay. And remember over here, where there was the point where we were supposed to try to get back into the trade. Well, look what happens here. Trender Pro changes from neutral, this is blue color here, to green, which is a signal to go long. And there was the result. So Trender Pro kept us out of the trade over here, so we didn't lose money as it was pulling back. And it reminded us and encouraged us to enter a new trade right here to take this profit. Okay. Plus, we could have made some money on the entries down here. And I probably wouldn't go counter trend like this, depending on some other signals. If I'm still bullish long term, I'd probably be looking more for the bullish ones. But you can take a quick little scalp trade, and that would have worked out. Now, how does it do this? How does it create this amazing overlay? It's because we put a lot of our microquant technology. And by the way, microquant is the parent company of Basecamp Trading. And that's why sometimes I'll mention microquant or Basecamp Trading. It's kind of the same thing. So that's why the indicator's called MQ Trender Pro. The MQ stands for microquant, but Basecamp Trading is kind of our website. And both of them we refer to as our company. So we took a lot of microquant technology and we put it into this version of Trender Pro. So it brings together all that best proprietary and also non-proprietary indicators into consideration when it determines trend and colors for the bars. It uses different algorithms in different situations. And what it's actually doing, it's calculating all the algorithms at once and then scoring them. Okay, so for example, it might pull from momentum or price action in one market condition. Maybe in a different market condition, it might use linear regression lines or adaptive moving averages in another chart, or comparing bar extremes. We even use candlestick concepts and opens and closes. And any of all these things are going to potentially affect what coloring goes into it. So it's not just looking at higher highs and higher lows, for example, or breaking through moving averages. It's doing a lot of calculations, and all behind the scene. In fact, there's 49 different states that the indicator can be in, which drive our accurate results. So all those algorithms are running, reading the charts, and it's kind of like having a team of trading advisors working together to guide you. And it's like you're the CEO and you've built a team of the best traders around you to keep you on course. Now, by looking at these different factors, we can have accurate trend identification across just about any type of market situation. Using adaptive filters, we can measure the current market in all those different ways, and then, like I said, score it, and then come up with a color coding based on the score. So the idea is, if we have so many filters active, then we be bullish or strongly bullish. If we're a lower score, then we can be neutral or bearish. It's a little more complicated than that, but that's the idea of it. And then all of that is happening in the background, but what it makes is an easy to use tool that just helps you intuitively understand what to do when. Now, I'd like to share a little bit more about using the tool and how it can transform your trading. And I said before that one of the most important things about this tool is that it lets you stay in the trade for the longer gains. Because the last thing you want to do is jump into a trade and then it goes up by, say, $100 or maybe $200, and you say, oh, I'm going to preserve those profits, and you jump out, and then you watch it go up by $1,000, and you left all that on the table. Okay, that is the kind of thing that Trender Pro can also help with. Okay, and we address that in two ways. So there's two ways to stay in the trade longer. First, we can use color alone to help us stay in the winning trades longer. So one of the things we can do is we can enter long on green. So for example, right here, we change from blue to green. And as long as it stays green, we stay in. Okay. And when we get a red bar, we jump out. Now, some people use the option when we get a blue bar, we jump out. So some people would take their profits here. What I like to do is if we either get a red or a short signal, like this one right here, we'll talk about signals in a second, that's when I would jump out. So this would be the exit point here, and we would have been able to stay in this trade this entire time. Okay, so pretty powerful in giving you the confidence to not be afraid when you get a pullback like here, or even here. All right, but we ended up jumping out right about this point here. Okay, now the other way to do it is use those golden bars that I just mentioned a little bit ago. These are the golden bars, or also called trail stop bars. Okay, because these help take the guesswork out of the equation. Now, what we do, and this is how I use it, so you might want to make a note of this, is once I get a golden bar, right? The default way is to just trail your stop underneath it. So you trail your stop to here, trail your stop to here, then trail your stop to here. Here's what I do. And I got this from Gary, and I'm gonna tell you about Gary in a little bit too, but I look at the bar that follows it and see how the open is here on this bar and the close is here. If this bar that follows the golden bar closes higher, I stay in and then let it ride. Here we closed higher, I stay in, let it ride. Okay, here we close lower, I would get out. Okay, we closed lower just barely here, and I would take profits here. Okay, using that system. You can use either one, the trailed stop approach, or just stay on that first methodology I showed you when the color change happens. But whatever system you work, it's a clear signal and really easy to follow. Okay. But if you follow what I'm saying about how this is telling you stay in the trade, you can understand how I like this so much and why I like golden bars so much. Because each of these times, let's say if you traded, say 100 shares, or maybe some of you might trade 1,000 shares, maybe you'll take 100 shares off at each of the golden bars and just let the rest keep running. So you can put some profits in your pocket, put some profits in your pocket, put some profits in your pocket, and just keep going. So pretty exciting. Now you probably noticed that MTP2 is providing signals on our charts. And these are expert advisor signals identifying key exit points to enter or key points to enter and exit to trail our stops, etc. You can see these right here. So here's a long entry signal right here. Here's the golden bar trails. So we have a long trail, another long entry here before we make this jump. And then here's where we got our short entry, and it would be an exit point right there. Then we got our short exit immediately because it looks like this market was ready to turn around and go the other way anyways. But it's this kind of color coding. So you have, we were blue here, then green. We got extended right here. We pulled back. We got a higher result after the golden bar we stay in. Same thing on the one here. Maybe trail our stop up to here. And then we keep staying in here. And you can see how it lets us stay in trades with confidence for a longer period. Jim asked, this applies to any asset class, any time frame. That is correct. That is correct. Billy says, just show some charts with this signal on. Okay, well, we have that ability in a little bit here. I'm going to keep showing you charts with some examples here that I've annotated. I want to talk about some additional, even more features that this has. You probably noticed that there's a trend ribbon down here at the bottom of the display. The trend ribbon's using another microquant technology called MQ Trend, and that calculates trend differently than Trender Pro does. MQ Trend is a popular indicator at Basecamp Trading that we sell on its own. I think it's a $300 indicator, $297 on its own. In MetaStock, we can use the wisdom of the longer-term market view that MQ Trend provides because we built that into the ribbon. And now you can use that to confirm your direction or help you stay in trades longer. Personally, I find I'm able to make most of my decisions using the colors alone and the signals that we get. But especially when I'm in a longer term trade, I love having the longer term view that MQ Trend provides. And you can see we've got the lines to tell us we're in a bearish mode here and a bullish mode there. And what I do is I like to look for convergence where I get a long entry and MQ Trend occurring at the same time. So it's kind of nice when you have multiple indicators all agreeing at the same time when you know they're coming up with results in different ways in their own independent way. I mean, that's what we call convergence. Here's another example of using MTP2 guidance and staying in with the golden bars. You can see MTP2 expert advisor signals guiding us along the way. Here we have an entry as an MTP2 entry right here, changing from blue to green. Okay. In our first golden bar, we checked the bar that follows, we're good. We checked this bar that follows, we're good. We checked this bar that follows, we're good. We'd still be in this trade. I mean, how would you like to take a trade? This is Google here, and then have the confidence to just stay in it and continue being in it and know that you're good and see these kind of results and be able to weather these pullbacks, because even though we pulled back here, yeah, we got to blue here, but we also got a golden bar. We've trailed our stop to lock in gains to here, and we just let it run, and we don't miss out on this extra part here. Okay. Plus, even though we're not showing you the trend ribbon, you can see the trend ribbon change green right here, from green to red and then back to green again right here. So we've got that confirmation as well, giving us the confidence to stay in. Now, let me show you a comparison of a chart with, and this will be good for you, Billy. It's a chart without MTP2 and then with MTP2. So here's Facebook on the daily chart earlier this year. I think this was back in the beginning of the year right here. And we have February. So this is around March of 2021. Okay, so take a look at this chart. Okay, now without MTP2 lighting up the chart, it can be a little difficult to find out where an entry point would be. It looks like we're bearish here, moving lower. We have a higher high, maybe an equal high down here. We have a lower high here. It's kind of confusing whether we're changing. I want to go bullish here. I feel like Facebook's going to be going bullish. But normally when we see this with traditional information without having the insight of Trender Pro, I might need to wait until I get above a significant swing high right here before I'm able to jump in. Now let's turn on MTP2 and see if we can identify anything more easily. So here's the same chart with MTP2 on it. And suddenly over here, you'll notice that we got a green bar and a long entry signal right here. Well, if we jump in right here, we're getting in the 265, 270 area rather than to wait till we get up to 285, 290. Here's the result. Right where we changed to green here, we took off. And because we didn't have to wait to get up to this line right here, we actually got in $20 earlier and a full week earlier into the trade based on your MTP2 entry. If you had 100 shares, that would be a $2,000 improvement in your trade. Plus, you'd have the confidence to be in this trade. Over here, you had this big pullback right here, and you might be wondering, oh gosh, I just went below this previous pivot high. What am I going to do? Are we going to pull back? And you might have been scared out of the trade or even hit your stop. Over here, our stop would initially have been down here. This ended up just giving us a trailed stop to put on a new trailed stop entry and lock in some gains. And then we did it again over here. And this way, we'd still be in this trade running higher. Hey, pretty cool to have. It's like that group of CEO people or Google Maps right on top of your charts telling you how you can trade. This is why we say it can transform your trading. It's not just an incremental difference. This is a major thing. If you can take a trade and of 100 shares and make an extra $2,000 on it just by getting in a little bit earlier, a week early, because you have that confidence, it can make a huge difference in your trading, and those differences will add up. And you can even make better decisions with MTP2 because we have some other ways of enhancing it. One is by simply using multiple time frames at the same time. And we call that a pretty fancy name called multi-time frame convergence, but it's just simply using the weekly chart or any higher time frame chart along with the chart that you have where you're trading on, right? So we can look at our weekly chart and look at MTP2 on there and see that we're clearly bullish. We're even getting a long entry on the weekly chart. So if we align that up with a breakout that we're anticipating on the daily, we have the confidence that this thing's going to run, and you can see the results. And even once it ran, we saw here that we got extended. So at this point, and this is just a little while ago here, this tells us, hey, lock in your gains. You know, don't jump out. Don't be afraid because it might keep going. But if it does turn, you're going to have your stop maybe at the previous bar's low. Maybe you'll use a 3-bar stop, but you could have your stop right below here. And as soon as we pull back, you could be out based on, you know, how you feel about the markets. Then you're maximizing the gain on that run. Avid says, what about the earlier points as indicated? We can use MQ momentum to help us understand when that optimal point is. So MQ momentum can get us in. But if you look at that earlier stop, you could, if you had your stop in place, you could have gotten in even a little bit earlier. Okay, so yeah, if we get signals early, you can jump in then. And even if it drops you out, you can see the gain that you would have gotten on the next run could have made up for that small loss. If there was a small loss there, you could have easily paid for that many, many, many times over. You can also see some of the other features that are included in MTP2. You're getting MQ momentum. That's a momentum indicator that we use on all of our charts at Basecamp Trading. We sell that as a separate indicator for $297 on our website. You could go buy it right now for those platforms, but it's going to be built into this indicator. It's part of the MTP2 package. And remember, you're getting that trend ribbon that's going to give you the longer term trend view as well. And those 3 indicators working in tandem can identify not just time-based trend, but also strengthen our confidence even further that we've got all that confluence. When those 3 are aligned, we get agreement, we go. If they're not in alignment, that's kind of a divergence, and maybe we could step out. You know, so if we don't see some agreement. Here we have MQ trend changing to green. At the same time, we have an MQ momentum reset. At the same time, we're getting a signal changeover back to green and a long entry. And this is the kind of convergence that we look for. It says go and look at the result. Now, sometimes it goes against us. Here is a short trade right here, where we have a short entry as well as MQ trend, and we're crossing over the 0 point on MQ momentum, all 3 at the same time occurring, giving us a short signal. We change to red and down we go. But if you notice here is as we're dropping, MQ momentum is showing that there's a weakening in the bearishness. So as we show price is dropping, MQ momentum is rising, that's what we call a bullish divergence, meaning there's less likely it's going to keep moving down. And then when we get a signal here for the short exit to get out, and it's no surprise to us by the time we get the golden bar that we're ready to start reversing and heading higher. We shortly get that long entry that follows it, MQ trend aligns with it, and up we go. A little scalp trade right there. This is the kind of thing that gives you that clarity in anticipating market movement, because it can see the markets and help you give you that guidance, like that's like a bunch of coaches around you. Okay, so here's the point where we would reverse and then even get into another entry. So you get even more in Trend Pro. We're going to look at some live examples here if you guys want. So you can type in a symbol or two. I'll be happy to take a look at them. We can look at live charts. But you get even more, just like the Ginsu knife. You're going to get, this is one of the things that Jeff loves, and I love him too, is the expert commentary. So you're going to get more detailed information about how to interpret the golden bars and all the other highlights and the different bars that you'll see. If you get signals, you'll see those highlighted in the expert commentary, and you also get information about MQ trend. And of course, we give you the explorations. You get 8 different explorations that are searching for stocks that just got a brand new long entry, or what I call a surge entry, when we skip a color difference and jump right into an extreme situation. That's one of the most powerful ones. And I built a couple of other ones here. So not only just on the first bar search, but also that we got a surge and then we broke the previous 5 bars high. That's what this one is right here. This one's even more powerful. This would be an extreme move identifier. This would allow us to search for a bullish surge, which is a powerful bullish indication on MTB2, followed by a breakout of the past 2 weeks. And same thing on the short side. So you got some really powerful tools to find those stocks that are not only changing signals, but actually moving on those changes over the past week or 2. So pretty cool to have that. And then here's a reminder that you also get this user's guide, which gives you all kinds of information about the tools, even how to use things like MQ momentum, because you're going to want to use that on even more charts. So we got some discussions in there. A lot of it's on MQ momentum and how important that is, because MTP2 is pretty easy to follow. I mean, you just look at the colors and you're good to go. And then there's a little bit more information to learn about how to use MQ momentum, so you get that momentum and speed and direction information as well. Even some things in the user's guide about how to be a more consistent trader to help you, because those are important things that are going to help you get your success. So this is at least 46 pages here. I think it's close to 50 pages as a user guide, and there's an FAQ in there as well. Now, Gary is one of our best traders at BCTs, Gary Edwards, and he runs our futures trading room. We have 3 different trading rooms that run, and Gary's had some really good months. He's embarrassed when I show this, but I love showing it anyways. But he regularly generates impressive monthly gains. This is when he just started getting using Trender Pro and really using it here. And he's had months where he's made 150,000 in a month. And of course, the volatility was high there, but he was using the same system, and the market just said, here you go. And a lot of his students will ask him, and you can even ask him, you can go into his room and ask him, what's the one indicator you could use? If you could only use one, what would it be? And he will immediately tell you MQ Trender Pro 2.0 by far. And the reason why is because MTP2, MQ Trender Pro, gives him the insight to stay in the trades longer and get those really big gains. He's the one who came up with that idea, and that's really good about getting out of a golden bar if the following bar closes against your trade, and stay in if it closes with you, because he's the expert in getting every dollar out of a move. I swear, he's so good, really good trader. So he credits the confidence that he's gained with Trender Pro as the reason he's been able to have these huge winning months. So with Trender Pro, you know when you're riding the wave and when to let it continue, and it keeps you from getting out early. And that's where he says his biggest gains have come from. Okay, now I can't guarantee you're going to say that get the same kind of gains that Gary got with 167 increase over 22,000 in 1 month. That's like $140,000, $150,000 in a month. But nobody guaranteed him that either, of course. So now you know more about Trender Pro's abilities and how it can help with your trading. you can hopefully, I've demonstrated it, at least from my slides, that it has the potential to give you that clarity that you need, that's going to give you that greater confidence with that clarity. Because when you have both clarity and confidence, that's when you get the transformational changes. And I told you earlier, I'd show you how to unlock a stock market GPS. You can see how you lay that on top of your chart and it just guides you right through the market, just like you would, bravely move through a city or an area you've never been before because you've got GPS. And I showed you how we can use our deep yet easy to use technology to trade like we're a hedge fund, exposing the hidden information that's behind the chart movement so we can get those massive profits. And now you have that opportunity to completely transform your trading today. And you can get gains like this global star gain, 68% at the next open. Here's Sphere 3D with 2 gains in a short amount of time, 73% and 50%. This was just a few weeks ago. And it's just trading over 2 days, everything moving right on cue. And by the way, this trade right here, look how it immediately went to extended and we were able to ride that up for profits there. Just push it and get the max profits. Here, we also got to extend, start trailing your stop up against those, knowing that it's going to turn. Now, these are the kind of gains that hedge funds are making. They've got these hedge funds, they got everything figured out, right? They've got much better tools than the average retail traders. In fact, they have all the resources to create the cool tools to see what's going on behind the charts and help them make quick decisions for those huge gains. Now, they have those cool tools. Why can't we? Why can't you have those tools? Why should only hedge fund traders have that kind of information? And now that you've seen what this type of technology can do, why would you want to trade without it? Because if you don't have this information, how is it handicapping you? Because you don't understand what the market's going to do, that you can, when you can just see it right on your charts. Okay, so you no longer have to worry about that if you choose today, because you can get this cool technology right now, so you can get the same signals you've seen here. So you won't fall to those fall prey to those bad entries and jumping in on the wrong side of the mountain. You can start making trades that are going to grow your account so you can hit those goals for you and your family and get those dreams back again that you wanted to get. So trades like this that we saw with that Amazon trade, $1,500 in a single trade. So normally this package, which includes Trender Pro plus MQ Momentum and the Trend Ribbon, has a value of $14.95. For today in the Summit Special, we're offering it for just $9.95. You'll have immediate access if you follow the link above, and you'll be able to start using it immediately. Okay, let me just check some questions here. Okay, so we got a couple of markets to take a look at, and we'll do that. We'll come back to these. Let's go look at some live examples here. Okay, we had AMD. This is live Facebook right here. I got the weekly on the left and the daily on the right. You can see here in the last few days, we pulled back, changed to red, both in Trender Pro with a short entry signal, followed by a golden bar here. So our trailed entry would have been up to the bottom of this bar, and then we got our short entry signal. Now, I think this market might turn around here. Trender Pro doesn't think it. Remember I said that Trender Pro may not agree with what you think in the markets? Well, I'm learning, and I've learned that Trender Pro is usually smarter than me, unfortunately, or fortunately, since I can use it anyways. Let's look at AMD. Okay, so here's AMD. And you can see we got extended on this run right here. Here was a long entry. Could have taken advantage of this 85, this move from 85. This was back here in the middle of July, and it just ran right up. And look how we got our gray signal just 2 bars before we hit the top. And had you been trailing with a single, an N bar stop, meaning of 1, where N is 1, you could have been out either right here or even right here if you trailed it up immediately after this bar right here. Okay. Now, if you had not taken your profits here and not trailed your stop on the gray bars, then you could have stayed in here and then stayed in here. So you'd still be in this trade up until here, and you would have gotten out on this short entry right here. Okay. The market did pull back. Was it 5% or 6% in the last little bit here? Okay. Let's see. NASDAQ. I don't usually look at NASDAQ here, but let's take a look. So QQQ.O. Okay, so for the Qs on the daily, you can see we got our long entry as recently as here. We had a long entry down here, and the color changed from red to neutral to green at this point with our long entry. We also had long entry here that we could have stayed in had we not gotten our stop too tight up. I would have put my stop down here and then stayed in, maybe trailed this up. We didn't get a golden bar here, but it was a pullback. But the better entry here, especially since we can take it once we got this, what I call a bullish inflection right here, and we're green and moving above the midpoint on MQ momentum, that's what makes this a better entry here. Either of them would have been good and would have worked out. Here we had the golden bar, we stayed in, golden bar, stay in, and we got another long entry right here. We'd still be in this trade. Okay, we haven't gotten our extended signal yet, and oh, I take it back. I would have gotten out on this one. I didn't see this one right here. See this one right here? This pullback that we got after the golden bar, I would have jumped out at the close of this bar. Okay, so we wouldn't still be in this one. If you're using that golden bar rule that I told you that we use, the one that I like using and Gary likes using, jumping out on the trade that closes lower after the golden bar. So a nice entry from this point, that would have been at 335. We would have been taking profits all the way up at our golden bars if we had multiple contracts, but then getting out at 375. Nice trade. Okay, if you have other markets, let me know. I see a few other ones here. I see Marvel. We're getting close to running out of time here. You can go ahead and look at that. See our long entry down here, another long entry, long entry. We're still going on this one. And don't forget to look at your higher time frames. You can bring up the weekly. I'm just showing you here. You can switch over to the monthly and get that confidence that we're still going strong. And while the other markets were pulling back, this one is just barely going sideways. And we just got a brand new long entry a couple days ago. So looking pretty good. Lucid. Yeah, that one's been acting very interesting, hasn't it? Do we have that as a symbol? Maybe I don't have that one. Let's try, is it LCID? Did I type that in wrong? Maybe, I guess we don't have that one. I haven't looked at that here. Let's see, Marvel. Let's look at JP Morgan. Okay, JP Morgan is not quite one that I would like to stay in, although we did just get a long entry in JP Morgan, so maybe that's one we should. But you can see you've also got an inverted or a head and shoulder pattern up here that I'd be watching for a break below here. I'm not going to, just because I have Trender Pro turned on doesn't mean I'm going to throw everything else out the window. I'm still going to look for the other things and other setups and use everything I can to improve my ability to trade. But this is telling us to get in here after a quick scalping reversal here. I just like to get it a little bit less choppy when I'm doing my trading. Okay, so you got thousands of markets to choose from. You might as well pass the ones that aren't really good. Let's look at Micron. Oh, Micron, I don't know if you've been bearish in Micron, but it looks pretty bearish on the daily here. And we've been moving lower here since we had that peak back in March. And we actually got a short entry a little bit ago, and we pulled back a little bit up since then on the weekly. So we'd be looking for even more opportunity for this to go short if we can get a short entry like here. It just seems a little bit choppy here. Will he tell you his trade alerts? Will Gary tell us? Well, MTB2 can give you alerts. It does have alerts built in. What's the difference between Trender Pro 2.0 and MQ Momentum? Trender Pro 2.0 is looking at a bunch of things. It actually uses MQ Momentum in its algorithm. We use MQ Momentum in every single chart. But MQ Momentum is more of a momentum and direction and power indicator. And that is telling you something different than trend. But it does have that concept built in as one of the algorithms it uses in calculating how things look. So you can use MQ Momentum on its own to get information and use that in conjunction. Like I said before, we use it for divergence detections and confirmations of trades, looking for crossovers of the zero line. And there's a bunch of other things. We use things called bull and bear flags, which are not the flags that you typically look at, things called bearish and bullish inflections, and a bunch of other things. Can I show the exploration? Yeah, it takes a little while for me to run the exploration because I don't download the explorations. I haven't downloaded the data, but this is the NASDAQ bull surge results. You can see them here. I just ran that before we started. Okay, so if you see anything in here, you can look for these. These are just when you have a move from a neutral situation right into a strongly bullish situation. So you can check these out where you have a 1 bar breakout. And remember, you have 2 other explorations that are in the bullish side that would look for not only a surge, but also a breakout of the last 5 or 10 bars. So you can get the breakout of the daily or the weekly. And I see Jeff coming back in here. Yeah, our time is up here.
Time flies when you're having fun, right?
What was that again, Jeff? I'm sorry.
Time flies when you're having fun.
Yeah, this is fun stuff, and I'm excited to share it with all of you. And I hope you guys will consider getting it, because it can really make a difference in your trading. I know it does in mine. So, if you have issues with it, I'll be one of the people that can help you resolve it, or any questions you have about it. I wrote the stuff and wrote the user guide, so I'm happy to help with the questions either before or after you start using it.
All right. All right, very good. I did actually want to show Avni was having an issue that I was going to show him how to fix real quick. And then I want to talk a little bit about the pricing and kind of how it's included in the package and that kind of stuff. So, John, I want to say thanks for coming today.
Oh, you are welcome.
Sean says, your charts are beautiful. What platform do you use? I like that question a lot, by the way.
Oh, I bet you would. Yeah, this is all MetaStock.
Thank you very much, John. Thanks for coming. All right. Is there anything else that you had?
Me? No, I'm good. I'm good.
Okay.
I've shown you guys it. If you didn't get it by now, or if you didn't understand how it works by now, because it's really easy to use, then it's not time. But I hope people are seeing it. It's an obvious positive upgrade to your trading.
All right. Thank you very much, John. I appreciate your time today. Avni, I'm going to answer your question real quick because it's only going to take a second. But John, I want to say thanks for coming in, and great work on creating this.
Oh, you are very welcome.
All right. Okay, here we go. Let me go ahead and do this. You should, I think I'm sharing my screen. Will you guys just confirm real quick that you guys can see my screen? I think I actually did that already. I hear Greg saying, yes, he can see my screen. Okay. So, Avni, your question is like, I'm not seeing any of the arrows or the trend line and stuff like that. Obviously, that's important, and it's a big part of like being able to read the commentary and stuff like that. Here's your 2-second on how to actually kind of get that on your chart. What you're missing, it sounds like to me, is the expert advisor. So if you just click on this guy with the bolo hat on, and it'll open up the list of expert advisors that are available. And if you just scroll down to this MQ Trender Pro 2, and go ahead and detach it from the chart. This is probably what your charts, according to what you're telling me, look like. So just go ahead and click on the expert advisor, find MQ Trender Pro 2.0, click on attach, click on close, and voila, that'll give you all the signals. As soon as it kind of reloads in, it has to load all those signals in. So, and then it'll look like this. So Paul asks, is there a recording for this webinar? We're recording all day long. Actually, we're not as much recording as simulcasting to YouTube. So we will send you a link to the recording. If you're watching this because you're watching the recording, or if you're watching on YouTube Live right now, make sure to like and subscribe. It does help quite a bit, and we do appreciate it a lot as well. So that, I'm going to say that as well. Let me go ahead and kind of I do want to show how this works, and we're behind, but we're actually catching up on time, so that's fine too. We'll go a little bit quicker here though. With the MQ Trender Pro 2.0, one of the questions that came up is do we have a trial period? One of the things that we do with MetaStock that I think is really, really cool is a lot of the products that we offer here, we offer on a 30-day money-back guarantee. So if you're not happy with them for whatever reason, you can basically get a refund. We stand behind them. If you're happy with them, they're going to help you make money, and they're worth the investment. And if not, well, it's a risk reward. I think a lot of traders wish they could get a little bit more often. But okay, so MQ Trender Pro, it does do all the color coding. He's done an extremely good job in putting everything together. It includes the indicators, the explorations, the expert advisor, all that stuff, the commentary, everything that makes MetaStock special. And yes, you can use it for JS with futures. We do cover about 200 plus exchanges globally. So if you're in India, we had a question about whether it works with on the NSE exchange. It does. You can use just about anything you want to with it. And that's just because of the relationship that we have with Reuters. It includes a money-back guarantee, the user guide, some training to help you get it started. And if you don't have MetaStock, I'm going to talk a little bit more about MetaStock in a few hours here. But if you don't have MetaStock, we'll also give you access for 30 days to our award-winning MetaStock program as part of this. So here at the show today, it's $14.95. You can get it for $9.95 as part of our show special today. Again, that comes with a 30-day money-back guarantee. That also comes with somebody that'll help you install everything. If you have questions, you can talk to our Utah-based support staff. They do a really good job of helping you out. So give us a call, 800-882-3040. You can also visit us at metastock.com/saleschat. And of course, it is part of the Summit Traders package today that we're doing, which includes all the add-ons. Steve Bigelow's, Trender, Tompkins, Anne-Marie's Target Rich Trades. It includes 3 months of a service called learnmetastock.com, which is great. It includes 2 years of stocks and commodities. Thank you for sponsoring us, Stocks and Commodities. We do appreciate it. And Alicia Met Power MetaStock. So our Summit Action Pack is actually the same year as my birth, 1974. It's normally $3,836, but you can get it today at 1974. Okay, you can do that at metastock.com/summit deal, 800-882-3040, or online at metastock.com/saleschat. And most of this $1,900 package is actually on a money-back guarantee as well. So again, a good risk-reward ratio, some of our best add-ons. So 800-882-3040, metastock.com/saleschat. We are running late. So you can get your free issue of Stocks and Commodities magazine at metastock.com/tradersummit. Great magazine. We appreciate them for being our sponsor. We're also sponsored by the CMT now, the Chartered Market Technicians. We've been working with them. They are a very well-respected association. They train some of the world's largest brokers and hedge funds. They have accreditation courses in risk management, systems development, portfolio management, cmtassociation.org for that. So in any case, our next speaker is Jeff Tompkins. Jeff is in addition to having a very, very good first name, is a good friend of mine. Jeff trained a lot of people on how to trade the markets using udemy.com. He has a huge following there. He does a really, really good job of kind of talking and showing his methods and how he looks at the market, and he's always great to have on. So Jeff, I understand we're running 8 minutes behind. So, but that's okay. I want to get you on here, and if you run a little bit long, we won't be angry with you either.
All right, thanks, Jeff. Can you hear me?
Yeah, I can. All right.
Okay.
Let me go ahead and send you the presenter here, so we can see your screen.
All right. I might be able to make up some time for you here. So,
if you can, you can. If not, I'll go a little bit short on mine that's coming up after Anne-Marie. So we don't worry about time more than we need to.
All right. Can you see my screen okay?
Well, I can. Yeah, you're coming through great. Let me get out of your way.
All right. Well, thanks for the intro, Jeff. Great first name as well, by the way. Thanks for having me. Thanks, everybody, for joining. We got a big group on today, Saturday. Pretty impressive. So we'll make it worth your while. We're going to be focusing on 2 indicators for high probability trades in our session today. So we'll spend about an hour together today, and you guys will get a lot of good information out of it. So I'll read a quick disclaimer here for you guys. We all know that trading securities and options involves risks. Of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and do need a broker to trade securities and must meet suitability requirements. We will be going over some different trade signals and results with you guys today on our session. And I typically use real money results and back up everything I teach with real money from my personal trading account. But due to the time critical nature of trading, brokerage fees, activity of other subscribers, etc., we don't guarantee that anyone will mirror the performance of the results that we share on the session. So, all right, with that out of the way, I'll give you guys a little bit of quick background on myself. If you haven't attended any of my past educational events, I do have 22 years of experience trading the stock options and futures markets. I received professional training at Morgan Stanley, and I'm the founder and chief investment strategist of Altos Trading. And we currently have over 50,000 members in over 100 countries across the globe. So really solid group of traders and investors in our network. I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. And I'll be sharing some of the tools and tips and tricks that I use in my hedge fund with you guys today. So this is a great opportunity to get an inside look at the hedge fund world. And also the founder and creator of the Trade Trend Signal software, which we'll be focusing on as an add-on to MetaStock on our session today. And I'll show you guys how this can help you in your trading and investing decisions. So by the end of our session, you'll discover how you can use 2 simple indicators to accurately predict whether the market is likely to go up or down over the next few days or even weeks. And what's even better than that is you have access to this information up to 3 days in advance. So what I'm going to be sharing with you on our session are indicators that can actually give you a forward-looking guidance to where the market is likely headed versus the lagging information that we are commonly exposed to with all the other indicators out there. And the beauty is it works for any market. So whether you guys trade stocks, futures, Forex, options, this can be applied to any market as well as any time frame. And whether you're just starting out or you're a seasoned pro, and I would imagine we've got a spectrum of experience levels on the session today, it's must-have information for today's markets. And the markets are really becoming more difficult to navigate as volatility remains elevated. And we certainly saw that this month with another sell-off in the market. And we're seeing more and more of these types of events, and they can become very difficult to navigate if you don't have the right tools at your disposal. So we're going to help you guys with that today. So I often get asked, how did I get started in trading and investing? And for me, it started back in a summer school class back in the early 90s. And I'm kind of dating myself here a bit, but at the time, the internet was kind of in its infancy, and we didn't have access to a lot of the tools and charting software and things that we have today. And in this particular summer school class, we didn't have computers or anything at our disposal to make investing or trading decisions. So the instructor of the class would give us a copy of Investor's Business Daily, which is a great publication, still around today. But most people access it, online or whatnot. But we actually were given a copy of the paper each day when we attended class. And I remember on the very first day of this class, the instructor asked us to turn to the quotes page, and I had never really, followed stocks prior to this, or really anything financially related as it relates to trading and investing. So I didn't really know what I was looking for, but he instructed us to look at the quotes page and pick out a stock. And I remember which stock I picked. I was living down in Silicon Valley at the time and was familiar with a lot of the up and coming tech companies back in the 80s and 90s. And I remember picking out a stock, Western Digital Corporation. It was one that I was familiar with, and was a Silicon Valley company, but didn't know much beyond that. And it was interesting as I started to follow this stock each day in class. I noticed the price was going up, and I thought, wow, this is quite incredible. This couldn't have been easier. I just picked out a stock, and of course we weren't trading with real money. It was a paper trading account or portfolio that we were setting up in this class, but it started to go up. But unfortunately, as the class progressed and the instructor had us pick out an additional stock each day in the class, I noticed that it wasn't quite that easy. Not every stock that I was picking was going up. So it was a bit like throwing darts at a dartboard, and unfortunately, a lot of retail traders out there use that methodology. They sort of just throw darts and hope for the best. And so by the end of the class, while I had some successes overall, and of course this was kind of a buy and hold approach, but overall, the portfolio showed a loss at the end of the class. And So that was a real issue, you know, in terms of my confidence. So, you know, I started out thinking, wow, this is really easy and great, and I want to start putting real money into these stocks, and then of course realized that my biggest overhead as a potential trader and investor were my losses, because often what happens for most traders is they have some successes, and then unfortunately those are wiped out by losses, and that really is our biggest overhead. So we really need a methodology, a system, or a strategy that is consistent and has a positive expectancy. So while there were more failures than successes, it caught my interest, and this is where I kind of caught the trading bug back over 20 years ago, and decided there's got to be you know, a more efficient, consistent way or approach to do this, and that's where I really started to go to work to look for systems and methodologies that can overcome the cost of failure. All right, so here's what I'm going to give you guys to make it easier, because trading and investing is certainly not easy. It's probably, I always say it's like the most simple difficult thing we'll do. So trading is rather simple in terms of execution, but it is not an easy thing to do, which is why so many people fail at it over the long term. So I'm going to make this easier for you guys today on our session by using one specific indicator to help you predict markets in any time frame up to 3 days in advance. So rather than using lagging information, we're going to use information that actually predicts with a high degree of reliability where the market is headed. And I'll show you the correct way to use the indicator to help you guys make money in the markets. It'll actually tell you exactly when to buy and when to sell. So unlike, you know, going back to the summer school class where I was really throwing darts at a dartboard and using a lot of guesswork, there's no guesswork involved here. So you'll know exactly when to buy and when to sell. And it will help you identify when momentum is shifting and a new trend is starting. I'm also going to show you a really cool trick to help you eliminate many of your losing trades. Again, as I mentioned, this is really our biggest overhead as traders and investors. There are losing trades. The overhead for trading is relatively low, right? We just need a computer, an internet connection, and you know, a broker and some you know, charting software. So the overhead is relatively low, but when it comes to losing trades, that can really throw a wrench in things. So I'll show you guys how you can eliminate a lot of your losing trades, and I'll show you how you can trade stocks, futures, forex, and options with consistency. We'll go over some trade examples together. I'm going to do some demonstration in the MetaStock platform for you guys, and then if you stick with me to the end, I'll show you guys how you can copy my success and get my trade signals that I personally use to make a living in the markets. I do trade for a living. It is my profession, and as I mentioned, I also manage money for my hedge fund clients in Altos Capital. So let's imagine if we could actually predict market direction. Really, regardless of what strategy or market we trade, we're all using some degree of prediction in our methodologies or systems, right? And so that can be okay, but we want to really delve into what we're trying to predict and whether, you know, that is truly predictable or not, in terms of giving us an edge in our trading. So interestingly, the human brain is very capable of short-term predictions, but we're horrible at long-range forecasting. So if you think about that for a second, if we are looking at a stock, you know, so let's say a price chart of a stock, let's say Apple, for instance, we might be able to look at that chart and see that the price of Apple is going up or down. It can be fairly obvious what's occurring in the short term. But if I asked, you know, 100 people, if I pulled 100 people and said, what price is Apple going to be trading at 3 months from now? Most likely nobody would get that right? We can't predict where Apple will be trading 3 months from now or 6 months from now or a year from now. Our brain just is not capable of that, and there are too many variables that can get in the way between now and our long range forecasts. And it's actually why we have a problem anticipating that a slithering snake on the ground might bite us, right? We have no problem with that. So that would be kind of a short-term or short-range prediction. If we were to encounter a snake out in the yard, right, we know that there's a chance that if we get too close that it could bite us, right? That's a short-term prediction. and we can jump out of the way in a millisecond. So we can react to short-term predictions relatively easily. Our brain is hardwired to do that. But interestingly, we have a lot of trouble guessing where the snake will be the next time we go out into the yard. In fact, most people always guess incorrectly and avoid the same spot that they previously encountered the snake. And this is an interesting concept that was introduced in The Black Swan, which is a book from Nassim Taleb, that we're all guilty of ascribing far too much predictability to the truly unpredictable. And we have these biases that are built into our brain that lead us to believe we can predict something long term when in actuality, we really are not very good at that. So how do we actually predict the unpredictable then, right? Because if we're going to invest or trade in the markets, we need to have some way to give us an edge or give us some degree of consistency where our winners outpace our losers. So the good news is we don't need to try and forecast where a security will end up in the long term. This is what most retail traders try to do. And fail miserably. So we don't need to actually worry about making long-term predictions or guessing where a stock or a futures contract or a Forex pair is going to end up, weeks or months down the road. But we do need a reliable indicator algorithm for short-term predictions. And short-term predictions are really possible in the markets if you have the right tools. But beyond that, once we make a prediction or we have an outlook for a security that we're considering trading, it goes much further, right? We need to then manage that trade, and that's actually often more important than the entry to getting into the trade, right? So for that, we need a trailing stop algorithm to overcome longer term forecasting difficulties. So we may not necessarily know exactly where a stock is headed in the medium or long term, but if we can follow the price action and the trend strength and the momentum, et cetera, and we have a reliable algorithm to do that, that can help us overcome that long-term forecasting difficulty and ride trends and waves in the market. Okay, so we're going to do that with a couple different indicators on our session today. And the first one we're going to look at is what's called the Parabolic SAR. So I'll give you a little bit of background on Parabolic SAR, and then we'll delve into how it can be used for determining which way the market may likely be headed. So this is a common indicator available on virtually all retail trading and charting platforms. And it's used by traders to determine trend direction and potential reversals in price. In fact, that's what SAR stands for. It stands for stop and reverse. All right, so it's trying to identify reversals in the price of a security. And it is a technical indicator, and you can access it again on any charting platforms, including MetaStock. And we use it to identify entry and exit points. So that's typically how traders use the Parabolic SAR. And as you'll see on the chart on the right of your screen, it's plotted as a series of dots. So the dots either appear above or below the asset's price, depending on the direction the price is moving. So if the indicator anticipates the price is going to move down, it prints the dots above the candles or the current price. If it anticipates the price will move up, it prints the dots below the candles or the current price. Okay. And you can see there that when this particular security is trending up, the dots are printed below the candles and above when it's trending downward. So that's the basics of how the Parabolic SAR works. So as the price of a stock rises, and again, this indicator can be applied to any security, not just stocks, the dots are going to rise. And first they rise slowly, and then they accelerate with the trend. So assuming a trend follows through, you're going to get those dots rising along with the trend. And they begin to move a little faster as the trend develops, and they eventually catch up to the price. And that's actually what causes the dots to reverse direction from printing below the candles to above, is when the low, for instance, when the Parabolic SAR dots are below the candles, hits one of the dots, it will reverse the dots. And the chart that we're looking at here on the screen shows that the indicator can work well during a strong trend. But the problem with it is it can lead to many false signals when the price moves sideways or is trading in a choppy market. So that's where things can become problematic with the Parabolic SAR, just like really any other indicator out there, because just like other indicators, the Parabolic SAR incorporates some degree of lagging information. So oftentimes if the market moves too quickly or it moves sideways, we get chopped up, and it doesn't give us reliable signals. So there's a number of problems with the Parabolic SAR that we're going to overcome. First of all, it's going to give us new signals to go long or short constantly. So that's a fundamental problem, because if you're going to use a trading system, you don't want to be in the market all the time, right? Otherwise, you might as well be a buy and hold investor, because if we're trying to pick tops and bottoms and constantly be in the market, we're going to get whipsawed or chopped up at some point. That's just the nature of it. So if you use it as a standalone tool, it's always going to leave you wondering which signals to take and which to ignore. And one of the major advantages of trading is, assuming we have a good indicator or system, is that it keeps us out of the market when conditions aren't favorable and gets us in when they are. Okay, but the Parabolic SAR doesn't accomplish this. So we're going to have to throw in another indicator to overcome this problem, and we'll get to that in a second. But it does perform well in strong trending markets. However, as most of us know, if we've traded for any period of time, the majority of the time markets are not trending. They're actually range bound. And this is where most systems and indicators get whipsawed or chopped up and cause problems. Now, in ranging markets, the Parabolic SAR tends to whipsaw back and forth, and it will generate a lot of false signals. So let's take a look at that on a chart. So if you look at the price action or the trend relative to the Parabolic SAR dots, and we see this signal on the left of the chart, this particular security was in a strong trend. So it was in a strong uptrend, and the Parabolic SAR actually worked out quite nicely here, right? And then eventually that trend stalled out and began to reverse. Okay, so we see that here with a switch in the Parabolic SAR dots. So those are now above the price instead of below. So that would indicate that the market may be shifting and moving to the downside. But unfortunately, that didn't occur. It actually gave us a false signal, and the uptrend resumed after that 3-day pullback. And we get another switch in the Parabolic SAR where the dots are now printing below the price, indicating the security should be moving back to the upside. But once again, it gave us misleading information. This particular security is going into a bit of a whipsaw and is not in a well-defined uptrend. So you can see here that instead, the price actually moved down into the dots, and the dots reversed once again, telling us that the security should move to the downside. And it did that there for a few days, but it didn't follow through for very long. So what happened is the price started to reverse again. And this is very common to see with really any security. They don't move in a straight line. So instead you see these waves of price action to the upside and the downside. Okay, and so you can see that once again, we get a switch indicating that the security should move up, right? Because the dots are below the candles, but that didn't occur. And then once again, we get another false signal with the dots above indicating a potential move down, whereas the security moved up right into the dots. So we had one good signal from the Parabolic SAR when the security was in a strong uptrend, followed by 5 whipsaws or bad signals. So if we had taken all of these signals, it would have resulted in a loss, right? So the 5 losers would have wiped out the gains from that one winner. So that's the major problem with using the Parabolic SAR, which can be a good indicator when used correctly. And I'll show you how to do that in just a moment, if we can eliminate a lot of these whipsaws. Okay, so let's talk about overcoming the Parabolic SAR whipsaw problem. Now, I've mentioned that it alerts us to potential trend reversals, but the caveat there is if the trend doesn't follow through, it can lead to whipsaws. So it doesn't tell us whether there's momentum behind the reversal. And more often than not, it results in a false signal when used alone. So it's, like most indicators, not sufficient to use as a standalone system or methodology to get us into a trade and manage the trade and get us out with a profit. So it's just not going to accomplish that by itself. So for that reason, it's crucial to use a reliable and highly accurate momentum indicator to confirm the start of a new trend. And that will also help keep us out of a lot of the whipsaws. And we're going to do that with an indicator called Trade Trend. And this is an add-on for MetaStock that gives us accurate buy and sell signals up to 3 candles in advance of the trend. So unlike most other indicators like the Parabolic SAR or the MACD or stochastics or a lot of the other commonly used indicators out there that give us a signal and we have to act on it at that moment in time, wouldn't it be great to have something that actually gives us some degree of advanced warning? And this is a tool that we've developed for that purpose, is to give us up to 3 candles of advanced warning before a trend actually develops. And that can be applied to any time frame. So if you're, for instance, trading on a daily chart, you can know up to 3 days in advance the likely direction of the security you're trading. Or let's say you're trading off of a 5-minute chart and you're a day trader. And you can know up to 15 minutes in advance the likely direction of the security. And how cool would that be, right? And I'm going to demonstrate that for you in a minute. And so it accomplishes this with a proprietary momentum algorithm that reads the market in real time and also includes trailing stops to lock in profits. So not only will it help you identify a potential trend up to 3 candles in advance, if that trend follows through, it's actually going to read the market in real time and manage the position by giving us trailing stop levels and letting us ride the trend for as long as possible. And it can help us predict short-term and long-term trends with really astounding accuracy. And so when you see this on a chart here in just a moment, I think you're going to be blown away at how accurate this can really be. And it works for any market, whether it's stocks, futures, Forex. And I'll show you guys how you can screen for these opportunities as well. And not only that, you can screen for the advanced warning or the advanced signal, not just the actual entry trigger. So again, like most indicators or systems out there, you're screening for the entry trigger. And if you're not ready to pull the trigger, you miss the trade or the opportunity. So I'll show you guys how you can screen for the actual warning in any time frame. We have a lot of options traders who use this tool as well to help supercharge their option strategy. So if you guys trade options, this is going to be a really great addition to your toolbox, and ultimately help you guys trade like a pro without any guesswork, because it really does everything for you in terms of timing entries, managing open trades, and getting you out before the trend reverses. All right, so we're going to do some demoing here in the MetaStock platform. So let me go ahead and get over to that so you guys can see how this all works. So hopefully you guys can see my MetaStock platform. If you guys can't, please put that in the chat box. But you should be able to see MetaStock here. All right,
We can.
Okay, good. Thanks, Jeff. So I'm going to show you kind of, I'm not going to do a lot of demoing on how the platform works. I imagine a lot of people on the session are probably already using MetaStock. If you're not, I highly recommend it. It's an award-winning platform that has an incredible amount of functionality when it comes to back testing, scanning, and all these different things. In fact, I would rate it higher than a lot of the top broker platforms out there for some of this functionality. And that can all be accessed through the Power Console. So when you open up the Power Console, you have your charting, your exploration, your system testing, and your forecasting. So those are kind of the 4 main functionalities of the Power Console. So we're going to start out by looking at charting. And I've got a few charts already pulled up here so you guys can see how this works. And we're going to add the Parabolic SAR in here in just a second. So I'll show you guys how to use Trade Trend in combination with that indicator. And by the way, Trade Trend works really well in combination with a lot of indicators. Some of our members do use it as a standalone tool, but some use it with systems they're already using or other indicators to further increase the consistency of their indicators or systems. So let me sort of explain how Trade Trend works and how to read the symbology here on the chart. So this is Agilent, ticker A, and we'll just kind of hone in on some of these signals here. There's been some really nice ones. What you're looking for is the warning. So I mentioned that Trade Trend is unique because it gives you up to, and we're looking at a daily chart here, by the way. It gives you up to 3 days of advanced warning on a daily chart. Sometimes it might be as little as 1 day. Other times it may be a bit longer, up to 3 days. A lot of these do signal the next day, but the warning signal is the diamond that you see on the chart. And I'll even zoom in a little bit more just so it's more visible for you guys. Okay, so the diamond, if it's green, is a buy warning. If it's red, it's a sell warning. Okay, and at that point, and I'm going to show you how to read this in the commentary here in just a second. It's telling us that we need to get ready, and if we want to take a trade off that signal, to go ahead and enter our order. And the cool thing about the MetaStock platform is it gives us the exact instructions in the commentary on how to take a trade off that particular signal. So if I click on this buy signal from back on July 22nd, you'll see that it gives us an analysis of Agilent for July 22nd. And if we look at the commentary, it tells us trade trend projects a move up, right? And which is quite interesting because Agilent really wasn't doing a whole lot at the time, right? It was just kind of moving sideways. There was certainly not a strong trend in place. And we had a nice little sell signal here that would have given us a nice little profit, but it was a bit counter trend. But all in all, the stock was kind of moving flat and sideways, right? But on July 22nd, that changed. So the algorithm actually picked up a potential move up in the stock. Okay, and you'll see that in the commentary. And then it gives us a suggested entry price. So if we look at the price on July 22nd, the high of the candle that day was $150.50 per share. Okay, and if we look at the commentary, it's telling us that the suggested entry price is $150.53. So just a few ticks above that candle. So this is something that's built into the trade trend algorithm, and it's also something that makes it unique. So at the start of our session, I mentioned, I'll give you a trick to help eliminate a lot of your losing trades. Well, this is it, and it's actually built into the algo. Rather than just jump in on a buy or a sell signal, wouldn't it make more sense to use a buy stop limit order above the warning signal so that if there's actually no follow through in the prediction, then you simply don't get into the trade? We only want to get into the trade if there's follow through. And so for that reason, it suggests using a buy stop limit order. And that's simply an order above the current market price that would trigger if the security moves up into that price. And so the algorithm gives us an exact entry price. And it says, don't take the trade if the price moves up too far. So for instance, if the price were to gap up the next morning above 155, then we wouldn't want to get into the trade because too much of the move would have already taken place. Okay, and then if the trade does hit the suggested entry price of 150.53, which it did in this case on the next trading day, July 23rd, then it gives us an initial trailing stop. All right, so let's see what happened on this trade. Obviously, the prediction followed through, so we can see that Agilent moved up in price. Okay, and as we cycle through the commentary, we can see that it's going to tell us, let's see, let's go back here. Went too far. So if we go to the next day, it's going to tell us that the suggested long entry trigger price was reached. So it initiated a long position. And then it gives us the new stop value for the next day. Okay, so it tells us everything we need to know to manage the trade as it progresses. Okay, and that's all found in the commentary. Okay, so let's talk about if a signal doesn't trigger. So I can see a couple that did not trigger here. And this is the importance of using that buy stop and sell stop entry for a long or a short trade, respectively. So this was a sell warning where the suggested entry price would have been placed below the low of this candle. But you can see that it didn't follow through. So this was a signal that did not result in a triggered trade. Same with this. Now this buy signal was. So if we look at August 13th, you can see that we got another nice buy entry in the context of this uptrend, and then followed by another here on August 23rd. All right, and you can see that they're triggered by the arrow that follows on the candle that the trigger price is reached. Okay, so not every signal will result in a trigger trade, but that's okay. We don't necessarily want to take a signal that doesn't follow through with the prediction, right? So this is what can help keep you out of a lot of bad trades and keep you in the ones that actually follow through. Okay, and this is really what sets trade trend apart. It doesn't repaint, right? So every signal that is printed by trade trend on the chart stays there, and you can go back and look at every signal that is ever printed from trade trend on your charts. Okay, and you'll see a lot of really nice signals at turning points in the market, with a nice buy there, a nice sell, a nice buy, a nice sell. So the accuracy is really incredible. Let's take a look at a couple more charts. So this is one that I really like to trade, Micron Technology, and so we're going to throw the Parabolic SAR on this one and show you guys how you can use that in combination with trade trend. But you'll notice, just looking from afar, it's the incredible accuracy of the warning diamonds, the red diamonds and the green diamonds at major turning points in the market, right before there's a major shift in the trend. And even in choppy markets like here in February and March, when Micron got a bit choppy, you can see that the predictive buy and sell diamonds were still quite accurate at turning points in the market, right? So let's go ahead and throw on the Parabolic SAR, because I want to show you guys how you can use this to help with the accuracy of Parabolic SAR, really, and then throw trade trend in to help you hone in on those opportunities. So we're going to go ahead and insert the Parabolic SAR indicator. Let's see. There it is. And we're going to add it to our charting window. Okay. So I'm going to show you a little trick to look for. And I see a good one already. I see a few good ones here, but I see a really nice one in November. Let me go ahead and zoom in on that one. Okay. So when using the Parabolic SAR with trade trend, what we want to look for is a buy warning from trade trend at or near a Parabolic SAR switch. So if they don't occur at or near the switch, we don't want to take the trade or the suggestion from the Parabolic SAR indicator seriously. But here's a great example. So you see how the Parabolic SAR was above the price here as it was moving down a little bit, but there wasn't a lot of follow through, and it quickly reversed and actually reversed into a major uptrend. Okay, so this would have been a really poor Parabolic SAR signal to take, and we wouldn't have taken it because it didn't coincide with a trade trend warning signal. But this particular signal on, let's see, was it November 5th, coincided with a switch in the Parabolic SAR. So see the warning and the switch from the dots being above the price to below. And that's where we want to start paying attention. All right, so we get the warning. Our entry price here would have been just above the high of this candle. So at the time, Micron reached a high on the 5th of 54.78. All right, so our trigger would have been just above the high of that candle. And you can see by the confirmation arrow on the next day, November 6th, the price came up and hit the suggested entry price. And look at that beautiful trend that took place. Okay, and then we get some, and this is common after a large trend, we get some parabolic whipsaws, right? So we see that we get a number of parabolic SAR signals that don't follow through. Well, that's okay. We wouldn't have taken any of these because there was no trade trend signal. But then look what happens here, right? On December 31st, there's a switch and it coincides with the trade trend buy warning. And there's our nice trend. So this one would have been a great one to take, right? The stock reached a high on the 31st of 75.68, triggered on the next trading day, which was in the new year, January 4th. So the entry would have been probably around 72.50, and this thing moved all the way up to 87. All right, so that's a huge percentage move off that one signal. So that's how the Parabolic SAR can be used with trade trend to help eliminate a lot of the Parabolic SAR whipsaws. Let's take a look at a few more charts. Most people like to look at the SPY. This is the S&P, just to get an idea of the accuracy of, in fact, let's look at the recent sell-off in the market and see how trade trend warned us of that. the market, the S&P hit a new all-time high on September 2nd. And then it started to turn over, right? And there was actually a nice little long trade here from Trade Trend on this up move. But how did Trade Trend know that the market was turning over and selling out? Because it actually gave us a warning on September 7th, 2 days after the all-time high, that the uptrend was likely over, and we need to position ourselves to either go to cash and protect our account, or initiate short positions, right? And so that warning came in September 2nd and actually followed through the very next trading day on September 8th. So if we look at the commentary from this particular day, we'll see that the warning came in September 7th. Trade Trend projects a move down, a sell setup has occurred, and if we're going to short the SPY, we want to enter if the price trades lower to 450.67. Okay, and it definitely did that on the next trading day. And then we get a big move down, right? In fact, the SPY sold off all the way down to a low of 428.86. Now the market has since rebound. Look at this. On September 22nd, as the sell-off is ending and the market's shifting back to the upside, we get a buy warning from Trade Trend. That one triggered the next trading day, September 23rd. And now there's a long signal open on Trade Trend back to the upside. So you can see the incredible accuracy of the warning signals on shifts in the momentum and trend in the market. Let's take a look at another. This one's a fun one to look at. This is GameStop. I like to show this one because this is, one of the so-called meme stocks that are being hyped up in chat forums and things, and causing short squeezes among hedge funds and all these things. So it's kind of interesting to me and fun for me to watch. And there was the big one in GameStop, as you guys may recall, back earlier this year. So let's focus in on this one here. So we were getting some nice signals from Trade Trend as the stock was moving flat, but it was really moving sideways here for quite a while. In fact, it was trading all the way down like $4 to $5 a share. And then if we go fast forward to early this year, we got a buy warning from Trade Trend on January 12th of this year. So you see that the green diamond buy warning literally a day before the stock started to take off. So at that time, the stock was basically flat and closed on that day at $19.95, so just under $20 a share. Look what happens. So we get the buy warning on the 12th. At that point, we could go in and enter our buy stop order with our broker. And then what happens is the stock takes off the very next trading day, January 13th. And you see that there's a confirmed entry with the green arrow right before it skyrockets from around $20 a share to nearly $500 a share over the next couple of weeks. And then we get a big sell-off there, right? And Trade Trend actually kept us out of that one, probably because the risk and volatility was too high. But even as the stock retreated all the way back down to 20, by February 22nd, we get another buy warning and then another trigger, and the stock takes off to over $300 a share. So you can see that even in the context of these crazy meme stocks, Trade Trend can weather these storms and get us in and give us a warning before the move occurs. So pretty incredible. This is the cues. So just like to give you kind of a zoomed out view of a lot of the nice signals that you get as trends are shifting in the market, and you're getting these warnings even near tops of trends and even near bottoms, right? So May 17th, warning before the cues took off. That's basically how Trade Trend works and how you can use it to eliminate a lot of the bad signals from indicators like the Parabolic SAR or other indicators that you may be using. So it's a really powerful tool to add to your toolbox to help eliminate a lot of bad signals, and also give you advanced warning of potential moves in the market. And you can also run scanning. So this is, I just ran a quick scan this morning of all the NASDAQ stocks. And you can see the incredible accuracy of Trade Trend when you apply it to over nearly 4,000 stocks that are in the NASDAQ. and the profit potential that comes with trade trend. So the highest profit was on MicroStrategy, and it was over $456,000. And you can see that nearly every stock in the NASDAQ, and this is, by the way, going back a year, so the date range was September 29th of last year to September 24th, which would have been yesterday on Friday of this year. Nearly every stock in the NASDAQ was profitable. Only a small number of them over here on the right did not produce a profit if you had taken, and this is a long short scan, so it incorporates every single signal from trade trend, both long and short, going back an entire year. And so a lot of these had some really nice profits. You can see in the profit column here that the system does very, very well. And this is on NASDAQ stocks. I chose NASDAQ because NASDAQ stocks tend to be quite volatile. And most indicators and systems fail in highly volatile stocks. They get whipsawed around too much. So I chose a very difficult market to demonstrate this in. It does very well on S&P stocks, Russell 2000 stocks, etc. Okay, so let's go ahead and get back over to our presentation here. So hopefully you guys enjoyed that demo. That was just on a few stocks in the broader NASDAQ index on the daily chart. It can also be used, as I mentioned, on intraday charts. It can be used on any time frame, and you can also use it to run scans and look for the warning signals on any selected time frame. So whatever time frame you guys trade in, you can find those buy and sell warning signals. It also, as I mentioned, can be used to help time your options trade. So we have a lot of members who use Trade Trend to time their options trades, and options trading has really picked up in popularity. And this is an interesting article pulled from December of last year from CNBC that looks at the retail options trading volume across all retail brokers in the US. And it's really interesting what's happened. And the article sort of highlights that a lot of the options trading is largely driven by the pandemic and people being out of jobs and working from home and looking for alternate sources of income, which is exciting. But I thinking back to my early days as an options trader and the difficulties I encountered and the losses that I encountered, not having tools like Trade Trend on my side to help me time my entries. And so it's exciting. It pumps liquidity into the options market and things like that. But it's also a bit scary because options trading is not easy. It's a really time critical derivatives market. And if you don't have the timing down well, you can really run into a lot of difficulties. But interestingly, the volume has really picked up. And so we are seeing a lot more options traders come into our network at Altos Trading, and a lot more using Trade Trend to help them in their options trading. So looking at the data from Piper Sandler, if you look at the options trading volume from December of last year relative to 2019 before the pandemic, it's up nearly 50% and sometimes a bit more across different markets like the NASDAQ, CBOE, and ICE. And so a lot more people are in the options market. And so, yeah, we have a lot of people using Trade Trend and applying it to different option strategies. And it's a really great tool for timing directional option strategies. So whether you buy calls or puts, or you sell puts for income, which is one of my core strategies, vertical call or put spreads, credit spreads, calendar spreads. There's a lot of different strategies where timing is really critical, right? So you need a tool like Trade Trend on your side to help you time your trades and your strategies and give you some degree of advanced warning before a move takes place. Because often with options, once you spot the move and you get into the options trade, it reverses on you and you see that premium wiped out very quickly, right? So Trade Trend can help us overcome that. And it can help us leverage up these opportunities as well. You saw in some of the charts we looked at that a lot of these signals can result in very big moves. And the nice thing about options, if you can time them correctly, is they give you leverage, right? And leverage is a double-edged sword, so it can work against you. But if you time it well, a simple 5% move up in a stock can easily equal 100% options gain. So we have a lot of members who use this tool. Now, as I mentioned in the beginning, I always back up every tool or strategy that I teach or provide to our members with real money results. So I don't just promote Trade Trend to our members. I actually use it myself, both in my hedge fund and in my personal trading account. So these are actually real money results from my personal TD Ameritrade cash account using trade trend. So important thing to highlight, not every trade is going to be a winner, right? So we are going to have losers, but the beauty with trade trend is most of the time it's going to keep us in the winners for longer periods of time and cut our losses when the trade doesn't work out. So I had one little loser in there, followed by a couple of really nice winners with a profit of over $26,000 in a day and an open profit of over $115,000. So this is real money, guys, from my personal account using trade trend. And this is really why I do it, guys. People ask, well, why do you even bother, sharing this with people? Why not just keep it to yourself and just live a nice life and everything else? Well, I do that too, but and these are some of the things that I love to do, and this is why I trade. Ultimately, I love to spend time doing what I love, and this is me behind my house in Boise, fishing on the river and backcountry skiing, traveling to Europe, to Venice, taking sailboat trips on the bay, my old stomping grounds where I grew up in the San Francisco Bay Area. These are the reasons that I love to trade, but it can become a bit lonely. So for those of you who have traded, it is a bit of an isolating profession. So I really love and get a lot out of sharing my tools and strategies with our members, because that's where the rewarding part of it really comes in for me. And so that's really why I do it, is to help you guys and get the success stories that we really love to receive and make us feel great. So guys, trade trend works in any market, any time frame, any size account. So it's a versatile tool. Whether you're just starting out, you can scale up or scale down or trade according to your account size in any market in any time frame. And again, we have members who are just starting and people who have been trading for decades, right? But what sets it apart is it does give us predictive buy and sell signals up to 3 candles in advance. So you saw that on the charts. You saw the green and red diamonds and how they give us an advanced warning as well as a suggested entry price ahead of the trend, rather than giving it to us after the trend is already set in place. And as I demonstrated with the Parabolic SAR, you can even take any indicator system you're currently using and apply the trade trend indicator as extra confirmation. So we have a lot of members who use this as a tool in their toolbox. We have people also that just use it as a standalone because it can work great there as well, as you saw on the back test of the nearly 4,000 NASDAQ stocks, right? So every system out there that you guys encounter, every strategy, every indicator, if you use it long enough and can stay in the market long enough and not wipe out your account, it's probably going to produce some winning trades for you at some point, right? But the problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. Does that sound familiar to any of you? I know I would raise my hand to that 10, 15, 20 years ago. I would have successes and then see those get wiped out by losing trades, like I did in that summer school class. So that's what we're here to help you guys overcome, because losing trades are our biggest overhead. And so we're here to solve that problem for you guys. Here's more real money proof of the trade trend indicator in action. I use trade trend in the futures market as well. So you can see some of my actual screenshots from my real money TD Ameritrade TOS account and some of the profits I'm able to make. And this is, nothing's redacted. This is all actual screenshots and includes losses. So you can see that not every trade's a winner. But what I want you guys to notice is the losers tend to be, well contained, and we get out of those when they're not working out, and let the profits run, right? So the key is for your profitable trades to be greater than your losing trades, and that's called a positive trade expectancy. Win rate is not really all that important. Trade expectancy is what's important. So you can have a successful system with a low win rate, and you can have a terrible failing system with a high win rate. So rather than just focused on winning percentages, you want to focus on trade expectancy, and that's really important. So here's my promise to you guys today for being on the MetaStock Summit. I want to help you guys have days just like these, and I'm going to give you access to my tool that lets you copy my trades. So if you guys want to actually look at the signals that I'm looking at myself in my own personal account and in my hedge fund, I'm going to give you guys an opportunity to do that with the trade trend indicator. And this is a one-time opportunity for the MetaStock Summit to join me to discover how I use accurate buy and sell signals and lock in profits with the trade trend trailing stop algorithm. And it's really powerful. So I'm going to reveal every one of my special techniques and indicators that make profits, like I've shown you on our session today, possible. And I don't hold anything back. I give you guys all the tools and information you guys need because I want you to be successful as well. So here's everything you guys get. You get 12 months of trade trend for any market, whether you trade stocks, ETFs, futures, Forex. You get the exact entry and exit warning signals, as well as the triggered entry. And you get the commentary that is provided only in MetaStock. You won't see that on any other platform, that tells you the exact warning, the exact day, the exact timing, and the exact entry price. Okay, and it also helps you manage the trade as it progresses if you end up taking a trade off that signal. But we don't stop there. We also hold live interactive trade sessions demonstrating the tool. So 2 to 3 times a month, we all gather and get together with all of our other Trade Trend members, and we demonstrate how we're using Trade Trend in the current markets. So you get access to those live sessions, as well as members area access for all of our past sessions. We've held many, many sessions over the years, and you get access to all of our past sessions. And these are really great learning tools because we teach a lot of strategy, and we cover, like, for instance, different option strategies and different different methodologies and systems that not just include swing trading or longer term trading, but also intraday opportunities. So you guys get access to all of that. And not only that, you get access to me. So on these sessions, I'm hosting these, and you get full access to me to ask questions, share ideas, and help. I'm there to help you guys be successful. So I'm not just going to give you the tool and say good luck. I'm going to be there on these sessions, hosting these, and helping you guys navigate the markets. We're also going to throw in a really cool bonus: trade adjustments to fix losing trades. So one of our core methodologies at Altos and we do a lot of option strategy and things at Altos, is not just to put on an options trade and hope for the best. So we teach a lot of different options adjustments techniques to fix losing options trades. We're going to throw in our training on that as well, because we do have a lot of members who use Trade Trend for options trading. And I cover a lot of my most profitable tickers to trade on our live trade sessions. So you guys have full access to those, and I'll share those with you. But ultimately, we want to help you guys cut the learning curve and trade like a pro, starting as early as, well, actually Monday, since tomorrow's Sunday and the market's closed. But we're here to help you guys cut the learning curve. The learning curve in trading and investing is one of the steepest. It's probably, akin to, a doctor or a lawyer, where you have to go through years, if not decades, of training in order to reach success. And so, it's not easy, but we can help you guys get there if you are serious about it. So we put together a very special Trade Trend signal package for the MetaStock Summit. And again, it includes 12 months of Trade Trend. It includes our live trade sessions. And normally 12 months of subscription to Trade Trend is $14.99 retail if you were to buy it right off of our site. We're going to give you guys a really special deal on this today that includes our live trade sessions. Those are normally $550 retail. You also get coaching from me on all of the sessions, as well as via email. That's valued at $19.97. We're also going to give you guys access to our members group. So we have somewhere between 800 and 900 members who use all of our strategies and tools like Trade Trend that you can interact with and share ideas with. And normally that's a $199 retail value. We're also going to throw in the trade adjustments to fix losing trades. As I mentioned, that's a $900 value, and ultimately help you guys learn to trade stocks, futures, Forex, options, whatever market you trade with consistency, and that's priceless. And I'm not going to stop there. So we've got a couple more bonuses to throw in as we're wrapping up. So bonus number 1 is our Professional Trading Series online course. This is a really great addition to the Trade Trend package, because it not only helps demonstrate the value of Trade Trend, but also all of the strategies that can be used in combination with it. So it's 9.5 hours of online content that you can watch at your leisure, of me teaching some of my best options, stocks, futures, and Forex strategies. Normally we sell that for $595, but we're throwing that in at no additional cost. And then you're also going to get my new ebook, How to Create Risk-Free Trades. This is a really cool money management ebook that can be used in conjunction with our methodologies and Trade Trend to help you guys mitigate risk in trades, and sometimes even eliminate it altogether. And that's getting thrown in at a $97 value, no additional charge. So really valuable package we're throwing together here for the MetaStock Summit, valued at over $5,000 retail. We're slashing that 80% off, and it's only $997. So that breaks down to only about $2.37 per day. and you get everything you see on your screen here. So $2.37. I guarantee you guys are paying more in commissions to your broker than $2.37 a day. So it's very affordable, and we've priced it very competitively and taken 80% off the retail value. And for that reason, we are going to limit seats because it does take us time, and as well as the MetaStock team time to get everybody set up. They provide a really nice white glove treatment for Trade Trend on MetaStock, and we can't take on unlimited members as much as we'd love to do that. So we do limit this to 25 seats, and once the 25 seats are gone, it does go back up to the retail price. So if you guys want 80% off, take advantage of one of the 25 seats at altostrading.com/MetaStock, and Jeff will be putting this in the chat box for you as well. Or if you'd like, Jeff will also let you know how you can call in and speak to one of their helpful representatives to help you get set up over the phone. All right, so you guys get everything that you see on your screen, plus our bonus number 1, our professional trading series. That's nearly a $600 online course that you guys are getting for free, and my ebook, How to Create Risk-Free Trades. All right, and we have a lot of positive testimonials from members who are using our strategies. I won't get into all of these since we're a little bit over on time. But I will highlight one that came in from Brian a while back that was really touched me, because he was struggling in the futures market. And in fact, he was down $42,000 in his account. But he started to use Trade Trend in his futures trading. And he said that he actually was able to recoup all of those losses and is now net positive over $47,000. So the system produced about $90,000 in profits for him in only 90 days. So that's an incredible testimonial. Not everybody will, mirror that or accomplish that. We're not going to, promise that any testimonials we'll see can be replicated, but these are real testimonials from our Trade Trend members, guys, and we have hundreds and hundreds of them. I am going to throw in a quick guarantee here. If you guys aren't profitable trading the Trade Trend signals in the first 90 days, we're going to give you an additional year of Trade Trend on us. So again, that's a $1,499 retail value. Oh, and by the way, guys, if you take advantage of the 80% off special today, you'll never pay that $1,499. So you're grandfathered in at the discounted rate as long as you stay a member. There's no contracts, no long-term commitments. You guys can cancel if you decide it's not for you. But if you're not successful in the first 90 days, we'll throw in an extra year. Okay, that's how confident we are in it. So I ran a little bit over. I apologize. I'm going to pass it back over to Jeff and see if there are any questions that have come through. If I don't get to questions, you can always email us, support@altostrading.com. But if you want to take advantage of the special 80% off offer today, it's good until the 25 seats are taken, or till midnight tonight. So whichever comes first, most likely it's going to be the 25 seats. So I urge you guys to jump on this if you're interested. altostrading.com/MetaStock.
All right. Oh, I am live. All right. I don't know if you very, very quickly could look at LPI. I promised Andrew in the YouTube chat that I'd have you look at it, but just very quickly, if you could, Jeff.
Oh, okay. Can you see my screen?
Yeah.
Okay. LPI?
LPI.
Is that a .o?
No, it's not.
All right. I'm going to switch to candles. All right, so this is LPI. Wow, look at that sell warning up there. July 2nd, triggered next day, really nice. It caught that virtually near the top one day after the high. So we had some signals here that weren't triggered. So see these diamonds that aren't followed up by an arrow. So no trigger, no trigger, no trigger. This one did trigger. Got a nice little move down towards the end of that trend. And then got a nice buy warning August 23rd before the stock moved back up. See a lot of nice signals on LP. I've never actually traded Laredo Petroleum, but looks like we got some really nice.
Good.
Looks great. Yeah.
All right. So again, the website for that is altostrading.com/MetaStock. We can also sign you up if you want to give us a call at 800-882-3040 or metastock.com/sales-chat. Jeff?
Thanks, Sean. I appreciate it. Yeah. Yeah, just quick answer to Kathy. Sean just said great presentation, Jeff. So thanks, Sean. Kathy's asking, is the 97 package for a year? Yeah, it's good for an entire year, Kathy. All right, thanks,
Okay.
Jeff. Appreciate you having me. Yep, welcome
All
everybody who's joining. Appreciate it.
Thank you very much. Appreciate that, Jeff. And that's great to have you. I'm going to go ahead and kind of dismiss him as a presenter. Let's go ahead and do that. And let's go ahead and share my screen. So let me change this presenter to me, show my screen. Again, that $9.97 package is a special that we are offering as part of the show. My lights are going to go on right now. There we go. See, there you go. altestrading.com/metastock, 800-882-3040, or metastock.com/salespchat. Now, we did have a question in terms of the, and I appreciate that, about the package that's 1974. What we do with that does include trade trend, but it's only 90 days of trade trend. So this package here that you're seeing on the screen is, includes Steve Bigalow candle profit systems, the MQ Trender Pro, 3 months of the Jeff Tompkins trade trend. It'll include Anne Marie's Target Rich Trades, learn MetaStock for 3 months, unleash the power of MetaStock, and 2 years of Stocks and Commodities magazine, all of it for the low cost of 1974. So you can visit us online at metastock.com/summit deal to take advantage of that. You can give us a call at 800-882-3040, or you can visit us at metastock.com/salespchat. Moving very quickly on, we're going to say thanks for Stocks and Commodities, awesome sponsor of the event. 17,000 articles that they've done, 1.3 million subscribers in business. I've been getting the magazine since I started here 25 years ago in March. So it's a great magazine. You'll get a free copy. If you're watching on YouTube and you didn't register for the session today and you want to get a free magazine, you can do that as long as you do this by Monday. If you come into metastock.com/tradersummit, you can sign up the registration link, and it'll allow you to sign up for a free magazine, as well as a lot of other free bonuses that were offered by the presenters today. So I'd encourage you to do that. Also want to thank the Chartered Market Technician, the CMT Association, for sponsoring the event today. Great organization. Very, very well reputed, if that's a word, and you can find them at cmtassociation.org. In the interest in moving on, we're going to go to Anne Marie. Anne Marie is one, well, I say this all the time, I actually love everybody that we bring on today, and it seems like I need to get a little bit more unique about the way that I introduce people, because I'll be like, this is my friend. For everybody. Anne Marie, though, we bring her in and she does a lot of really good content when we do market recaps. She does a lot of them with us. She's given me a lot of really good stock tips over the years. Roku, Disney, I think Costco all come to mind. So she always does a really, really good job, and her timing's really good on these things. So Anne Marie, it's good to have you here.
Let's see. Oh, yes. Can you hear me?
I can.
Yes.
Okay.
Yes. Yeah. Okay. All right. Yeah.
Welcome to the show.
Thank you. I'm not sure if you can see me. I am here in Dubrovnik, and that is the sun setting right back there. And
we can see you.
Yeah, and so I wanted to, the sunset was beautiful 15 minutes ago, but now it's fading. So I did want you to have a look at it. Croatia is an amazing place, and certainly trading's allowed me to do that. So I'm going to shut this down.
That looks like a really cool place to be.
Listen, it's fantastic. I swam in the Adriatic today. It was very cold. It was really cold. And but it was fantastic nevertheless. So I'm gonna move the screen out, and we'll go ahead and get started. Thanks so much for those of you visiting. We're gonna look at charts in just a bit, but first I want to talk to you a little bit about how we can improve our success rates, right? Because really, we look at all these amazing systems, and at the end of the day, the problem is when we pull the trigger. And so how many times can we look at a system and go, you know what, it told me to buy there, and the last time I tried it, but I was a little early, and so it was wrong, and now I'm scared, and I don't do it again. And so what I want to talk to you about today is, with all these great programs that you're going to have, it really is about you and that mouse. And how do you make those decisions that say, these are the things that are going to help me make the right choices over time? And so why might I be the person to listen to? Well, I've been trading for a little bit over 18 years, and I trade to eat. And so that is kind of an important thing for me, making sure that my success rate is where it's at. And so what I want to share with you are the things that I look at in terms of when you have these strategies. And now what we're talking about is you have the strength of the strategies that you're buying today, because you spent this time here and you go, hey, listen, these things work. These people are obviously successful from using these strategies, but how can I implement them? How can I make my mouse and my mind do what I need to do? And the reason that we make those right choices is because, one, we think about our risk, and two, we think about our strategy and we follow the rules. And this is something that many of us do not do. We do not follow rules. We have a really tough time with that, and that's why we buy systems. And so many systems work from trend mechanics, right? Most all of the systems that you work with, unless they're complex option strategies when things are sideways, we're going to work with trend and momentum. And trend is up, down, or sideways, and momentum is how strong is that up, down, or sideways move. And inside of that, we say, if I take the trade now, how much risk do I have at stake? And so what it implies is that what we need to do is be paying attention to these systems that give us these triggers. And see, what we have a tendency to do is listen to too much and focus on too much. So I want you to think about this amazing concept that's very true, and it's less is more. And so what I want to share with you is something called the OODA loop. For those of you who've seen me from time to time, you know it's very important, this OODA loop. It's observe. Now, my suggestion today is only to look at the data points that give you information to facilitate a decision to act. So we just saw some folks earlier in the morning, and they've given us these systems that go, hey, listen, watch for this alert, and then we have the trigger, and then you take the trade, or it says, hey, listen, the trade is setting up right now, look at your stop, and it's going to give you what you want. That's all you need to look at. If you're working on something and really paying attention, you observe those events. The second thing you want to do is orient. And this is the place that you're going to manage risk. To orient means to look at something and say, you know what? This is a trigger that tells me to go long, but I'm sitting underneath a very tight moving average. And that moving average has got some negative slope. If that's the case, what you want to do is wait for price to stabilize. And I'm going to show you really what price does when it stabilizes as soon as we get to the charts in a couple of moments. Once we orient, we decide. And so what we actually decide is the following. We decide what price we're going to get in at. We decide exactly what our risk is going to be. And we decide where we're going to take profit. Before we ever get into the trade, this is something that we have to do. Now, it's particularly important for a person like me who trades to eat, because if I just go, let's see where this goes, it could turn right around and put me upside down before I could say, you know, lickety split the way the markets work. But this deciding event really helps you say, okay, if I'm going to move from point A to point B, What does point B look like, and how might I know that it's on the approach? The last thing is we act. So we observe, we look for the data points. Once we find those data points, we orient those data points inside of the broad market, and then we decide, all right, I'm going to take a limit order here, I'm going to take a market order here, my risk is here, and you set it in play and you watch it move. Traders have a terrible time with this. This specifically is called an OODA loop, OODA, and it's used by every fighter pilot in the United States military. Every single one of them learns the OODA loop, and they move through the OODA loop every single decision. I observe, I orient, I decide, I act. Once that action has occurred, I begin to observe, is what's happening supposed to happen? Am I orienting that properly? Do I need additional decisions that need to be made? And I'm going to act through them. The problem with consistency is that once we get a good trade and we think we have a process in place, we begin to ease up on that process because we get confident. We go, yep, you know what? I know what I'm doing. And we take a trade. And that confidence really drives a level of arrogance. That arrogance tells us, you know what? I know what I'm doing. That arrogance drives complacency. I don't need to worry about that. I know this is going to move up. Complacency drives inattention, and inattention drives failure. And then we have to go, wait a second, what is it that I didn't do about my process? If you're honest with yourself, you fall into these categories just about every single time you take a trade. The things that we have a tendency to do is in this cycle, we forget that we are competing against ourselves, and the process and the competition needs to be just with the process. And I just heard this from a very, very good trader named Mark Minervini. And he made a comment and he said, hey, listen, many of us look at our portfolio and we compete with the market gains. Hey, the market's up 30%. My portfolio is only up 12. I'm doing something wrong. When really the competition needs to be inward, focused on your process. So stop competing outside and start competing inside. So the big thing is, what happens to us to become performance traders? Trader pitfalls is where we all fall. And listen, even the high performance trader like myself, I have to guardrail every day against these things because we're naturally inclined to complacency once we have a strategy and we know that we think what we've got everything under control and we stop watching everything we should. The first thing is the performance trader defines their rules and they obey them. Listen, be honest with yourself. We break rules. Some of us break too many of them, and some of us really don't have strategies that are very good at all. That's why we buy these. But once you buy them, you have to be attentive to see what they are telling you. The second thing is, we see an event, let's say we're not attentive, and a buy signal comes, and it's 2 days later, and we go, oh my gosh, I just missed this. I'm just going to buy. We fail to assess risk, and then all of a sudden we're down in a trade, it falls through a support zone, and we're not where we should be, but really it should have been 2 steps back in the preparation that says, you know, this trade might trigger, I better keep my eye on it to make sure the chart is telling me something important. And once that happens, when our trades go bad, sometimes we go, I don't want to look at that. I'm just going to start over. And that's what we do, right? And we do not assess them. You've got to look at your trades and go, what did I see? What did I miss? And what do I do next time so it does not occur? All right, the things we're going to focus on, every single one of the systems that we work on look like this. There's a slope, and that slope is bullish, bearish, or reversal. The next phase is location. Where is it? Are we at a very big bottom? Are we at a very big top? Are we at a known support? Are we at a known resistance? And then the strength of trend. If I get in the middle of the move, is my chart going to be strong enough to hold me? Okay, so what are the takeaways here? We'll jump to the chart. You have to prepare yourself to trade by building situational awareness. And that means if I'm planning on trading this, I need to wait to see the environment look just like I think it needs to look to take the trade. And the more you trade and do reviews of your trades, the better you'll be at building situational awareness. Don't chase trades. You'll lose more than you want to lose. That will expand your risk. Think about where you're going to get out before you get in. Now, if a chart is going absolutely magnificently, you can stay in very long. But if you don't have any idea about, all right, if my profit is 50% on this thing, if it just explodes to the north, what should I do about taking some profit? And you've got to assess your risk. All right, so that's it for this. And I know I have a little bit of limited time, so I don't want to waste a lot of chatter, but I do want to look at simple things. Now, one of the big things that we'll notice in the current market, we have stocks that are behaving quite differently to the ETFs or the indexes. And so we're going to look at SPY as the first one. And what I've done, very simply, we've got MetaStock target-rich trades here. And I've done something really simple. I've put up an SMI. This is a 50 simple moving average, and this is a 5. Okay, so here's what a chart action going through the OODA loop, orient, observe, orient, decide, and act, right? We have the same sort of things. Resistance, this is that warning space that says, hey, listen, we've got some problems going on here, right? So take a look at how this looks. No matter what you do, if a chart is beginning to turn over, right, for target-rich trades, you're going to get that same sort of thing that says, here's resistance. But if a chart is getting ready to turn over and it's got a very big slope moving upward like this, here's what's going to happen. When that resistance comes, it's going to show up when the charts have started giving us weakness and stop closing higher. So that's the first thing to look at. You're interested in seeing whether something's going to roll over. If your chart stops making new highs and stops closing above the lows, you need to take some profit. That's observing price action while you're in a system that gives you trend, right? I have the 50 here because trend comes first. And if trend is up and you see a sell, it's a quick sell into frontline support. If your chart immediately recovers and it sits above that 5, notice here's the resistance zone. Once it breaks that area, look for the pullback and you can continue to move higher into the next resistance area. What is the big takeaway? The big takeaway is what we really are looking at when we have a system, and that's anyone's system, folks. For me, my goal, I feel very privileged for Jeff to ask, hey, listen, why don't you join us? I do consider it a privilege. I want to be able to help individuals. And what I notice is it's the little things that we lose sight of as traders. And so here's what I want you to look at. When a resistance level shows up, it says ahead of time, hey, listen, something's going on. So this really tells us we have a problem even when price action is moving higher, but it immediately drifts down. The second you lose support, stare down your daily candles. You are an investor or a swing trader. Look at your charts at the end of every day and go, am I still holding higher highs and higher lows? Great, I'm staying in the trade. Am I still higher lows? Maybe not breaking higher. Buying pressure comes from underneath. You stay in the trade. But when the chart stops heading higher and it breaks support, it tells you I'm going to look for a deeper ledge of support. And if you have a moving average that is up, I say put the 50 on there no matter what. That moving average that is up tells you, hey, I'm going to find buyers here somewhere at the first pass into these support zones. Take a look. We triggered a sell zone here. It stopped heading higher, right? Moved all the way across. So it's selling you. This shows us 1, 2, 3, 4, 5, 6 days before the sell trigger comes. It says, have a look. I need to break support and I need to close under this moving average. And if I bounce and I don't hold, I've got a sell zone. And there it is, just as simple as that. If you take a look at that and go, all right, I see my sell. If you've got this 50 here, you'll know that support zone is going to try to show up. But if this is a downward sloping formation and you have downward momentum, you know that the first thing that's most likely is that you're going to have buyers try to hold the bounce. But if they can't break that new area that becomes support, that turns into resistance, this trade is going to continue to go down. So it's about understanding the price action because the traders are saying, hey, let's buy it here. And the sellers are coming in saying, listen, you can buy it all you want, but this resistance zone that you had up over here, you're not going to hold it. You're not. And so it tries to hold it one day and then rotates right back down. Notice again, what does price action do when moving averages are steep? With target-rich trades, all you have to do is look to the left for the last lines of support, and those are going to be the diamonds that say support or the diamonds that say resistance, and your price action will come right down into them. When they do, if you've got a 50 simple moving average, it's telling you you've got to take some profit because buyers are likely to show up here. So how do I know this? Well, I've been trading every day for 18 years. I've been here in Dubrovnik for 10, 11 days or so, and literally I've traded every single day because it's been absolutely fabulous. I can play all day and then I can trade in the evening because it's still early in the States. So this formation here, you can see immediately what happens when you get a wick. Those are buyers. Buyers pushing price up. Where does buying pressure come from? We tend to think, hey, well, if price is moving up, buying pressure must come from above. It doesn't. It comes from underneath. That's where real buying pressure comes from. Where does selling pressure come from? It actually comes from above. And so selling pressure is going to push on price action downward, and buying pressure is going to push on price action going upward. And so you can see this area. It tells you, hey, you need to take some profit because of an old support zone that is sitting here. And even here, that's another support zone that it's sitting at. And if that holds, take a look, 2 days over it, it means our pullbacks are likely to be buy zones. So the big thing as we look at any of the charts, and I want to really jump right into questions. We're going to go chart after chart after chart after chart. And I'm just going to show you a 1, 2, 3 step that you can use and just say, oh my gosh, I totally understand what's going on with price. Here's a big takeaway. The market is essentially a bullish instrument. People will buy products and stocks because they expect price will go up. And that really is what we are looking at overall. Okay, so that, from that perspective, that's what we're looking at. And so when we see the 50 simple moving average going straight up, we anticipate that if we have a short-term sell trigger, it's going to turn around and we'll need to take frontline support action from that space. So let's say you use a moving average and you use a momentum indicator. Your thought process should be the following. If I have downward slope on that average and I have downward slope on my momentum, my sell triggers are going to be spot on fantastic. And what I'm going to do is flesh out support below. You don't buy the bottoms unless you're being a scalp trader and you're thinking about something on a much tighter time frame. You're looking at this saying, okay, if I head into support here, my price action is very likely to tell me, you know what, I got to trim my shorts. If most of us are long traders, what we want the price action to do is confirm. And so how does price confirm? Take a look at this. The first thing that happens, let's say we're turning back to the upside. The first thing that happens is I stop heading lower. That's the first thing. A lot of us like to bottom pick, but you really can't bottom pick until the bottom is in, right? So you can put it on a tight time frame and move things a little bit closer. But here's the thing. Once it stops heading lower, it's going to bounce into and through old areas of support that it's trying to recapture. Here's our resistance line. So you can draw a line straight across that and go, you know what? If I close above that, then the next thing I want to see is price action hold the edge. So literally, if you've got something that has resistance and you come over here and you close over that line where that resistance is, you can buy that next candlestick and move up into the next big space. The sensitivity of this chart, and I normally have it on a 2-day. You can see that the majority of this motion is steady and to the upside. But here's the very interesting thing. Although we see price action in the indexes, the indices, and the broad ETFs continuing to move up, what we're seeing everywhere else does not look like that at all. And it tells us there are problems underneath the market. Is this an O or a? Yes, here we go. All right, so let's take a look at Microsoft. Wow, it got really loud in here. My apologies. Can you guys hear that? All right, so here is this motion. And notice, you see how many curves it's not running straight up. Microsoft, of course, is a very strong company, but momentum is drifting, price action is drifting. Things do not look the way they should normally look in this kind of environment. And so what we have a tendency to think about is, oh my gosh, I need to buy some puts. My puts need to be in place because the market's going to roll over. As long as you are sitting above your 50 simple moving average, you are not going to have trouble in your charts if you're looking for buying formations right there on the edge and you move up over your resistance. Take a look, old support action. Resistance is not until up here at this candlestick. And so we can see the clear line of resistance right here. This chart is actually in a box. And so how do we know it's in a box? Well, we have to go from, hey, here's a sell, here's a buy. We have to go past that. We have to go, wait a second. What does my moving average look like? When your moving average is sideways, where am I? Okay, here we go. When you're moving average, I'm showing a daily chart right now. When your moving average starts moving sideways, it tells you there's a top and a bottom. And if you want to go long, you better wait until you get to the bottom. And if you want to go short, you better wait until you get to the top. So here is something very important for you to sit and think about. You've got yourself some strategies, you're buying, you've got this great package, you've got all this stuff to look at. But more than that, you've got to go a level deeper to become master and commander of you and yourself at your desk. When do you click that mouse? And that means having confidence in what you're doing. And that confidence comes from really understanding what the systems you are buying are trying to measure, right? And many of them measure trend and they measure momentum. And here's the marvelous thing. Trend and momentum only look one way. They have upward moving averages and they have upward moving momentum. And so take a look at this. You could look at Microsoft and go, wow, I mean, yeah, it's kind of moving upward. Looks pretty good. But take a look at this. These shaded candles are really downward candles, right? It's just in an upward trend. So let's say you said, hey, I'm going to buy. You're stopping and getting yourself into a trade before it makes a $7 pullback. Just because it's a buy zone here doesn't mean you go, hey, I'm going to buy it. Your thought should be the following. All right, this just triggered a buy. Wait, where is support? If I'm buying, I've got to assess my risk. My risk is going to be the last area of support. Please do not think about buying and selling in terms of saying, all right, I'm just going to do 1% risk or 2% risk or whatever. The market doesn't care what your risk parameters are. The market does what the market does, irrespective of that. And so the way you find it is by looking to the left and saying, wait a second, this has a buy zone, but my support action is old resistance, new support. So as long as it doesn't break down below that support zone, I'm going to make my buy right down here at that next region of support. And so what it does is give you that sense of control about managing your risk. Because here's a fact. I've been around a long time. I mean a really long time. Now I'm sitting with the gray beards, only I don't have a beard. I got gray hair. So the big thing to sit back and say is, what is it that all of these seasoned traders are telling us every single time? They're telling us, listen, learn to manage your risk. Pay attention to the small things that give you the highest bang for the buck. And guess what those things are? Old support is new resistance. And when you have shown a chart that has support and you've got sideways price action, you know it's going to bump into a region that is going to be very likely to roll over. All right? So that's super, super important. All right, let's take a look at another one. Let's take a look at FedEx. They had a really rough time. They just reported, said that they are going to have a really tough space with how much they're going to have to pay workers. Oh my goodness, DEF. And so it really, looks pretty much like a train wreck right now. All right. Oh, wonderful. Yeah, that is great. Microsoft often ranges before moving out. Surprisingly, most charts will range before they move out or they move down. Here is FedEx ranging before what? It moves down. Now, do we have sort of this idea that this might happen? Yes, we actually do. And the way we do that is by going, wait, am I heading higher? No. Am I heading lower? No. The first candle that breaks and has a continuation gives me my trend. Right? Notice, this candle breaks, has no continuation. Let's say you're looking at a range right here, right? That's pretty sideways, down, up. But notice, it breaks down, immediately reverses. Breaks up, immediately reverses. Breaks down, continues. And so it gives us the next stair step. When we trade trend and momentum, what we end up seeing is charts will have pockets of noise, and those pockets of noise will resolve in a certain direction. So here we are sitting with our systems, and we're looking at the chart, and we're thinking to ourselves, hey, well, if they move sideways and then resolve, I need to get in on the resolution. Here's the thing. Look at how many times charts will set up in sideways pockets before resolving. This one sets up in the pocket 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days. It moves sideways before it continues the trend, right? We know this. A chart that tends to break the trend by time and not price, meaning it doesn't move higher, it doesn't move lower. If it's in a trend, it's going to break in the direction of that trend. But here's what we also have. We have our 5 simple moving average that is very steep. If it goes sideways, that means for you to pump the brakes and say, hang on, something's up. If I think it's headed lower, I'm going to sell a high. If I think it's headed higher, I'm going to buy a low. And if it loses my low, I'm going to cut and run. And my risk is minimal. If you do that and think about it over and over again, you're never going to get crisscrossed on any of your good signals, ever, ever. The moment a chart stops heading higher, your thought is, where is support? You look to the left, that's old resistance. If it breaks even further, it's going to go into the next area of old resistance. Because why? In an upward formation, prices are going to break through ledges until they stop breaking through ledges. And so if you're a trader and you're thinking, hey, I want to go long, you better wait until it stops breaking through the ledges. Okay, we have what software generates the up-down arrows. This is Target Rich Trades. It's one of the systems that's available for the package today for everyone. I'd love for folks to throw up some charts, and let's just go rapid fire through them and talk about what's coming next for a number of things. You know, I'll give you one of my favorites. I think we ought to be sitting in the metal space. I tell Jeff this probably every time we get together. And so we're going to look at the lithium space, right? Makes batteries. We're going to have a ton of battery action in the motion. And so here we are, right? This is the ETF for lithium. I'm afraid I don't know that I can do the yen. I don't think I get that feed here.
I got it.
Oh, okay.
I think it'll be, when you're ready, it's JPY equals.
Oh, JPY equals. All right, super. I'll do that. Okay, so let's take a look at this. This is the lithium chart, and it's been going sideways, right? How do we know this? Immediately, if you have a tight moving average and it looks serpentine, meaning it's got wiggles in it, you know there's a bottom somewhere and a top somewhere. And we can draw a line right there, and there it is. So what is this chart doing? It's resolving inside of a space. Just because you want to buy lithium right now doesn't mean it's the time to buy lithium right now, right? We just had a sell event. It came down into the front line of support, closed the trade, and now it's building a new area of support in a price compression event. So what kinds of things might you look at? Well, here's the thing. Lovely that if you use an SMI or a MACD or whatever, if your momentum is moving up and your tight simple moving average are moving up, you're going to have upward prices, right? As long as you are holding support, your price action will give you northern motion. The second you start breaking support, there's a problem. So what's the takeaway? The takeaway is, I better watch where my support is if I'm long. That support ledge is not arbitrary. It's going to tell you, take a look. Here's this one right here. Here's our support ledge from the last time. It takes 1, 2, 3, 4, 5, 6, 7, 8 days, comes right back to test it. Pardon me, not a coincidence. All right, so this is sideways. We can't do anything here. What's the next one? JPY equal. Oops, that's a plus sign.
JPY, yep, you got it.
All right. Penny stocks work the same way. Why do they work the same way? I don't know if my data feed here is going to let me do that. Jeff, I don't know if you want to do that. Yeah. And I definitely don't want to encroach on anybody else's time, right? I just don't want to do that. Let's look at BX. How about we do BX? Oopsie, cancel. Is that Blackstone? BX? Oh, let's look. Let's make sure. BX. Oh, for the love of Pete. Let's do this properly. BX. Blackstone, yeah. Well, what's happening? Open chart.
It looks like it's just maybe having a bit of a slowness with the broadcasting and stuff like that.
Oh, yeah.
It might help to close some of the charts. Like if you hit File, Close All, we might be able to kind of just open one up. Let me make sure.
File, Close All. Oh, for heaven's sakes. I'm going to do cancel, and I'm going to say cancel, and cancel. All right. Let's try that. And then let's try BX again. Blackstone. Oh, connection with vendor. All right, let's see what's going on here. Am I connected? Of course I am. Yep.
Okay. Let's have you try this. Go click on File.
File.
And then click on Go Offline. And then do it again. It'll say Go Online. And sometimes that'll be enough to refresh the connection. Once in a while, we run into some issues with like presenting and bandwidth and
Gotcha. Thank you so much. Okay, so BX.
You can take me if it works. Open
Dang it.
I can look at it. Do you want to look at my screen instead?
Yeah, absolutely. You take it. Yeah,
let's
absolutely.
do that. If all else fails.
Yeah, right. You got about 4 minutes left. So the big takeaway, thanks so much, folks. But this is perfect. Let's just look at it with the black candles, right? And just black and white. Here's the marvelous thing, folks. Anything you want to know about what is happening, you're going to be able to see it with price, but it's hard work. And so the big thing is when you buy a system, it says, all right, we are going to help you with that. And so, Jeff, if you wouldn't mind popping up a 5 simple moving average up there, something nice and tight. What it tells the trader every single time is, listen, in these spaces, you're going to make the most money when your moving average has some slope. Take a look at it and go, hey, listen, is this a slide that I'm going to have a really fun going down? If that's the case, then on the way up, it's going to be a beautiful trade. The moment your chart starts printing candles, and this will work whether you look at it on a 5-minute, a 15-minute, a 30-minute, a daily, a weekly, a monthly candle, whether you're looking at blue chip stocks or you're looking at penny stocks, it is all the same. And the reason it's the same is because human beings make the same footprints no matter where they are on Earth. Front of the Wall Street Journal says they just found some new footprints that are like 25,000 years old or whatever. Little kids and adolescents, same footprints, same feet, one right in front of the other. And it's been tens of thousands of years since they laid those footprints down. We do the same things. We're made of the same dust. And so it'll work whether you're looking at a penny stock or anything big. The number one takeaway is the tighter time frames are going to make you have to make more decisions faster. So if you're looking at this and saying, hey, can I use this mechanic intraday? Absolutely, I do all the time. But I tend to not go any smaller than a 15-minute chart. Usually I'll look at a 30-minute chart. But the big thing is, hey, if we're looking at Blackstone, what did we see? It told us, look, I got resistance up here. I've got a sell zone. But what is happening to this chart? It's not heading lower. And that's something that makes you go, wait a second. If it's not heading lower, then the very top of my congestion range, and again, old resistance, new support, last sell zone looks like the current sell zone. And so if price action pops above that, you're done. You're out of the trade. Because why? because it's in a sideways pattern, and if it breaks, it's got the potential of filling this gap, because that's what traders are going to want to do. So the takeaway is, listen, start recording the important things to look at. I'm going to tell you this. I look at 3 things. I want to make my moving averages and momentum, I want them both sloping either downward or both sloping up. And I want to make sure that I have price action that's telling me either I'm making higher highs or I'm making lower lows. And those 2 things will bring everything into focus and allow you to use these very special tools that MetaStock has in ideal ways. The big thing you have to do is learn to pay attention, and when the triggers come, you're ready for them, because you know that the sign that says, hey, something's coming, is just across the bend. Thank you so much for having me, Jeff. I so appreciate it. I'm sorry I didn't get to answer all the questions, but definitely don't want to encroach on anybody else's time.
Great job, Emery. I do want to add that I know we had a lot of people looking to look at symbols and stuff like that, and we're happy to send you charts if you want to get in touch with us at metastock.com/saleschat as well. So we do have Anne-Marie in quite often to do our recaps, and we look at symbols for a couple hours or so until we start getting them.
Yeah, absolutely. Yeah, so join us on a Friday at the end of the week. You'll really get a lot of info. That's always fun.
I definitely do. And I've put lid on my watch list because of you, Anne-Marie. I haven't bought it yet, though. Waiting.
Yeah, it's in a sideways patch. It doesn't need to be bought right now, for sure. So
very cool. Thank you very much, Anne-Marie.
Thank you very much. Take care. See you from Dubrovnik.
All right. Thank you. All right.
Take care. Bye-bye.
Bye-bye. All right. Very cool. Let me go ahead and kind of get in here. She does such a great job. We love having Anne-Marie in. She's been showing kind of the power of her system. Greg is going to hit my lights, so I don't have to bend over and do it. Target Rich Trades. Another one of the add-ons that we're offering as part of that. You kind of saw what it was doing in the charts that you were looking at, where it was showing the buy zones, the support, the resistance, the sell zones. Very, very good add-on, using a lot of the stuff that she uses. You can use it. Also, she provided scans with it, with advice on how to do things, scanning, explorations, the expert advisor text. For those of you that are interested in finding more out about Anne-Marie, you can find her at thetradingbook.com. I know that was a question that came in a little bit earlier as well. So as part of her add-ons, you have the real-time signals, the setups, the triggers, the exits. You get the detailed commentary breakup. You can use her methodologies to scan the markets for setups. It does have a system test that's available as part of it, and a comprehensive user manual. And her system itself is normally just $500. So it's a one-time cost. You might be able to pay for it in one trade, but that's not a guarantee. But we do back it with our 30-day money-back guarantee. Here at the Summit, we're going to do a $100 discount. You can get it for $399. So if you'd like to do that, give us a call at 800-882-3040, or you can visit us at metastock.com/saleschat. It is part of our Summit Traders Action Pack that we're talking about all day today. With this, you're going to get some of the add-ons that I absolutely I'm most proud of. You'll get Steve Bigelow's CPS, which has been hugely popular, the Trender Pro. You'll get Jeff Tompkins 3 months of his Trender Pro, or his Trade Trend product. You'll get the Target Rich Trades. You'll also get Price Headley's add-on, as well as Learn MetaStock, Unleash the Power of MetaStock, and 2 years of Stocks and Commodities magazine. All of that's normally $3,836. It's $1,974 here at the event today. You can sign up for that at metastock.com/summit deal. You can give us a call at 800-882-3040, and you can visit us at metastock.com/saleschat. We're getting closer to being on time. For those of you that have purchased it already, thank you. I appreciate that. If there's anything I can personally do to help you get started, or if you need anything from me, feel free to reach out. I really appreciate that. MetaStock.com/summit deal, 800-882-3040, or MetaStock.com/sales chat. So there you go. I do want to say thank you to our sponsor, Stocks and Commodities Magazine. You can get a free issue. You'll get 2 years of free stocks and commodities if you do the summit deal that we just talked about. But you can also get a free issue if you just go fill out our registration form at metastock.com/tradersummit. So if you're watching on YouTube and it's before Monday, like if it's today or tomorrow, before Sunday, September 26th, the end of tomorrow, fill out this form and you can get a bunch of free bonus offers from all of the partners here, including a free issue of Stocks and Commodities Magazine. So there you go. Our next, also we'll say thank you for Chartered Market Technicians for supporting us and sponsoring today's event. We want to welcome them. Let's find their side real quick. It should have been right there, but CMT does a great job. They're one of the most reputed, well-known organizations that's called the Chartered Market Technicians. They train brokers, hedge funds. They have all kinds of clients, but they have training in risk management, quantitative systems, portfolio management, applied behavioral science. And you can get a hold of them at cmtassociation.org. So there you go. Our next presenter is also a good friend of mine. I remember Price Headley. We've been working with Price for probably, I'm going to say, going on 2 decades. Probably not quite 2 decades yet, but pretty close to that. Price wrote a book that was called Big Trends in Stocks and Options, and I hope I didn't get that wrong, but you can correct me if I did, Price. He does an absolute great job. I remember Price was the first big project when I got into BD that we worked on in terms of getting everything put into MetaStock. And there's a lot of things that you learn when you're doing a project for the first time. But one of the things I love about Price is, the mentality that he brings to the table. Forget the reputation that he has, which is solid, or the fact that he's been rated a top market timer by Timers Digest for a bunch of times. Really kind of the mentality that he likes to talk about is finding the best opportunities. And by doing that, ignoring some of maybe the smaller opportunities to find the stocks that are really firing. And it's a methodology that has kind of meant a lot to me, and I really, really like Price and the way he talks about it. And I think I should probably just bring him on here and get out of the way.
Hey Jeff, how you doing today?
I'm doing great. How are you?
Fantastic. Thank you for that kind introduction. It's so fun working with you on all these toolkits. I know you guys have done so many of them, but you've done 3 iterations of ours, so it's really been great to have it available for everybody, including when I'm looking for trades on a day-to-day basis. So let me see if I can share my screen and make sure it's coming in loud and clear here. 1 second. And get my PowerPoint up as well here. I'm going to ask you a favor. I'm going to, as a good friend, I'm going to ask you a favor. Could you? My computer's acting up a little bit when I pull up MetaStock, and it's my computer, not MetaStock. But I don't want to slow down people being able to watch. I'm going to ask if you might be able to help me run some scans and what we're going to talk about in the Big Trends Toolkit, maybe in the final 15 minutes of the hour.
I'm ready to do it. I'm prepared.
Good. Thank you. So that way, folks, this is perfect. I assume we're ready to roll, Jeff?
Yep, I'll get out of the way.
Oh, you're fine. Thank you so much for having me. It's always a pleasure to be on these MetaStock online trader summits. Fantastic content across so many different speakers. There's so many different ways to make money out there in the markets. There's ways to lose money too if you don't know what you're doing. So you need the power of this education, and that's why it's smart that you all are here to really soak it in here. My objective is to share with you just one little sliver of the Big Trends Toolkit from MetaStock that basically you can put to work in a very powerful way. And it involves stocks. A lot of you who know me know I've been trading for over 30 years, stocks and options. And very early in my trading career, I said, look, stocks are great, but options are even better. Well, now I've kind of come full circle to say, you know what? Stocks are really good too when they don't have options on them. And these stocks can move like options and go up double, triple, even quadruple in fairly short time frames. And so we call our offering that where we call out these trades using the scanning tools for MetaStock, the Stock Doublers program. It's an alert service where we call out these trades. More on that later, but I want to get you into the principles of this. And of course, just a reminder that everything that I share with you here today is for your information and education only. Nothing we talk about here should be considered a recommendation of buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. Big Trends and the staff are not responsible for any trades that you choose to make. And at Big Trends, we don't provide any personalized financial, tax, or legal advice to any individual. We call out our Stock Doublers trades in emails after the market close, so you can put the orders in for the next day. It can be a nice support if you're a do-it-yourselfer, or if you just like us to kind of guide you through it. It's been popular for a lot of traders to not have to be glued to a screen. But when you think of what's your biggest challenge in trading, you know, having traded for over 3 decades, for me, the biggest challenge is information overload. I don't know about you, but with the internet expanding information at basically almost a geometric rate in terms of there's just too much data out there. And so what you have to do is you have to find a way to reduce that information glut. And to me, the scans, what MetaStock calls their Explorer, is so powerful to say, take thousands of stocks and boil them down to literally a handful, sometimes 1 or 2, or no more than probably a couple handfuls, like no more than 10 stocks out of thousands that we want to look at as potential candidates to get into. And that makes it so much more effective to say, use the power of the technology that's at all of our fingertips and say, okay, how do we really zero in on that? So our Big Trends Toolkit, we call it BTTK, in MetaStock, now on its 3rd version, because we keep on adding stuff to it. This doesn't even show some of the more recent additions. We're just going to talk about this one indicator here, Big Trends Toolkit percentage above 200-day moving average. So I've got all the other tools in there that I like to use, everything from acceleration bands, which is how I launched BigTrends.com in '99, off of catching the accelerations in the mid to late 90s and mainly the internet space. But of course, it keeps on rotating into more and more opportunities across all kinds of new areas, whether it's electric vehicles, vaccine stocks. You know, the market's cannabis. The market's constantly changing, and you need to know how to adapt with it. But we're just going to talk about this one sliver out of about a dozen key pieces. If anything, maybe I give too much value by giving all these as one combined package. Jeff will tell you more about how you can get the Big Trends Toolkit towards the end and show you how to put this piece to work. But there's just so much there. You know, it's I would say the highest value offering I've seen out there in terms of how many different systems and methods you're getting all for one very low price point. Like Jeff said, we could pay for it in one trade. No guarantees, but the idea is, you know, get great bang for your buck. The great thing now is, okay, so we're going to walk through the principles of this. Then we'll get into how to use MetaStock to find current opportunities. Why stocks now? I think there's never been a better time, particularly because, as you know, stocks are now commission free. If you're paying a commission on your stocks, you need to change brokers or call your broker and say, take me down to $0.00 on commissions for stocks. So that's the Schwab and TD Ameritrade price war a couple of years ago. One of the biggest things I think's happened in my 30 plus years of stock and options trading, and it brought option commissions down too to very low, but stocks are free. You know, so that's really a big benefit. Also, a lot of the stocks that I'm trading with this strategy don't have options. We've got a new buy for Monday morning. We just called out for our Stock Doubler subscribers. You can participate in that as a new subscriber come Monday morning, ready to roll. And a stock that's right around $2 a share does not have options, but $2 can go to $4, can go to $8 very, very easily. So we're going to talk about active stock investing with my high growth Stock Doubler strategy. Making trading fit your schedule. This is probably overlooked by a lot of people. You get into trading, you're excited to make money, you're excited for the opportunities that are there on an ongoing basis. But if you get too sucked into the just moment by moment tick action, you'll see your day get just gobbled up by just watching screens and probably not get a great return on your time. And that's, to me, as important as the return on your investment, is to make sure that you get a great bang for the buck for the time you have to commit. This is very minimal time commitment, literally checking at 6 p.m. Wall Street time each night to see if we had a new trade, and then just placing it on your broker platform, typically at market, for the next morning's open. And then we give you specific target and follow up if we need to stop out a trade. So we'll give you a lot of case studies here. I don't usually like showing profit charts because I don't want to make any guarantees here. Past performance, as you know, does not guarantee future results. It could be better or worse in the future than it's been in the past. It will vary. But, going back to 2019, we're not quite through 2021 yet. So, after about 2 3/4 years, a model $10,000 portfolio, putting no more, this is important right here, no more than 4%, no less either. We just use 4% of the account value allocated to each new trade. So if you start with $10,000, that means you would only buy $400 of your $10,000 portfolio into one new trade. You say, well, how's that going to get growth? As it grows, you keep allocating more. As you've gone from $10,000 to $20,000, you're now allocating $800 a trade. If you're up to $50,000, 4% of that's $2,000 a trade. So it scales with your portfolio going up and down. But this would be a $10,000 portfolio, would be up to over $96,000 before commissions, which, as we said, commissions are zero now. So, and the other nice thing about this is these stocks are all priced at $50 or less per share. So what that means is that even if you were, you don't have to have a $10,000 account. You could trade this with a couple grand or even a little less and still get up to our maximum invested position in about 25 of our favorite stocks with that 4% per trade allocation. So even if you're just getting a share or two, that's okay. Most of the trades we make are typically on $10 or less per share, but we can go up to $50. So what are these benefits of trading stocks now? Commissions are $0.00 for stocks. That's huge. You get to keep what you make, and there obviously the brokers have adapted with payment for order flow, and that's now coming under question. So it's going to be interesting to see how the brokerage space adapts. But this is the biggest breakthrough for us as individual stock traders in a long time, if ever. The other thing too is that when you think about what happened in the pandemic with the plunge in the S&P 500, where the S&P lost 30% in about 6 weeks from mid-February to late March, that the index is not really the smart way to get stock market exposure. Sure, the index has roared back, but as you know, when it came back last year, as the pandemic was causing a very uneven response within the major stocks and sectors. If you were in the right sectors like technology, you did well. If you were in the wrong sectors like airlines, hotels, gaming stocks, casinos, some restaurants, those were hammered still and really held down for quite a long time. So it's never been more important than ever to pick the right stocks. You've got to focus on what's really moving. The great thing about the stock doubler system, especially like when I look back at during the worst of the pandemic last March, we made money in March of 2020 when the market's getting pummeled. Why? Because we had vaccine stock exposure that we were getting. So the key being that, when you're in the right stocks, the right sectors, those were going up while the rest of the market was tanking, because investors saw obviously that vaccine stocks were going to be a big business in a pandemic world. So the reality is that's a great thing. Obviously, retirement accounts is another benefit. If you've got a traditional retirement, your gains are not taxed until you pull the money out. Then the bottom line is that you can let your gains keep compounding without the tax man eating up your ability to compound your money, compound your profits. Of course, Warren Buffett calls compounding the 8th wonder of the world, because it's been such a powerful factor for him, and of course, a powerful factor for you and me both. When we get that money, those gains continue to grow, and focusing on that. So when we go through just a basic look back at where this concept hit me, I don't claim to always have these ideas right off the top of my head. I actually evaluate sometimes what other people tell me and wonder if their view of the world is helping or hurting them. This is an interesting one, because if you think about this, everything we invest in is based on this word here, perception. You and I have a perception of what we think is, from everything we read, everything we hear, everything we see on the charts. What is our perception of, is that stock a good stock? Is it performing well? on the charts? Is it performing well in its earnings? Is it a quote unquote reasonable value? Of course, value can sort of cost you to missing out on some of the best growth leaders in the market. But there's still that sense of like, well, do I think it has further to go? Is it still a relative value? So here's the perception that I challenged someone else on. Was it basically, I did a live seminar many years ago, early 2000s, like 2003 or 4, I want to say it was, where I showed how I was making money on the stock Taser, TASR at the time. It's now, I'll show you the chart in a minute, AXON, Axon. They renamed it because, as you know, tasers became a little bit controversial as law enforcement was using them and people are getting tasered and lawsuits are happening and stuff like that. Well, the point is, as a trader, taser was going ballistic and the stock was going vertical. And the lady came up to me afterwards and said she never would have traded it because, and this was her belief, she said it was too far above its moving average. Have you ever had that thought that something has gone too far too fast and therefore you've, quote, missed out? And then you look back later and go, wow, it still had a lot more opportunity. I actually, when I thought I missed out, I was wrong. There was a lot more trend to happen. Everything I do at Big Trends is about finding these moves that will go further and faster than you and I would possibly expect. And this is really my ultimate method on this. This is this percentage above the 200-day moving average, which happens to be the black line in this chart. Got several moving averages. Notice over here on the right, in the bottom right, it's 100% above that 200-day moving average is my threshold value. So this is Axon, the former Taser, back going to 03 here, middle of 03. And notice the stock's already been going up, and it looks like nothing on the chart because it went up so much more. It broke 100% above that 200-day average, just under $1, and then it confirmed it a couple weeks later and closed above that first setup point, right at $1. So from $1, you see, where did the stock go? It went to $30 a share, and less than a year later. So that's the classic 30 bagger. We wouldn't get that, okay, based on the way that we trade and the way that most of these moves happen. We're more conservative than that. We shoot for a double on the original investment. So if we bought the stock at $1 a share, we'd sell half of our position at $2 a share. What does that do? If you put, say, you know, you got 1,000 shares at $1, you're in for $1,000, and that goes to 2. You're now up from $1,000 to $2,000. Take half of that money off the table, put that original risk capital back in your pocket. That $1,000 you cash out of, we sell 500 of those 1,000 shares at $2. There's your $1,000 original risk capital back. You now have the proverbial free trade. And at that point, you see that we've got a situation in which indeed we would then target a double on that double. So we would target going from 2 to 4. So it's yet another double here. And we would say, look, this is what we're after, is a double and then a quadruple. And then we say, thank you very much, we're done. Some of these, like the former Taser, Exxon, will go on to be even bigger winners. There's a few cases where I've missed out on some further upside, but there's a number of cases where some of these came back down. And if I just waited for the trailing stop to hit, the trailing stop is what? If we go back under that 100% threshold here, and then we break that low, that was happening right in this area here at about $13 a share. So you see it left like half of that potential max profit on the table, because if it comes crashing back down, you don't want to be riding that. Notice as it ripped back up to the mid-20s, it did not get back above that 100% threshold and follow through. It tried, bumped into it, stopped. We would not take that trade. So you'll miss a lot of potential fake outs this way and focus on the true breakouts, the monster breakouts, the ones that have the massive kind of potential to really launch into a much higher level of growth. You say, well, how is this possible? This seems very overbought. I believe it's because the institutions are just like you and I as individuals. Institutional investors want to make money too. They want to keep pouring it on things that are working, and they will get out of things that aren't working. So that's who's driving this, not you and I as individuals. It's the institutions that are really driving this kind of stock doubler's massive momentum. So my view of this is it's like a rocket launch. That the best stocks have a launch phase. The launch phase is it crosses over that 100% threshold. And I call that threshold the orbit level. That basically, as you know, once something gets into orbit and on these rockets, these billionaires are firing up into space, that once in orbit, you'll see those boosters peel off, and you know the fuel has been pretty much used, and now it's going so fast that those stocks would just coast higher a lot of the times on their own momentum. It's in that orbit phase. It's in that really sweet spot where this thing is just going to keep on cruising higher for a while. Once it comes out of that orbit under that 100% threshold and then breaks that key low, these stocks can fall quickly too. So one of the big lessons is do not fall in love with a stock that's made you double, triple, quadruple. If it's time to go, get out. And we said find stocks that can double in the coming weeks, and sometimes we're fortunate and do it faster than that. This was last fall, for example, with the stock. A lot of these stocks, by the way, when I find them on a MetaStock Big Trends Toolkit scan, I've never heard of it before. I'd never heard of this one before. Electromechanica vehicles, obviously a foreign electric vehicle EV stock. SOLO is a symbol, SOLO. We will never catch these quote unquote early. Notice the crossover points happening here in mid-November. And what we do is we don't buy off of that point. We said that high is what you mark. That was about $5. It must close above that $5 level and stay in that 100% or more overbought above the moving average. What does 100% above a moving average mean, by the way? It means that if the moving average is down here at, say, 2.5, then the 100% level would be 5. That, obviously, it was a little bit under 2.5 here because it was more than 100% above when it hit 5. There in mid-November on the setup point. But the next day it closed above that high, back about 6. You see intraday it got to about 8. We don't try to panic intraday. We say wait for the close. This is a daily chart. All these are daily chart examples. And I'm going to have Jeff run through the MetaStock Big Trends Toolkit setup here to see what other ones might be popping up. I suspect he might find some that are indeed quite interesting candidates as we've been seeing in this market. Stocks are getting hot again. With this market strength that we've had, and of course last fall was very profitable. Early this year was very profitable. We went through a little chop phase in the spring and even part of the summer, but more recently things have really heated up quite nicely. So think about this: if we buy at this next bars open here, which we paid about 6.25 to buy it in here that next morning after we got the confirmation. So that's where the oval is. And we were buying it in there pretty close to the high of the day. That happens sometimes. Notice we buy it around 6.25. It goes intraday down to almost $5. You're saying, hold on, you get me in something and it's down almost 20% intraday. That's how these stocks are. The stock's gone from 3 to 8. We're buying it at 6.25. It goes to 5. You don't want to panic on that unless it breaks back underneath this 100% threshold, which of course that doesn't happen here for quite a while. And so what's our first target? 6.25, multiply that times 2, you're at 12.5. You say, how's it going to go to 12.5? Well, you see in a matter of days, it got to 13. So we're selling half our position there at 12.5. A number of times you'll see on these charts where when we sold our first half at a double, they will stop there, whether it's briefly or permanently, we don't know. But what we know is, think about this, even if the other half of our position went back to a break even, back to 6.25 on the second half. If you sold half at plus 100%, the other half at 0, what have you made on the trade? 50%. A lot of times for a month's work, pretty healthy return. A lot of people that have my former options clients that have also gotten into, or current options clients that have gotten into the stock doublers program have said these are like options. They move that kind of quickly with that kind of profit potential, but they don't have the time decay. The time erosion is the biggest drag for an options buyer, right? Sometimes they happen the very next day. We bought Sensonics, SENS, at $1.60. Now notice, you'll see a lot of these low dollar stocks. There used to be a time where I really said, oh, that's too speculative. I don't want to trade that. Well, if we can manage our risk on the individual trade to just 4% of our portfolio that we allocate to trade this stock doublers program on any one trade, then it's just about execution and not worrying so much about if one trade goes ballistic and one trade goes haywire, right? It's, you can't lose more than you put into it. With this, you can make multiples of what you put into it. So it starts to put that reward to risk in your favor in a pretty significant way. And you can see here $1.60. So we bought it. Notice on the chart at the bottom here, and I can't wait for Jeff to help me pull up some current examples in the MetaStock software. But look, there's a setup point the next day. It has a red candle. That means it closed below where it opened, but that is a buy signal. Check market. It's closing above the prior day's high and around $1.50. We bought it the next morning at $1.60. Okay, so usually on most of these orders, we say get in at the market. Don't be left behind playing around trying to save a few pennies and missing dollars of moves, right? If you buy it at $1.60, what do you need to double? 320. Easy calculations, right? So we put out an order, say sell it at 320. Intraday that day it gets almost $3 from $1.60. So we're doing pretty well. And then the next day it opens here at 330, and we take just over a double, 106% gain on the first half of the position. Notice it did back off back to the low twos over the next couple of sessions after that. So once you get that risk capital back in your pocket, you can breathe a lot easier. You don't have this constant stress that a lot of people feel in their active trading, where they're saying, oh, what do I do tomorrow morning? What do I do the next day? What do I do intraday? You're not worrying like that. You're saying, look, give it a chance. Like Aptivo was another one. The next trading day got its target plus. This is, again, a stock I had never heard of before that week, APVO. Go look at these charts, folks, and you see that was November 4th when it crossed above there. Notice it's already way above where it was a couple days before. This is reminding me of where one of my trading mentors, Jim Bittman, prominent options teacher and trader, he told me, he said his mentor told him, how does a stock go from 1 to 100? I said, well, how? I said, well, it has to go from 1 to 10 first. Think about that. You're looking for that proof that the institutions are starting to pour on the gas. They're putting the pedal to the metal. Then we're getting that follow-through proof that they're continuing to pour the money in. This one had tens of millions of shares traded through this move here, too. That didn't hurt either. We like higher volume situations and have some volume filters that we won't take lower volume breakouts. But bottom line is that, so we're buying that next open there. And I remember it well. It was a Friday morning. It was November the 6th. This past year, you can see that stock was trading just above $21. So at just about $21, we're targeting 42 and change for our first target. And so 42 and change. And then after the close on that Friday, they had some good news. And the stock was up significantly higher. And then it's come Monday morning, this next trading day, it opens right at $50. Intraday goes to 60, and you can't play that game of kicking yourself. You're going, look, I saw half at 42 or higher. We happened to sell it at 50, and we made 142% of the first half of our position. So you've guaranteed yourself more than a break even. You guaranteed yourself a gain even if the rest of the stock went to zero. So it really gives you the opportunity to say, okay, this one didn't follow through after that, but basically we still averaged out at a really nice gain. Now, the power of doubling, as you know, we talked about compounding, is so powerful. I like to play golf because of the markets and how busy I am at big trends. I don't get to play as much as I would like, but I had a friend who, when we play, he likes to play for about $10 a hole, which is a little steep for the fact that I don't play that much golf, but it's no big deal. But bottom line is that I'm like, okay, I'll probably be donating something to him. But I said, what would happen if we said let's play for a penny on the first hole and let's just double it every hole? He's like, oh, that's chump change. I don't want to play for that. Well, look, after 6 holes, each doubler, 1 to 2 to 4 to 8 to 16 to 32 on the 6th hole, playing for 32 cents. No big deal, right? On the 12th hole, 6 holes later, $20.48 per hole. But look at this 18th hole right here. $1,310 would be playing for on the 18th hole. Once I ran those numbers for him, he said, yeah, let's stick with our $10 a hole. That was uncomfortable for him too. So bottom line is that this is just a penny double. Obviously, if you double $1 over those 18 times, you'd be talking about that final one would be 131,000 on that 18th double. Obviously, we're not going to double 18 times in a row, but the idea is if we can put the odds in our favor and let that compounding build, I believe it's why the portfolios had such an advantage through both up and down environments. As long as we can rotate into the best kind of fresh stocks. Again, names that I'd never heard of before. This was one from back here in June this year where semi-LEDS here, you can see symbol LEDS. And again, it came up. This was when we were watching back in May. Notice back here where it first broke out 100% above that moving average, it did not confirm. Once it crosses back underneath that threshold without confirming, guess what we do? We turn off the setup, put an X through it, forget about it, wait for the next time it crosses. The second time it crossed mid-May, it didn't follow through either, but the third time was the charm here. So there's the third cross right here, and then 3 days later, as it stays in that above that 100% above the moving average threshold, there's the confirmation points. We're buying in there the next morning. We put a limit order to buy it in this one at 12.5 because we were worried about it doing some crazy gap up. So we bought it in here at 12.5. And then obviously our target's easy to figure, right? 2 times 12.5 is $25. Look at how long it took. 3 trading days later, it got to 28 plus and then 30 on the next morning. And this is another one where you say, okay, look, we sold half of it there at 25. We're now targeting 50. It's not happening. We'll eventually get the trail triggered. But you can see you don't care anymore as to if it comes back down. Sure, you would like it to keep going up, but if it comes back down, this is where selling half at a double has always been for me, I guess. Maybe I'm a glass half full person, but I always say it makes it so much easier to trade whichever way it goes after that. Because if you sell half at a double and it keeps going, you're glad you have the other half position on for the potential quadruple. If you sell half at a double and it comes back down, you're glad you sold half at a double, right? You're glad you didn't take the greedy approach and hold it all. So to me, it smooths out your experience as a trader. It makes you a lot more, I think, consistent in allowing yourself a chance to stick with these potential big winners. Because I see a lot of people that are getting too antsy and want to take their profits too quickly, just basically not giving the trade a chance. ATOSA was an interesting one, ATOS, because we saw the first breakout and we said, you know what? It's a little bit too extended for my liking. I need to see a little what I call a retest. And so the retest is, let me explain the retest real quick. So the retest idea, if you were just following this on the original setup point here, you can see that it's actually over here. There's my first setup point. This next day after it trades above there, but it doesn't close above there. But then it does with this big surge where it goes from like 5 to like the mid 6s. We'd be buying in there at about 6.5. And we said, look, that's too extended when this thing is, this long-term average is down here near 2.5. That's just too much. We have to wait for what we call a retracement. So the retracement happens here as it tests back into that 100% orbit line threshold. So right into this area here, we're saying, look, this should be a good spot to buy into ATOSA. So we're buying it this next morning here. We're down just a hair on that first day, not much, but I think we paid, we bought it for like $4.15. I think it closed at like $4 that first day. So we're down like 4% that first day. And we're saying, okay, it's crunch time here. It needs to hang in right off of this low in this high 3 area. And if it doesn't, we're going to be out. Instead, you see what happens. It rockets back up and goes to $9. So by not buying it too high, waiting for what we call the retest at 4.15, obviously at 8:30, we're able to book that 100% gain. You see it goes to about 9.5 the next day, then starts coming back down towards 6. So really one of those where sometimes you don't want to chase if it's too far above the moving averages. So we teach our stock doubler subscribers what those threshold values are, where you shouldn't chase if it's too extended versus also where you should be willing to buy a dip where it's a good risk reward trade like ATOSA was. Plug Power, a lot of you know this one, PLUG, of course, really, really solid name. And this one just kind of a steady grinder last fall. We got our double right around Christmas time. And this is one where we sold the double at about $37, just under 37. And then it came back down here to 30 over the next couple 7 or 8 trading days. And I was getting emails from subscribers saying we should have sold the whole thing. Why do we hold it? It's like, relax. It's still a good looking chart. You know, it's kind of retracing back into the old highs, right? Old highs become the old resistance becomes what? New support, right? Classic technical analysis. And from 30, it launches to almost 74. That's what we needed for our 300% target to be achieved. Said, thank you very much. Booked it. Then it crashed back down into the 20s on some accounting issues and whatever else. So it's like, you don't get stuck holding the bag with these. You say, look, lock it and load it into the next one. Here's one where we did leave some profit on the table is Novavax. And this is one where this is from last spring, not 2021, 2020 pandemic spring. And the first buying opportunity was about a 30% loss in Novavax. You can see it went down there, stopped out when it broke that low right about in here. So that was a 30% loser. You cannot, if you lose on a trade and you get another signal, here was the next signal, and it took it about a week and a half or so to clear through there. And on April 6th, it said time to get back on the wagon here in the high teens, almost 20 area. So you say if you pass on that because you lost on the last trade, you're really kicking yourself, because of course 20 goes to 40 here on this gap up, big vaccine name. And then of course we need 80, and you're going 80, you're never going to get 80. Well, boom, you got it right in here. There's 80, and it went into the mid 100s. Of course, now it's much higher than that. So it's just showing you that you have to be willing to pull the trigger and say, okay, it's still about no one trade is defined by its last trade. It's all about finding these opportunities. Super League Gaming, this is another one I never heard of, kind of this esports world trend. This is one that was too extended on the breakout. The official breakout was clicking in off of this close right here. We said that's too extended. Let's wait for the retest. And 2 days later, we got it. We said we want to be a part of this on this particular bar on March 8th. We're into the trade. 5 1/4 was our entry. We were down to 4 1/2 intraday. No worries. We said, look, going for 10 1/2, and you see a matter of just less than 2 weeks later, 10 1/2, saw half at a double, and let it run from there. I mentioned how March of 2020 was profitable for us. Part of the reason for that was when everybody else is getting creamed on the market 30% drop, that Inovio is one of the big drivers of our success during that March pullback for stocks. Why? Because it was another vaccine name that was speculated to be a big winner because of it. There was the first breakout point here. Again, you can't be shy with these. Once it breaks out and closes above there, if it's not hitting that too extended level, which this one was not there, we said buy that next bar's open. So we bought Inovio just under $10. You see in 2 days it went to over $20. So we're selling it out in this gap up here right into 20 and saying sell half at a double. Look at what happens over the next day and a half. It slams down back to under where the buy area was, down to about $8. There's a retest, right? That retest has to hold. It does. There's another retest. You talk about trains leaving the station and saying, you know what? How many times is the train going to give you a chance to get on before it's just gone? Well, this time, the third time was the final chance you got to see these retests, great risk reward entry points within these bigger uptrends. These orbit phases, as I call them, give you that beautiful re-entry spot once you're watching those ones that have been staying above that 100% threshold. I think controlling your time is as important as controlling your price risk and your investment dollars, because you want to make sure you're getting great bang for your buck in time. And so I see too many traders who are way too reactive. And I find that basically stepping out of that moment by moment, tick by tick noise, and actually saying, you know what, I'm going to take a step back. It's like if you look at the impressionist paintings up close, it just looks like a bunch of flecks of paint blobs, right? If you just take a few steps back, you can see the bigger picture and enjoy what's in front of you and take advantage accordingly. So bottom line is that this proactive approach, really focusing how to plan on a day-by-day basis after the market closes, ready to go for the next market open, makes things much easier. Now, I'm sure you've had this experience. I've had it enough times, too many to count, where you buy right as you buy the breakout, you see that right away, initially you're wrong, okay? And I go, you know what? I can handle being wrong as long as I'm not going to stay wrong for long. I buy here on Overstock. The next day, it tanks down. This is a retest. So we're in that prior day at about $30. It tanks down to the mid 20s. Takes about a 12 to 15% hit that next day. You go, man, I hate starting that way, but that's the retest. If that low had been taken out in a future day's close, we would have bailed on that trade and taken our 20% lump or so and moved on. But instead, it holds and it just starts grinding. This is last year during the pandemic summer, as Overstock was, of course, a big online beneficiary of retail spending as people were holed up at home. And so Overstock, you say from 30, well, we need 60. Well, then we need 120. Well, got both of them. You can see just how powerful that is. how does this work on the Stock Doublers recommendation program we have at Big Trends is that we'll call out these trades for you. This is just an older sample trade on Workhorse Group, electric truck play, WKHS. We're not recommending that right now, but this is over a year ago, just to purposefully show you an old example here. You can call our 800 Big Trends line and look for new examples and samples as you wish to kind of get a little more freshness there. But bottom line is that we called out Workhorse, and you see there's a setup point happening here. The next day it gaps up, closes above that high, so that's where we're calling out that alert on the night of that June 23rd email. 6 p.m. Wall Street time gives you plenty of time to place your order to get in at the market the next morning here. We bought it under 8, and you can see that I think it was about 7.5-ish, and then you can see it, we needed 15. That first move went to a little over 20. And so we sold half at 15-ish, and then you're stuck waiting for almost 2 months. Not much happening. If anything, you say, gee, it's actually gone down a little bit from that peak, of course, in early July 2020. And you can see just that's a longer term consolidation. Look what's happening to the percentage above the average. It's gradually coming down, but it's never getting back into this key retest point here. So you're never bailing on the second half of the position. You just say, look, time is on your side with these trades. When you say, hey, this is a consolidation, we've already sold half at a double, we're just waiting for the next move to develop. It does, of course, and then you can see we go from the mid-teens to the 30 area, take out our quadruple. So what it looks like when we say time to get out of the next piece is we'll say put a good till canceled order. So you don't have to keep putting orders in every day with this. You say, look, we've already sold half at a double. Now sell the other piece at our final target of a 300% gain, which for us was 28.84 or higher. So that's just sitting out there working for months if needed, or if we say we got to get out and time to go ahead and cash that in. So the key elements of this are you've got to get that follow through. I call it confirmation, that the daily close has to confirm above the first bar the first bar's high that we got that first setup here above that 100% over the moving average threshold. So we're going into orbit and it's continuing to go. When we see that, we say time to buy it. Let's get on the next morning's open, 6 p.m. Wall Street time. So you got plenty of time to act ahead of the open 9:30 the next morning Wall Street time. Now, when we have these violations, so we don't get our first or our final target, if it closes under that 100% line's key first low and we've had a retest, then we say blow this thing out, get out, move on. Time to go. Let's not hang around when it comes out of orbit here. The big trend is your best friend. Don't trade any old breakout. Don't trade for action and activity. Trade for results. Trade for the ones that the institutions are really pouring the gas on. We had GameStop. We had AMC. We've had a lot of these kind of names in there. When the gas gets poured on those high short situations, it's even more powerful. So it's really an interesting dynamic where you say, look, you just give the trade a chance. And that's what I see a lot of traders not doing, is just following the system, getting clear about, okay, building a portfolio of these names, knowing some will work and some won't, but the upside is so much more dramatic than the relative risk. We do weekly video training, so you can know about that. If you came in late on my presentation, I was mentioning a $10,000 portfolio up to over 96,000. That's an 86 grand profit before commissions, which, as we said, is no commissions on stock trades, knowing that the past performance over the last 2 3/4 years does not guarantee the future results, knowing that it's going to be better or worse in the coming times. But point being that we're always monitoring this for our subscribers. A couple of new ones that we just have booked to show you that it's still working well. These are names I'd not heard of either. Aero Century, ACY. Have you heard of it? Maybe now you will, but basically it was just popping up on our scan here. You can see in late August. So there's our first cross point happening here. And you can see, like, man, you're not early there. By the time it closes above there, it's been the 25-ish area. We bought it at 24.57. So you can see we're not early because the stock was just at 15, right? And look what happens. We have to endure it coming back down into about the 16 level right at the retest. If you like to wait for a retest, that's your golden spot to say, man, that's doesn't get any better than that for a risk reward entry right there. But why don't we wait for that? Because some of them, like Workhorse, I showed you, or other ones, will never give you that entry point, and you've left too much money on the table waiting for a better entry point. So we just say, look, our data says better to get on board. If you have to ride down a little drawdown along the way, it's worth it for the not missing out on some of these really big winners. So from 24.5, what do we need? Almost 50. You can see just this last couple of days of this market move here, you can see it just popped up to that 49 level and change. We got our target on that was just hit this week. So just I think it was Thursday, and you see then Friday it went to, it looks like over 60. Obviously we need like closer to 98 or so to get our final target. We'll see what happens. Still holding half the position. Same thing with PDS Biotech. This one we've held for quite a while, actually. We've been in this one going back to May. And this is one that we bought at 867, that first wave up. It didn't quite get to our target. It got to maybe 14. And then we needed obviously closer to 17 and change. Didn't happen. And then we went through these key multiple test points, and the retest was happening right into this level here. And look what's happening. If I could draw a straight line, it comes close to breaking a couple different days, but it actually never breaks on a closing basis. This is why we wait for the closes on PDSB. It allowed us to hang in there, hung around $10 for a while, and then boom, just popped up here this week, cashing out the first half there, just over 17. So you can see that was taking a little more patience, but hey, it's still been a beautiful thing. Now, I want to bring in Jeff in just a minute, but I just want to say, if you are interested in us doing the work for you, we've got a great special. Usually a year of the stock doubler service would be $39.97, almost $4,000, which you can, as you saw from our history, is well worth it. But actually what I'm doing here is saying I'm going to slice that down to give you not just a year, but 2 years access to my recommendations for stock doublers opportunities for just $997, and throw in some nice bonuses with a stock trading bootcamp that I did to really go in deep on this stock doubler strategy and the rules and settings, everything you need to know, and those overbought levels, those thresholds, and a weekly video update. You get all that together for just $997 for the next 2 years access at members.bigtrends.com/SDO24, SDO letter O. SDO24 gets you that 24-month special for about 90% off. So pretty phenomenal. But Jeff, I would like to ask if you could come in and show on the MetaStock Big Trends Toolkit how folks can see the power of finding opportunities in current markets with the awesome explorations that you guys can do in MetaStock.
Turns out I have to unmute my microphone twice to talk.
No worries.
What I said to the microphone, or to the muted microphone, is absolutely I'd be willing to help. We did have one question from YouTube that I promised I'd asked you. Chris says, I have a pretty good method of finding long trades in MetaStock. I'm paraphrasing because I don't have it right in front of me. What do you recommend for short trades? Do you have any recommendations around finding good short trades?
It's a great question, Chris. And what we actually did is we have followed some of the inverse ETFs. So you've got inverse ETFs like in natural gas and oil, and of course the broader markets as well. And some of them are leveraged. We've had some success trading those. We felt that they were probably a little bit too high risk for the typical average investor. So we've actually not included it in our stock doublers program because they're not stocks, they're inverse ETFs. But that's an area that I would consider one way to give yourself some bear market protection. But the other thing, like I showed you in March of 2020, is that this strategy rotated to where the money did go. The way that most institutional investors are chartered to have to do business is they can't, if they don't like the market, if they think the market's too risky, they can't go cash out and just go sit on a bunch of cash. They've got to rotate that money into another stock investment that, or whatever other their things their charter allows, to say, stay invested in something. So that money's usually sloshing around out there looking for a home somewhere. And so that's my view, is that we're going to find what that next phase was. In the first half of last year, it was vaccine stocks. In the second half of last year, it was electric vehicle stocks. Earlier this year, it was a lot, and tech as well. And it was some tech as well starting off the year. But then earlier this year, energy got hot, and we had some really nice energy ones. And like I said, I've got a brand new one for Stock Doubler subscribers to get into on Monday morning. So make sure you're ready to take advantage of that, because we do believe like that you can really think about it, you can average about a triple on one of these that hits both of its targets. And you say, so the double on half and a quadruple on the other half. And you go, well, what are you putting in per trade? If you're putting in even $500 in a trade, there's a $1,500 profit when you can get that, or at least $1,000 profit. And so basically saying, okay, that could pay for itself in one trade, potentially, no guarantees, but I just hate to see somebody miss out on one of those trades and then look back and say, oh, I wish I got started earlier. Usually, folks, one of the things that I remind my Big Trends coaching students is that whatever you're doing in trading, be decisive. Be decisive about that. You know exactly what your plan is. You know exactly what you're doing. If you have no idea what you're doing, then wait. Get clear about what you're doing, and then when it's time to take action, act. And so that's what I tell people about when you see a great value on these kind of specials and stuff that I'm sure a variety of people have today. Is when you see one that resonates with you, don't sit back and wait. Take action, put it to work, and give it a chance to do what it's supposed to do in helping you build wealth over time, not off of just one trade. Don't plow all your capital into one trade. Don't do dumb stuff that won't allow you to stay in the game. Stay steady and consistent in your capital allocation. That's the one thing I remind my subscribers. Don't mess that up with this strategy or any other good strategy. If you get greedy, that's what will usually kill you in trading. And so to me, just stay consistent, stay steady, and know that there's going to be wins and losses, and let the system do what it's supposed to do to get you there over time.
Well, days getting longer. I keep talking into the muted microphone.
No worries.
All right. So the package for that, or the website again for that, is right there on the side for you. members.bigtrends.com/SDO24. So yes, and let me show you the toolkit. I actually ran a scan to show you kind of how easy it is to find these things. All right. Thank you very much, Price. Appreciate it.
Thank you.
All right. Very cool. All right, let me go ahead and turn the presentation back over to me real quick. Actually, I'm going to real quickly do that just so that, and then let's go ahead and share my screen. Okay, and then I'll show my screen. Okay, and I'll do this too just for, okay. All right, very cool. So as you can see here, like right here, what we've got is I ran this percentage above the 200-day moving average. And this is one of the systems that is included in MetaStock. In fact, it might be in the MetaStock toolkit. One of the things I actually am going to kind of talk a little bit about what's included here in terms of methodologies real quick, and then I'll show you how the scan works. And of course, it's got commentary. Price actually was the template for what I consider good commentary when he put together the initial commentaries for his system way back when. It's like, that's really, really good advice. It helps underscore the power, how powerful having commentary and having explanations are. And so a lot of things that he put together was just kind of a template in terms of how, in my opinion, a good strategy should look, how good a commentary could work, and stuff like that. So we're on the third version of Big Trend Toolkit just because it's been as popular as it is. And Price spent a lot of time today talking about percentage above the 200-day moving average. But all in all, there's about 18 different methodologies, including a very unique scoring system that actually combines his indicators into a score that basically range from 100 to -100. And I like that scoring methodology that we came up with so good. I actually went in and put it into all of the systems, as you'll see in just a second. We're not going to go through all of these methodologies just due to time. But I love it when Price talks about the Tesla example, because not the Tesla, the Taser example, because I remember for months and months and months and months, I had a customer, I was working at MetaStock at the time, that was like, you should buy Taser, you should buy Taser, you should buy Taser. And finally, one day I listened to him, and I actually ended up buying that stock. And that day, it just rocketed up. And it was the biggest trade I had ever done. And in fact, it was up so much. I was a brand new trader at the time. It was up so much. I was like, oh, well, I'm going to get out of that trade. And I did. I got out of it at the close. It was a very successful. It was, to that point in my relatively new trading period, the best trade I had ever done. The next day, not too much happened. You had a bit of a doji bar that existed on the chart. And then the next day I came in and I was like, I should do that again. What could possibly go wrong? And well, of course, that doji was the very top. If you look at the chart of Taser, that was the very top that it had ever been. And I bought it at the open, sold it at the close, and gave back all of that trade. It had the worst trade that I had had for quite some time at the same time. So the fact that, but the point is like a lot of these stocks, they'll get in these huge run trades. It wasn't until years later that we kind of sat down with Price and, he had put a strategy around kind of capturing the stocks that go into orbit, as you speak. And, putting sound strategies like, let's just see what happens, putting sound strategies in place instead of, the way that I actually traded it. It wasn't a terrible trade. It was, but I did give back all my profit from a couple of days before. So in any case, what we've got here, though, what I want to show you right here is the scan. So I'll just kind of walk you through this. I ran this as Price was talking. If you look right here, ran it at right about 1243. So just a few minutes ago, we kind of ran it. And what I did was I actually ran the percentage above 200-day moving average. So that's just one of the scans. It looks for stocks that are at least double their 200-day moving average. And I ran it against all of the optional stocks. So that's a list in MetaStock. There's about 4,500. And we actually, as this list was running, I was like, I'm going to have to make this list a little bit bigger, because a lot of times the stocks that will have these type of doubling moves are stocks that aren't even optionable yet. But in this case, we got to almost done, and actually two stocks came up, or two instruments came up. One of them is an ETF at Boyle, and the other one is at INMD.O. So those are the two stocks that came up. And again, this is why I like MetaStock. You can run a scan. I just went through 4,524 stocks. And if this is the method that I want to trade on, if I want to find stocks that are if I want to find stocks that are going up exponentially, I can look at the two that just did. So here we've got InMode LTD. You've got Precious Natural Gas. I've already opened up the chart. So here's InMode. You can see kind of the trend that's kind of developed, and all of a sudden it's just starting to spike, and you're getting this buy signal on the chart. Okay, that big trend score, what we're giving is it is a 90 score rating, and it just basically gives you some advice in terms of what you should do. So this tells you a little bit about the system. This tells you what you should do with it, and it's just kind of an entry to get in. The other one that was actually issuing a signal to get in was the natural gas one. I've got that chart open as well. Here we had a buy that kind of faded. We're getting a buy signal again, and there's your those are the two opportunities that exist in the chart today. Should give you kind of an idea of what they are. That's just two of the methods are based on those kind of escalating growth. In total, there's 17 experts, 17 explorations, 17 system tests, and 18 custom indicators that we've put into this package over the 3 iterations that we've put together. Price likes to kind of refer to the Big Trend Toolkit from MetaStock as the most complete collection of toolkits that he's ever provided. And I just love the fact that with the new version, we added a couple of new systems, but we've also put together like a scoring method that actually goes in and kind of identifies things for you. So it's a great add-on. It's been extremely popular. And normally it's $6.99 as a one-time cost. We do offer it here today at the session as a webinar special for $5.89. Actually, that was supposed to say $5.99, but it looks like we're going to run a manager special today at $5.89. Again, we do offer that with a money-back guarantee. So 30 days, you can evaluate it. Give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat as well. It is also part of that the big trend, the MetaStock Summit Action Pack. So as part of that, you'll get some of my favorite add-ons, Candle Profit System, and we're on 2.0 of that one. You'll get the Trender. You'll get Trade Trend by Jeff Tompkins. You'll get 3 months of that. You will get Anne-Marie's Target Rich Trades, Price Headley's Big Trend Toolkit. You'll get Learn MetaStock, which is a website that kind of specializes in helping you learn MetaStock. We just hired a new sales guy. I had him go through a bunch of the videos on learnmetastock.com because it's such an effective way to get somebody up to speed on our software that's been rated #1 for 27 years in a row. We'll get you Unleash the Power of MetaStock. We'll get you 2 years of Stocks and Commodities. They're going to throw that in for free. All of this is available with a money-back guarantee for $19.74. So give us a call if you'd like to take advantage of that. 800-882-3040 or metastock.com/saleschat or metastock.com/summitdell. I'll encourage you to try it. We're going to spend a little bit of time now talking a little bit about the tools that are available in MetaStock and what's helped us get that best rated in its price category for 27 years in a row. But I'd encourage you to try it. I use it every time I trade. I would say I use it every day, which is probably pretty close, but I definitely use it every day I trade. So, which I try to do every day. So, metastock.com/summitdell, 800-882-3040, or metastock.com/saleschat. Andrew, and yes, we do offer with this package, Bill will give you a money-back guarantee as well. Audrey asked for that website again. Let me see. Did we get that into chat? Just we'll get the link for you, Andre. Just get in touch with us. I don't have it right in front of me, but just get in touch and we'll send it over to you. Okay. All right. Do want to say thank you to our sponsor, Stocks and Commodities. Great magazine. Get a free issue. Metastock.com/Trader Summit. Okay. And I do want to thank CMT, the CMT Association, the Chartered Market Technicians Association, for sponsoring the show today. They're such a great organization. They do training and licensing for some of the biggest brokers. I'm not sure. I'm trying to find the right word. It's licensing is not the right word, but they do have the CMT designation that you can earn by going through classes with them. They also do a lot of classes around risk management, quantitative systems analysis, portfolio management. They're a brand new sponsor to the Trader Summit, but they're a hugely respected organization. We want to thank them for kind of helping sponsor the event today. And we want to welcome to the Trader Summit. So check them out, cmtassociation.org. Can you add tools, add links for the tools and courses in the description? You can get all of the deals at metastock.com/summitdeal for what we're talking about today. So I've been told multiple times that this picture of me needs to be updated because I look more handsome today than I did when it was taken. Well, maybe they didn't use those exact words, but that's what I heard. In any case, though, I am up next. I'm going to be talking a little bit more about MetaStock. And as such, I'm going to go ahead and read a little bit of a disclaimer. So today's demonstration is designed to instruct you on MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Greg just brought me a Halls, but actually I swallowed a little funny. I don't think I need it. So in any case, thank you, Greg. Let me kind of just talk a little bit. I'm going to go ahead and take this off. It makes me a little sweaty And I don't need it right now because I'm going to be talking for a minute. You can read this if you want to just kind of give you a little bit of a background on me. I've worked here at MetaStock in March. It'll be 25 years in a row. And I absolutely love it. When they initially hired me, I didn't know like what a stock was or what a future was. Kind of picked it all up as we went, so to speak. For about the first 10 years that I was working at MetaStock, I worked in our inside sales team. And so if you had a question about MetaStock and you called us on our 800 number, which is 800-882-3040, there's a good opportunity or a good chance, one in maybe a 20% likelihood that you talk to me. We talk a lot about how you're trading and what you're doing with trading, and I absolutely love that. I did that for like a decade. For the next decade, I worked in what we call our business development team and different roles there. But most of all, like kind of my responsibilities with that was to kind of talk to people like the people that have been here today, like Price Headley, Steve Bigalow, everybody pretty much that we have here today, and all the partners that we work with are people that I've called and kind of talked to them about MetaStock with, unless they were working with us already. But I learned a lot, and it's been a really good opportunity for me. I'd say Price Headley, I've learned a ton from. Steve Bigalow, everybody here today. But there's been a lot of mentorship opportunities when it comes to my trading. And so for about the last 5 years, I still run all of our U.S. partner stuff. I run our webinar stuff, and I'm in charge of the sales team. And I really, a few things that I'll say about MetaStock. It's a great company to work for. I like the fact that on purpose we keep more people in our support desk than we keep in our sales and marketing, because we take really good care of our customers. We survey everybody that calls our support team every week, and it's not uncommon or unusual for them to get a perfect 100% rating from when they talk to support. I think Greg is back there saying, stop pounding the desk. I think that's what he's trying to tell me. But in addition to that, I can't hear you, Greg. So, but in addition to that, it's a good software program. It's something that I use in my trading every day. And I'm just getting better and better. I just had my best year trading ever. So it's a great software program. I absolutely love working here. And the company culture is pretty awesome too. So in any case, the one thing I hopefully you read all that. When I started, we were owned by Reuters, who then became Thomson Reuters, and now is Refinitiv. But we have a really good relationship with them, even though we purchased ourselves back from them. They have one of the best data feeds available. And they power that data feed. They use it to power the Zenith platform and all of our MetaStock platforms, which has been very beneficial for us, because as part of that, we've been able to provide data to people that are interested in using MetaStock in India, for example, or in London, or in Australia, or in Malaysia. All of those are really big markets for us, and we can provide data for almost 300 different markets. So, and it's one of the best data feeds that are out there. It's one that's trusted by like institutions and brokers and all that kind of stuff. We are no longer owned by MetaStock. We bought ourselves back from back in 2013, but we still have a really good partnership with them, and it's beneficial for both of us.
Hey, Jeff.
So,
sorry, can you hear me?
Yes, Greg.
I wanted to mention a few things. One, you neglected to mention that in 2021, you were voted the official poster boy of MetaStock.
You can get the Men of MetaStock calendar at the link.
But more importantly, what you just said is we are no longer owned by MetaStock. And I think what you meant to say was we are no longer owned by Thomson Reuters. And that seemed like too big of a mistake for me to pass by.
Okay, yeah. We're no longer owned by Thomson Reuters, but we have a good relationship with them. MetaStock is not a company that exists. We do business as MetaStock, though. Thank you, Greg.
You're welcome.
All right. I'm going to take these off.
Okay.
All right. Very cool. Okay. All right. One of the things I would like to mention is for 28 years in a row, it's been rated #1 in its price category. So there you go. No, I am not muted, Greg. Not at all. All right. So today we're going to have a little bit of fun. I'm going to talk a little bit about trading plans. We're going to show you how to use MACD. I'm going to show you how the MACD is calculated, how you can put it on chart, and how you can use it to 3 different ways find trade opportunities, or analyze it in 3 different ways, I should say. We're going to talk a lot about trading and system testing and that kind of stuff. And I'm going to show you kind of a little bit more about our scanner. So in any case, you guys might have heard of Richard Dennis. If you haven't heard of Richard Dennis, I would recommend you go to wikipedia.com and look up Richard Dennis, because it has a little bit of a story about kind of him and what he did. But to kind of say it in a very brief way, Richard Dennis was a very, very famous futures trader in the 70s and I think 80s. The Wikipedia article is probably right, or the Wikipedia article's right. But he actually specialized. What they did is he was very, very famous. He was very, very wealthy. He was a very good trader. And he was kind of a bit of a contrarian by nature in kind of the strategy that he used when he was trading for himself. But as a very good trader with a lot of respect on the market, he felt like you could teach anybody how to trade. And so him and his friend, Bill Eckhart, had a huge disagreement about whether or not you could teach people how to trade. And so they in order to settle this bet, basically what they decided to do is they formed the Turtle Traders. They put ads in the newspaper. They brought in, I think it was like, and this could be wrong, but I think it was like 18 male traders and 1 female trader. And they taught them over the course of a few weeks how to trade. And after they were done with that, they kind of kept the ones that they want and they funded them. And they funded them anywhere between $250,000 and $3 million. And they used their own money. So here's some money, go trade it, follow these rules that we just taught you. And it was a successful experiment. I mean, it was insanely successful. And I can't remember right now exactly what the percentage of gain was over the initial time that they were running it, but it was one of the most famous trading experiments in history. And one of the things that I like is this quote that's up here. It said, I could always say you could publish my rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. And I think that's really, really kind of one of the key things about trading. Today, I'm going to kind of spend a lot of time talking about how to look at different trading systems, like when to buy and when to sell, when to get in, when to get out, all that kind of stuff. You can evaluate a lot of these methodologies and see if they make sense using technology because it's objective and not subjective. But one of the things that you can't do is instill discipline. And a lot of times we'll go out and in the before the global pandemic, we would talk to people about, one of the questions I would ask when we would talk to people in person is, what do you think is the best profession for trading? And it was a question that I'd make people answer, and you get a lot of, well, I think the good profession might be a psychologist, which is a really good answer, actually. Or it might be an engineer, or it might be a doctor, or it might be something along those lines, right? And it's quite interesting, actually. Psychology is actually a pretty good answer. A couple of the people that we work with, most notably Dr. Alexander Elder, was a psychologist. Jake Bernstein, who is another person that I have great respect for, was a psychologist. But the answer to this is actually the best profession is an airline pilot. And the reason is because of discipline. And because they always use a rules-based approach when they're looking at trading and when they're looking to get in and out of trading. And if you want me to name drop a couple of the pilots that we've worked with, we've done work with Chuck Hughes, who actually was an airline pilot. And we've done work with Greg Morris, who actually was an airline pilot and then moved on to run a huge mutual fund. So there you go. It's an airline pilot. Let's try and stay on topic a little bit here. But the discipline is kind of what I want to talk to you a little bit about. But mostly what I want to talk to you about today is trading plans and trading strategies. So you might be able to guess who this is. This guy is a guy by the name of Gerald Appel, and he invented an indicator that you might be familiar with. It's called the MACD, and we're going to talk a lot about that. What I want to be very, very specific about is, like, I'm not recommending the MACD. I am recommending full-heartedly a rules-based approach to trading, but I'm not recommending necessarily the MACD. It's a great indicator. A lot of people use it. A lot of people use it in their own trading. But what I want you to understand, really what I want you to take away from it, is when you use system analysis, you're looking at a market in a very objective way and not a subjective way. So the MACD that we're going to talk about is a trend following indicator. It's also a momentum indicator. And like I said earlier, we're going to actually look at 3 different ways that you can kind of look at the MACD to get signals off of a chart. So this is probably where we're going to get out of the PowerPoint, and we're going to kind of get into the MetaStock program. And what I'd like you to do is just give me a couple stocks that you might be interested in. So if there are stocks that you're interested in, type them out. And and then we'll go ahead and look at those stocks. Let me go ahead and kind of clean up. We've been running all day here, so I'm just going to close all the charts that I have open. And give me a stock symbol, please. Open. Any stock symbol will work. Okay. All right, GGG. Hopefully that's a stock symbol and not just good game. GGG. Let's make sure that that opens up. GGG.O. Okay. All right, now Baba. Okay. Now we're getting some stocks. Thank you, guys. Good. Okay, let me go ahead and open up GGG. We'll start with GGG. We'll use some of these other ones when we start to do some system testing. I have to say that I don't think I've ever looked at GGG. I'm pretty sure I would have remembered it at least. So let me go ahead and kind of clean this chart up a little bit. I didn't mean to open it with this template, but I just want to kind of get it to a state where it's kind of clean. So let me go ahead and detach the chart. And what I'm going to do is just delete the indicators. We're just looking at a candlestick chart right now. Now, candlesticks just happens to be the default. One of the things that you can do with MetaStock is there's about 9 different charting styles. If you want to do, I like the kind of the flexibility of MetaStock. One of the things I would say, if you're getting new to MetaStock and you're just kind of getting used to the platform, we try and kind of keep the interface very similar to what you might be used to with Excel or Office or other Windows products. So anytime you want to change something on a chart, it's pretty easy. You just double click on what you want to change. If I double click right here, I can go to candlesticks, I can go to bars, I can go candle volume, equivolume, point and figure, whatever. 3-line break, Renko. There's a lot of different charting styles that we can use. I'm just going to go ahead and leave it on candlesticks, which is generally what I look at. And in addition to that, I'm going to start adding a couple of indicators to the chart. The first one I'm going to add to the chart is going to be MACD. Okay, so I'm going to come in here, and you can see that this is our demo machine. These are kind of the indicators that we've used recently. And they're actually put at the top because this is the most recent used indicators in here. Okay. Underneath the most recent indicators, there's a couple of hundred other indicators that you could apply to a chart and add and use in your analysis. For right now, though, I'm going to do MACD and go ahead and drag it on the chart, and I'm going to drop it right here. Okay. And we'll go ahead and kind of leave that as a 9-period simple moving average. And real quickly, though, I'm going to actually change something on the chart. So again, I said if you want to change something on the chart, you can just double click on it. I'm just going to double click on this line here. I prefer to look at this MACD as a histogram. So I'm going to look at it as a histogram. Okay. And that's fine. I'm also going to thicken it up. And you can see that, like, it's pretty easy to do this. Again, anytime I want to kind of make changes onto the chart, I just kind of click on what I want to change. And the only reason I'm making it a little fatter than I normally look at it is so you can see it better. Okay. One of the things I want to kind of talk a little bit about is kind of how this is calculated, first of all. It surprises me even how many people use MACD, but they don't have any idea how it's using. So hopefully this isn't too simple for you. But one of the things that you can do in MetaStock, I'm going to come in here. I'm going to right click on this indicator. I'm going to go to help. And I'm going to just pull a couple of things out of here. So the moving average convergence divergence indicators can be calculated by subtracting the value of ignore this, 26-period exponential moving average from a 12-period exponential moving average. Now it's fractional. When Appel developed the indicators, he didn't use whole days. He used a 0.075 and a 0.12. But the closest values are those of a 26-period exponential moving average and a 12-period exponential moving average. And I'm going to pull both of those on the chart right now. So right here, we're going to go to moving average. I'm going to go ahead and drop a 26-period exponential moving average. Okay. Okay, and then I'm going to drop a 12-period exponential moving average. And before I plot this one, I'm going to actually make it a little bit thicker. Again, I want you to be able to see it. So, and then we'll go back to this red one here, and we'll make it blue, okay, just so you can kind of see the difference between the two of them. Okay, we'll go ahead and click on OK. Okay, so actually that's not blue, that's blackish, but it's different. All right. If I wanted to calculate the MACD, then the MACD is this red line here. The only thing I'm going to do is I'm going to take the value of this shorter period moving average and subtract it from the value of this longer term moving average. So with Gerald, he used what's equivalent to a 12-day. You subtract that from a 26 period, and you'd get the value of this red line here, which on today was about 1.42. Yeah, that's right. That looks right. I was just kind of verifying that that looked right here on the chart. Okay. You plot that over time, and that gives you the value of your MACD histogram. That's all it is. It's just the difference between a shorter period moving average and a longer period moving average. That's it. Okay. Now, the way that that allows you to measure trend, and let's say momentum as well, is if we're in a trend up. Let's say if we were to look at this part of the chart right here, I think you could all argue that the trend is up. Well, as long as you're in an uptrend, a value of the MACD is going to be above 0. Okay. If you're in a strong uptrend, it's the value between this moving average and this moving average is going to be bigger. So that's how you look at momentum with it. In fact, like one of the ways Gerald, actually I'll save that for the second way Gerald looks at it, but you can use it as an overbought, oversold type of an indicator if it gets too stretched, okay? If there's not a lot of momentum in a chart, let's say that we're just going kind of a bit sideways as you are right here, your MACD is going to be generally flatter in nature because there's not that big of a difference between your shorter moving average and your longer moving average. And the same is true as if you're in a downtrend. And this is all fairly simple. A lot of the technical analysis that I like, particularly, is very simple and very straightforward. But if you're in a downtrend, then the value of your moving average is going to be lower, and it's going to be down below 0. And if you're in a strong downtrend, it's going to be way below 0. Okay, but that's all you're looking at. That's it. You're just looking at those two moving averages and how far they are away from each other. If you have questions, make sure to ask them. You are welcome to. If you see me looking over here, I'm just looking to see if you have a YouTube question. And if I look over here, I'm looking to see if you have a GoToWebinar question. Okay. The blue line is another moving average, actually. And by default, that moving average is a 9-period exponential moving average of this difference in price. So you've got your red line, which is a difference in price. You've got your blue line, which is an average of that. Okay. Gerald calls this a signal line. So, and the way that you use it when you're trading is you use it in comparison with the MACD. So if I look at right here at the very edge of this chart here, right here, it was above its signal line, and right there it went down below its signal line. So you see right here for just a couple of days it was above its signal line, it crosses down below its signal line, and that basically, when that happens, the MACD is bearish. Okay, when it crosses up above its signal line, it's bullish. So for a few days, if I bring this horizontal line tool here, right there it went into a bullish phase, the MACD crossed above its signal line and then popped back down under. Okay, if we kind of keep looking back a little bit further, it was bearish for this period of time, and then it was bullish right here to about right here. But I think you get the idea. one of the things that we can do, and we've been playing with all day, is we can put on the expert advisor that matches MACD, and it'll help us identify these bullish and bearish areas. So that's what I'm going to do. I'm going to basically attach here our expert advisor. There's an expert in here called the MACD by MetaStock. So we're going to go ahead and find that. I'm going to go ahead and attach that to the chart. Go ahead and click on close. And it's going to tell us when that MACD is bearish, when it's bullish. That is clearly identified on the chart for us. Okay. Before I go much further, I usually like to talk about the systems that are included with MetaStock. And there's about 40 of them. So we're looking at MACD, and we're looking at the MACD expert now, but there's other experts that are kind of built around different things. So there's one that will actually show you all the candlestick patterns, that the single day candlestick patterns that exist on a chart. There's ones that are built by Martin Pring, has a couple of in there. There's all kinds of different experts that you can attach to a chart. And the main purpose of them is to help you explain a different indicator and what that does and what it means on a chart for you. Okay, and that's one of the things I love about MetaStock. You know, there's so many different things that are in there that are just available that kind of help you in your trading. Okay, all right. So right here we went into a bearish phase on MACD, and then the reason that that happened is because the MACD crossed down below its signal line. So we went from a bullish phase to a bearish phase. It is a signal line. We can use that as a signal to go into a trade or get out of a trade. So you'll see right here, there's an arrow that was put on the chart, and we could kind of take a look at this again. This is objective. So if I was to go short here, this would have been a good trade for me. If I would have went long here and covered that long here, or sold the position here, that would have been, okay, probably a break even at best, probably maybe even lose a little bit of money. Here I can see kind of how well it worked. Here I can kind of see that I would have went long, and out here, again, not an impressive trade. But the point here is, like, it's objective, right? It's not subjective. I can see exactly what past performance looks like on a chart because it's actually all drawn out for you. So, but I'm getting a little bit ahead of myself. The point that I'm making right here is right now, the first way we can look at the MACD, according to the way Gerald Appel uses MACD, is it above its signal line? Meaning the stock is bullish, or is it down below its signal line, or is the stock bearish? That's number one. And then we can kind of see that on the chart. Here you would have been bullish, here you've gone up, here would have got long, here would have gone short. Those are all based on the signal line. The second way you can use MACD in your analysis is as an overbought and oversold indicator. So it does measure momentum. In other words, if a MACD kind of gets really, really extended out, there's a reversion, then there's a tendency that it might revert down to the mean. And I don't see any examples of that on this chart, but I'm looking for them. And let me look back a little bit further. Oh yeah, here's a good one. You see where it popped up here? Okay, we'll look at this as an example. Okay, you see where it's highlighting these 3 bars red? You see the difference of the MACD. The difference of the 2 moving averages is really, really high right here, and it starts to highlight these red. Now, the thing I want to show you is the expert commentary, because it kind of helps explain this to you. So let me go ahead and put this on the chart. I'm going to, this is called our expert commentary. I'm just going to attach it to the chart here. And what I'm going to do is, by default, that's going to go to the very end of the chart, and we're kind of scroll back in the chart. So I'm going to move that to right here. Okay, so I'm going to have it ignore all the data after this, and I want it to just analyze this day. And in case you're curious, this was June 8th of 2020. Okay, and on that day, it's going to do MACD analysis for us on that day. So right now the MACD is bullish. Okay, so if we're looking right here, this is where it became bullish, but that's because it's trading above its signal line. Very straightforward. The MACD crossed above its signal line 14 days ago. Since the MACD crossed above its average, price has actually gone up about 16% and ranged from this price to this price. Okay, cool. Just some basic information from us. The reason that it's painting it red is it's showing that it might be overbought. Okay, and the way that it says that, I really like the way this actually kind of spells it out for you. The MACD is in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before you use this as a signal. Okay, because, you know, as a lot of you guys that have been trading for a while know, that just because something is overextended doesn't mean, I mean, Price just did a whole session on how sometimes that's exactly what it needs to start getting attention, right? So what it's saying is, okay, well, there is a possibility that we're going to get a reversion to the main event here, But what we want you, and we want you to be worried about that, but we don't want you to take a short position yet until prices move lower, because sometimes they can just keep you, just because there's nobody out, there's no rule that exists in the market that says just because something's overbought or oversold means it's going to go the other direction. And sometimes they'll go overbought for years and you're like, why does this market keep coming up? And it doesn't make any sense. But unless it starts to come back, you don't want to go short. So, and then divergence, the other thing that we can look at in terms of looking at a MACD signal is a rule called divergence. And I want to kind of talk a little bit about that, because I think it's very, very cool. Somebody that we work with that I have a lot of respect for is a gentleman by the name of Dr. Alexander Elder. And one thing that he says is MACD divergence is actually the most powerful signal in all of technical analysis. So I'm going to kind of draw a couple lines on the chart and show you how you would look for that. But I want you to notice that this commentary is already looking for divergence for you. So if I'm looking at this last signal that we had, it says there's been no divergence signals within the last 5 days. So if it sees divergence, it's going to tell you that divergence exists on the chart. What is divergence? Actually, somebody earlier, I'm trying to remember, I think it was Chuck, says, I only use divergences in the trading that I do. But MACD divergence in particular is the one that Alexander Elder was talking about in terms of the most powerful signal in all of technical analysis. Okay, so the way we would look for divergence is I'm going to take this horizontal or a trend line in MetaStock. I'm going to look for a peak, okay, of MACD. I'm going to look for a drop down below 0, and I'm going to look for a next peak. Okay, so he is very, very specific. He wants this drop down below 0 to exist. Okay, so right there we've got kind of a peak to peak line, and you could even take it over to this peak if this kind of extends out a little bit. In fact, I'd probably use this peak because it's higher than these two peaks, which would make it a true peak, right? Okay. So there I've got this peak here and this peak here. And you'll notice that the slope or the direction of this line goes down, okay? If I look at price during that same period, and actually this is funny because it looks like it's going to have this divergence we're looking for on a chart. Here's our kind of our high peak in price to our high peak in price. So while our MACD, or while price is gaining momentum, it's setting new highs. The MACD is losing momentum, which is what Alexander Elder would call a bearish divergence on this chart. It's right here. You've got your downward move here. You've got your upward move here. That's one of the most powerful signals that this stock is going to go down. Interesting that it came up on, who gave me this stock? BBB. That's actually really, really interesting. But what happened after that divergence happened? Well, in this case, it went down. So in any case, if we do see divergence on the chart, we are looking for it. If we find it on the chart, it'll tell you there's a divergence signal here. Okay, so let me go ahead and close this commentary and kind of just talk a little bit about, so that's MACD in a nutshell. Those are the three different, that's how it's calculated. And those are the three different ways you can look at it. The signal line, overbought, oversold, and then divergence, okay? And then the one thing I love about technical analysis is it's very objective, okay? It's not subjective at all. In other words, like if I did a decent job of actually explaining to you why those signals are coming up on the chart, you'll agree that, okay, there was a sell signal here because we crossed down below our signal line, okay? You'll agree it's not something that's subjective, it's something that we all can agree on. What we might not agree on is what's the best indicator to use. And one of the let's say, missteps I used when I was a brand new trader is MetaStock's a very full-featured program. You know, I already talked about how there's 200 different indicators on the chart. I already talked about, I've got this playing over here. I already talked about, you know, the 40 or 50 different methodologies. And I've spent 36 minutes talking about what MACD is, how it's calculated, and how to use it. And there's another probably 998 plus indicators that you could actually use. One of the mistakes I'd use as make as a new trader is, or as a new sales rep for MetaStock, is talking about like all of the different indicators. Because a lot of times MACD may perform well on a stock, but it might not be the most effective indicator. It might not be the most effective user method to use. But since it's all objective, it's very, very easy for me to go in. We have a system tester. I can figure out whether MACD works well on GTG, if it's the best system to use, if there's better systems that might be available. Because when the bottom line is like even I couldn't tell you how all the 200 indicators in MetaStock are calculated. And I'm a power user of MetaStock. I use it for a living. It's my job. But for you, what you're interested in and what you should be able to want to do is, instead of learning about a bunch of indicators that most of them you're not going to use, is figure out which ones are going to work best. And then you can spend your time learning about those ones. So there's a tool in MetaStock that allows us to compare methodologies, whether you're interested in GGG or Oracle or IBM or Life. Jim, to answer your question from a minute ago, these are the standard settings. So they use Gerald Appel's standard indicators, which are close to 27, 12, and a 9 exponential moving average on top of it. So there you go. All right, let's take a look here, and let's talk about how we can test different trading methodologies and how we can kind of focus on the ones that actually work. So what I'm going to do here, let's go ahead and open up a system test. And we have many tools in MetaStock. If I were to open up our Power Console, we've been doing a lot with charting. This is just a quote list. We call it the quote center. It's really cool to be able to see all the stocks you've got in your portfolio and whether they're up or down for the day, and that allows you to do that. The scanner, perhaps what I think is one of the most useful tools in MetaStock, and then the system tester we're going to play with right now. The other two tools here is the forecaster. This is a patented methodology that we won't talk at all about today, but we have a patent on it, and it does a bunch of statistical analysis. It's pretty cool. If you want to see a little bit of information on that, you can actually watch a video on it on youtube.com/MetaStock. And then the option scope program is just an option. It's an options viewer. It allows you to see what options exist on whatever stock you're interested in. So let's go ahead and kind of play with the system tester. What I'm going to do is we'll do GGG. And then there's a few over here. We're going to do Oracle. We'll do IBM. Manual asked for IBM. Life, which I think would be life.o with the Reuters symbologies. And TY, which just means thank you. Over here we had BABA, which I think is BABA.K actually. I think that trades on NASDAQ. Yeah, BABA.K. Okay. Or sorry, not NASDAQ, but New York Stock Exchange. So what I'm doing here is I'm actually setting up, and I can, the thing I love about the system tester is I can take all the systems in MetaStock. There's around 94 that are in this installation of MetaStock. You can build your own if you want to. We have about 40 or 50 that are built in, but I can take as many stocks as I want. In this case, I'm going to take 1, 2, 3, 4, 5 stocks. I'm going to test them against a whole bunch of systems, and we're going to see how well they work across those 5 stocks. In fact, let me go ahead and start that real quick, and then I'll kind of, I've actually gone through here and made a list of about the 27 that I know aren't optimized, and I know for sure included in MetaStock. It's not the whole list, but there's 27 of them in here that we can kind of test. What this is going to do for us, so one of the things I love about, and I'm just going to select a few of them while we're going here, MetaStock is, unlike a lot of programs do system testing out there, but this one allows me to take as many securities as I want and test them against as many stocks as I want to. So I can get a good feel for how well a system performs on an individual stock, a whole market, all of like the optionable stocks or the ETFs. And it gives me a lot more data than I have if I'm just testing a bunch of stocks against, or a bunch of systems against one stock, which is what a lot of them do. This one gives me a really good feel for how a system works over a broad array of data. And so I'll talk a little bit about that. So I've selected enough systems here. We've got a bunch of them selected. I've got a bunch of instruments selected up here. I'm going to take long trades and short trades, and we're going to go back about 250 bars or records on a daily basis. Okay. So what the system is going to do is it's going to go back a year. That's about 250 days. Every time it gets a buy signal, it's going to buy. Every time it gets a sell signal, it's going to sell. And it's going to do that on all these systems that we've selected up here. Okay. Under my trade options, I'm going to basically start this with 10,000 US dollars. okay, because we're trading US instruments. If you're trading a different thing, it'll be in whatever currency the instrument's priced in. And what I'm going to do is I could trade 50 units at a time. I could trade based on a transaction cost. So like if I say trade $5,000, it'll trade half my initial equity every time, whether I can afford that or not. What I'm going to do is I'm going to actually trade based on a percentage of available equity. So we'll just leave that at 50%. Okay, so when it gets a trade from one of these systems, it's going to take half of whatever amount it's going to have. So if it starts at 10,000, it's going to take a first trade of 5,000. And then it's going to buy as many shares as it needs. When it gets a sell signal, it'll sell, and maybe the account will go up or down. It's going to do one of those two things. But let's say it goes up, and over time it grows to 20,000. It'll be trading half of that available equity. So then your trade size will be 10%. So this is a good way to trade if you want to, or to test if you want to trade test based on compounding interest. Okay. The other way is if you want to just trade a fixed unit count or a fixed unit size, you can use those as well. You can play with them and see what you like best. Under trade execution, I'm going to use what's called realistic market prices. And so what that means is it's going to wait until the very end of the day because we're testing daily bars, because that's why it's going to use day, and make sure that that MACD or buy signal or sell signal or exit signal or whatever it happens to be exists on that day at the end of the day. Okay. If it does, since the market's closed, it'll wait until the beginning of the next day. Okay. We call that realistic because, like, if you're watching, let's say you're watching GGG during the day, and let's say that right now it's in a bearish, but let's say it opens up Monday and has this huge day up, and a day up enough that's big enough to move this above its signal line, and it gives you a buy signal. And it does. It would give you a buy signal in the middle of the day. And let's say then that lunchtime happens, you come back to lunch, and it gave up back all those gains. This difference had kind of come back. That buy signal would literally go away unless the bar was closed. So we call it realistic market prices. We'll wait for the bars to close, and we enter and exit at the beginning of the next market day. Okay. Now you might not trade that way. I like to go in and do all my scanning at 1:45, which is like 3:45 Eastern. And then I like to kind of make all of my decisions right at the end of the day. And so for that, if I wanted to trace that way, I'd take realistic out here and I'd set everything to close. But we'll just leave everything for realistic market prices right now. Go ahead and click on OK. You go ahead and start this as a system test. And right now it's going to run about 165 systems. You kind of get a feel for what systems it's running. It's already done, but we did the PS momentum. There were some fractal systems in there. I just did about 150 system tests before I could kind of explain what it was doing. So, and on those 5 stocks. So we'll go ahead and take a look at this. Christian says, do you have John Carter's indicators? Christian, we actually do. We have a Swedes indicator. It's available as an add-on for MetaStock. So thank you for that question. Okay. Lovely bearish island right there. Yes, you're not wrong. You're not wrong at all right there. Okay. All right. What we're looking at here, and yeah, I'm checking the time. We're doing fine in case you're worried about whether or not I'm going to go over. But like right here, what I've got is we tested 5 securities or so. Okay. And so what I got, the initial thing that you're going to see is you're going to see average net gain, average percent growth, best, worst, average number of trades, average trade profit versus loss, and average profit versus average loss. This is because we're looking at a basket of stocks. So I've sorted them based on the average profit. And if I was looking to kind of learn about the markets, again, one of the ways I could shortcut my learning curve around trading, especially if I'm new, is instead of focusing on all the methods that don't make sense, I could look at the ones that are actually profitable. I could look at this and say, well, on average, with those 5 randomly selected stocks, on average, if I would have taken every single trade, the best performing system would have been ACT, Instrend. That's a system that's based on John Eller's work. I know that but I can also show you how to know. Okay. Our next, if I would have traded every time it gave me a buy signal and every time it gave me a sell signal on those 5 stocks, I'd be up 41% on every single stock. Okay. Overall, on average. Okay. My best profit would have been about 15 grand. So I'd say that's about 50%. And the worst case scenario for that stock, I would have lost about $35 or $453. Okay. On average meaning per instrument, every time it trades, it would be about 25 trades on average. And I tested a year, so a little bit of simple math. That means I'm trading just more than 2 trades a month on the instrument on average. Okay. Our average trade profit, so versus our average loss, actually was 10.6 to 15.2. Okay. So this is actually losing more than it's winning on a trade on average, but it has enough winners to make up for that because its average profit versus its average loss is $4.06. Okay, so it's about 25 trades per year. I do call this finding the right strategy for you because you can kind of get a feel for like what your win-loss ratios are, your average profit versus your average losses, your average trades. You can get a feel for that even without drilling further into the reports. It's like, so for example, like right here, 13 trades, that's going to be 1 per month most of the time, with maybe 2 trades per month once a year. Okay, so it's about 1 trade per month. On average, it made 23%. So by not trading as much, it made a lot less money, 41 versus 23, but it did work less. Its average profit versus average loss was half, 2.8 versus 4.0. So you get a good feel for like how often this is going to trade on any given instrument before you even look closer at it. I do like the InStrade. Let's take a look at the fractal trading system though. What I'm gonna go ahead and do is I'm gonna view this on the chart right here, okay? And right here, now I'm gonna see all of the stocks and kind of how they perform. So I'm gonna go ahead and sort this by net profit. The ATYR Pharma, Life.O was the best performing. It would have actually made about 91% last year on 17 trades, okay? BABA was right up there too. It made 22% on 14 trades. I typed in the wrong symbol for Oracle, my mistake. IBM and Google both would have lost money. Okay, so not only am I able to go in and see how well any given system worked on an average, that average could be thousands of stocks. If I did thousands of stocks, you'd have thousands of green lines. It also allows me to see where it works and where it doesn't work. So it allows me to focus my efforts not only on the methodologies that work, but also on the stocks that they work with. Okay, if I was going to go ahead and click on view right here, it's going to give me a big report. I'm going to be able to go in and see how this compared to buy and hold. Okay, it actually outperformed buy and hold by 1.65%. Yes, our profit would have been $9,100, a 91% return. Annualized, it wasn't quite a year that we tested, almost a year, but annualized that would be 92%. Okay, if we would have just bought this at the beginning of last year, would have made $8,900. So we were a little bit more effective because we're traded, but like a little bit. Okay, we can look at our profitable trades. Our total profitable trades we had 9 profitable trades. 6 of those were betting the stock would go up, and it did. I don't like to use the word bet. 3 of them were trading the stock and with intention that it was going to go down, and it did. Okay, we had 8 unprofitable trades. 3 of those were to the long side. 5 of those were to the downside. Okay, you can see right here with your average profit was $1,400. So every time we traded this, on average, we'd leave $1,400 richer, which is pretty good for an account that we started with $10,000. On average, our average loss would have only been about $444. So there's all kinds of other things. With MetaStock, it's got an incredibly comprehensive help system that's also pretty well tied in. So if I wanted to see what any of these numbers mean and that kind of stuff, I can go in and I can see detailed profit performances, annualized performance. You can see what all of these metrics mean, and there's an English definition of what they do and what they mean. Okay, a couple of the numbers I do like to look at is profit loss index. Okay, that goes from plus 100 to minus 100. So that's a scale that it looks like. 100, well, 100 would be best, minus 100 would be worst. 71.94 is pretty good. Okay, that measures closed position profit versus closed position loss. Okay, reward risk is kind of the same measurement, but it looks at open position profit versus open position loss, and that goes again from 100 to minus 100, and this is 99.71. Okay. The other thing that I like to look at before I start to figure out whether or not I want to look at this system any further is the equity graph. Okay. So if I click on the equity line here, I can kind of see how this worked over time. So right here, I mean, it's not great. Like we had a pretty big pullback here. Okay. It's been really good performance right in this period right here. It probably caught a really good trade here. It's been okay. I'd probably want a better equity line if I was looking at it. And I could go and look at that InstaTrade system and see if it was a little bit more consistent. It isn't horrible though. I mean, I'm not going from up 10,000 to down 10,000 to up 10,000. It's not horrible. I just would prefer a better looking equity line than that. And I'm sure that probably makes sense for you. If though, you know, and just to kind of for the sake of time, if I did like this system on this stock, I can go ahead and plot it on the chart. This will just show me in a graphical basis every time I would have bought and sold. So you can see, I need to, let me detach that moving average or the expert. Okay. And I'll take the MACD off of here as well. Oh, come on. Expert advisor, detach. I'm getting multiple signals on there and I don't want to see that just yet. Okay. So here I can see very graphically, I bought here. I would have sold here. That was good. Okay. I bought, and you can see right here, a buy and sell. That was not as good. Here was a short. You can see that graphically. If I still like all of this looks like it would have been really good as a breakout, maybe on a turtle trading system. But if I still like it, and then the next step that I want to know is how is this made? Like, how should I, what indicators is it using? The only thing we know right now is this is called the PS fractal trading system. Number one. Okay. So if I wanted to kind of go in and take the next step and start to learn about what kind of fires the buy and sell signals, I'm going to go in and attach the matching expert advisor. So I'm going to go ahead and click on the expert advisor here. We're going to go to that PS fractal system number one. Yeah, right here. There's going to be a matching one. It's going to give us similar signals. Like, so for example, we had a long signal right here. When we tested it, we would have got long the next day, okay? When you're in that trade, I'm just gonna clean up this chart a little bit more just because it's got some indicators on here that are getting in the way. When you're in a long trade, it's actually gonna highlight the bars red or green, depending on whether you're long or short. And if I go to view expert commentary, you can see right here is where we got the long signal, okay? The advice that it would give us on that day is, if you're trading short positions, exit all your short positions. If you're trading long positions, enter along with the market on close. Okay. Now it's going to tell us how a fractal system is made or generated. So while there are many definitions for fractals in securities trading, the definition used in this system was a minor version of the type defined by Bill Williams. Okay. His chaos best trading methods, according to Bill Williams, an up fractal is defined as a middle bar, okay, with two lower highs. So if you imagine a middle bar here that has two lower highs, it kind of, sometimes some people call that a pivot. It's a fractal high, same thing, pivot high. According to Bill Williams, an up fractal is defined as a middle bar with two lower highs on each side of it. A down fractal would be the reverse, being a middle bar with two higher lows on each side of it. So that would be a down fractal, a low surrounded by two higher lows, okay? This system enters a long position when a price crosses up above the most recent up fractal. So it's waiting for that, basically that fractal, where it's seeing a resistance area. And when that resistance area is penetrated, that's where it buys, okay? The position will be exited when it closes down below a short fractal, okay? That's really kind of how it works, okay? So now we know what a fractal is. You're welcome. But we also know that this worked really well on this security with some hesitation, and it worked really good towards the end of it. I like to see it be more consistent along the life of it. But if this is something that we wanted to start trading with, we can kind of go look, and if we're still confused, we can look up Bill Williams. We can see what kind of information we can find about his methodologies. He runs a company called Profittunity, by the way, and we can start to implement this on the trading. If this is something that we really like, if we're looking for that kind of a break of support or resistance type of a system. If this is a system that we like, well, right now we broke this pivot way back here. We haven't stopped out of our trade. It did get out because it closes out all the positions at the end of the day, but in real life, we'd still be in this trade. I wouldn't buy it now. What I'd want to do is find a stock that had a new trade. So if I like, as a trader, I like PS Fractal Trading System by Bill Williams. I can go in and I can kind of run a scan. Can go to the scanner here, and I can go and scan, and I can scan whatever I want, like whether it's stocks or optional stocks, ETFs, Indian stocks, you name it, whatever I want to kind of help me find opportunities that exist for today. That's actually one of my favorite functions of MetaStock, is your ability to do that. And then one of the things I love about system testing in general is it allows me, there's so many different things you can do in trading. And some of them work and some of them don't. But with system testing, we have the ability to go in and say, well, what is working? What's worked over the last year? Let's do that. Okay. And it's very, very helpful for that. And also, from a power tools perspective, it allows me to skip all the stuff that doesn't make sense and focus on the stuff that does make sense. So you're welcome, Elman 2000. Manuel says, how can I determine off backtesting several stocks, which of them are giving a buy now or a sell signals without looking at the individual chart? That's an absolutely great question, Manuel. So to rephrase the question, if he does a system test and it's out of the 4,300 stocks that that exist, that these are the 100 that work best with MACD. I'm just rephrasing your question so you can tell me if I'm wrong. Out of these, well, as I say, it's 200 that worked really good with MACD last year. Can I scan those to find out which ones have a buy signal today without opening the chart? Absolutely. So one of the things you can do in the system tester is you can go in and you can kind of highlight the rows of symbols that you want. You can make that a list that you can scan every day. So Manuel, that's very, very easy to do and a really good question. Okay. All right, cool. All right. Cool. So we do have two different versions of MetaStock. We have a DC version, and a DC stands for end of day or daily charts. RT stands for real time or real time charts. Okay. As I said before, we package our data with the we get all of our data from Refinitiv, and they've literally spent billions of dollars designing the infrastructure and the software and the news, and they probably offer one of the most, and I might be a little bit biased, but one of the best data services on the planet. Lots of hedge funds use it, lots of mutual funds. They also have one of the most well-known news services. I'm sure you've seen contributed by Reuters a lot before in different news articles that you might have been reading and stuff like that. It's a huge organization. They cover 200, 300, 95% of the global market cap. They have thousands of reporters in hundreds of different news bureaus in the world. They have some of the best reporting that's available. And so our real-time package actually comes with a product that we call MetaStock Zenith, which actually gives you access to all of that news, those fundamentals, the information, the real-time access. It's the same thing that you'd get if you'd subscribe to it as a hedge fund. We didn't even open the software, but I could spend an hour on that too, right? I have to kind of get selective about what I want to show and what I can show in a given hour. Okay, that package with the Reuters data is $250 a month. That includes all of the data that you need for a region. Your regions are as follows. There's 3 regions. Okay, there's Europe, Middle East, and Africa. That's one region. North and South America is another region. Asia Pacific, which would include Australia and Singapore, Malaysia. Those are the 3 different regions. So for $250 a month, you can get all of that news. You can get the real-time version of MetaStock. And the only thing that you might have to pay on top of that is exchange fees, because if you want real-time data from let's say the New York Stock Exchange, you have to pay the New York Stock Exchange a fee. I believe that fee is right around $3 or $4. Okay, it's not very much. For futures, it can add up, but every single exchange wants to charge an exchange fee, or not all of them. Some of them are free. Most of them are fee liable, but that fee just goes to the exchange. And if you pay it, you get real-time data. If you don't pay it, you'll usually get delayed data. Okay, so it's $250 per month for our real-time package with the same news and information, the same platform that Refinitiv put $1 billion into developing. Okay. We also have an end-of-day version. Our end-of-day version is $69 per month, 69 US dollars. Both of these versions at these prices include all the data that you need to run. So they'll include all your US data, or all of your Europe data, or all of your Asia, whatever package is right for you. Basically, for either $250 a month or for $69 per month. And that's all you have to pay to get MetaStock, the software that's been rated #1 in its price category for like only 28 years, like in a row. So what we do is a trial here at the events, and just so you can, it is a huge tool. You know, we spent an hour, and I could spend weeks. I've literally trained people, sheiks in Saudi Arabia for 2 weeks on how to use MetaStock, get everything running. And it's definitely something that you can spend a lot of time on. What we do to kind of help you understand that MetaStock's a powerful tool and help you use it is we do what we call an extended trial. With the extended trial, we'll have you pay a month, and we'll give you the second and the third month for free. So like, for example, wow, if you buy that extended trial today, you will be running MetaStock till Christmas Day. I just did the math in my head. So you'll pay for October, you get November and December for free, and you'll be paid up through Christmas. And yes, Christmas is that close. So as part of that, you'll get MetaStock, the 17, either the DC or the real-time version. You'll get the data region of your choice. One of the things we started doing for a couple of years, which has been really, really helpful for people, is we actually have somebody, we call it white glove installation support, where we will call you and help you install things if you need. They actually walk through different functions of the program, like how to scan or how to system test, or how to do really they answer any questions that you've got, and they just sit there one-on-one and walk you through things. And so we're going to do that as part of this. We'll also give you Unleash the Power of MetaStock, which is a self-directed home study course that you can use. So it's basically $20 a month, and you'll be running it till Christmas, about 20. Now the math at 23 maybe. Anyway, you can do that at metastock.com/traders summit 3 for 1. You can call 800-882-3040, or you can visit us online at metastock.com/sales chat to get set up for that. I would also remind you that you should get the Summit Traders Action Pack. You can do that in addition to that, but that also allows you to get all of the great add-ons. We've talked about the Bigalow, the Trender, Trade Trend, Target Rich Trades, Big Trend Toolkit, 3 months of Learn MetaStock, Unleash the Power of MetaStock, 2 years of stocks and commodities. All that's included. Most of it has a money-back guarantee. Normally that would be $3,836. Here today, we have the special price of my birth year, 1974. And like I said, most of it's a money-back guarantee. I will say this, just in closing, I would encourage you to try this. Even if you just say, hey, I want to try the end-of-day version, right? It's about $23, $24 per month to try the software that's literally been rated #1 in its price category for 28 years in a row. I use it every time I trade. I use it almost every day. And I think it's one of the best tools out there. So you can sign up for this at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can chat online at metastock.com/sales chat. So there you go. Whew. Let's see. Jim says, is $69 per month include the Forex as well? Absolutely, you bet. Actually, with MetaStock, they have a huge collection of pairs. They have, I think, a couple hundred pairs, and 30 of them that are common. Okay, so there's a lot of ones that you probably won't look at, but it does include it. They're all included at that $69 per month. R says, can you show how to view the annual rate of return after backtesting a portfolio using a particular trading system? So that's just on the report screen. Do I still have it up? I don't. And just because I'm running late, just email me, jeffrey.gibby@metastock.com. I'll send you just the screenshot. It's easy. I'll just get into there. I just don't want to cut into the next speaker's time much more. I got a little bit long. So let's kind of move on. I do want to say thanks for Stocks and Commodities for sponsoring today's event. You can get a free issue if you want to. Metastock.com/Trader Summit. Fill out a registration form. If you do that before September 26th, you'll be able to fill out that registration form. So if you're watching it and it's tomorrow, you're watching the recording, make sure you do this right away, because on Monday, what's going to happen is I'm going to come in and pull all the names and send them over to Stocks and Commodities. So you have until then. Okay. Do you also want to say thank you to CMT Association for sponsoring today's event? They're an accrediting organization. They specialize in accrediting risk management, quantitative systems development, portfolio management, and applied behavioral finance. You can get information about CMT Association at cmtassociation.org. So do that. Our next speaker is Steve Primo. So Steve does a really good job. I will say this about Steve. We've been working with Steve for at least a decade. I love Steve. I love his presentation style. I think one of the things I like about Steve is he's very, very clear. I can always, sometimes you'll listen to, nobody that we had today, but sometimes you'll just like, what did he just say? I don't understand. Steve, I always get exactly what he's saying. Is so good. Maybe that was me. But he's always good and concise and clear, and I understand what he's talking about, and it makes a lot of sense to me. So he does a great job, and I want to welcome him out here. Hello, Steve.
Hi, here I am, Jeff. Can you hear me?
Yeah, I am. Did you make the mistake of talking into the muted microphone? Because I've done that all day.
Yeah, I did that once again.
All right. I've been doing it all day long.
Words.
Absolutely. All right. I can see your spreadsheet, or your PowerPoint, I should say. And I know we're starting a little bit late. We're not going to be offended if you run a little bit long.
Okay,
and
all right. Well, thank you. Thank you, Jeff. I appreciate it. Might as well just start now. And thanks for the kind words, and thanks to everyone for joining me today. And welcome to this educational presentation. Now, one of the first things I teach my students is actually that there are two different ways to trade, and that's it. I know a lot of you may think, well, how can that be true? There's systematic trading, there's fundamental trading, there's discretionary, there's all these different methods and techniques. That's true, but in terms of categories, there are actually only two specific styles. One way is called pullback trading, and that's where you look to buy at a lower level in an overall uptrend. Very popular, very common way to trade. Another way is the way in which we're going to talk about today, and that's called continuation trading. And that's where you buy high and then sell higher. Now, it's a great way to trade. I trade this way at times myself. The only difficulty is, how do you know if you're buying too high? A lot of traders don't like to trade this way because they feel as if they're buying at the top. For example, let's look at this chart here. I believe this is a chart in Adobe. Yes, it is. This was back in the summer in June. Let's say your strategy, your system, or your plan really likes this stock, but you're just waiting for a little bit more confirmation. Maybe the earnings coming out. Maybe you want to see a specific price bar. So anyway, you're watching it. But then something happens. You have to go away from trading for a while. Maybe you leave on vacation, or you're out of town and work, and then you miss it, okay? The stock goes up the way you thought. Now you say to yourself, wait a minute, it's too late to buy now because this is where I knew it was going to be going, and I can't buy it here. After all, that maybe $5,000 indicator I purchased tells me that it's extremely overbought, and maybe that chat room I go to says that, hey, you're not supposed to buy here. This is where you should be selling. It's way overbought. Everything is gone up a little bit too quickly and too much room to the upside. So, in fact, if you're going to do anything, maybe you should sell. So you think about it, you say to yourself, yeah, you know what, that may be not a bad idea. I'll buy the puts. I'll make back that money that I would have made if I had bought it earlier. And then I'll wait for it to come down. I'll cover my short, and then I'll go long on the pullback. Sounds like a good idea, right? It's the way a lot of traders trade, myself included, when I first started trading. So you decide to sell, and then this happens, okay? Look familiar? Well, this is why most traders fail, because you're really basically listening to outside noise. This is what my mentors called outside noise, or really useless information. And you're not basing your trading off of the most important thing, which is the chart in front of you, the market behavior. So with today's technique, I'm going to actually share with you all the rules so that you would have applied this same technique to Adobe here, and instead of selling, you would have actually bought on that very same bar, and potentially been able to capture upwards of 120 points. So you're going to learn all of the rules to this today and a way in which to trade it in today's educational presentation. So this promises to be a good one. Now, welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I've been trading for a total now of 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever Google those pictures of the old trading floors with the guys standing in a bunch of paper, yelling and screaming and making all these weird hand signals, those were specialists and floor traders. The specialists were the ones that were standing behind those large wooden booths there. Basically, they made markets in around 50 or 60 stocks, and that's what I did. I made markets and traded during the crash of '87 and the bull market that followed. So in my roughly over 4 decades of trading experience, I know what works in terms of consistency, and I know what doesn't work. So roughly about 15 years ago, I teamed up with my sister site, Pro Trader Strategies, where we're just simply devoted to educating traders on all the things that have shown high levels of consistency. You see, we're not telling traders how to trade. We're simply teaching them so that you can ultimately make your own trading decisions. In my 4 decades plus of trading, the only traders I know who are still around, who are still having that longevity in their trading career, are the ones that make their own trading decisions. And this is what I'm trying to instill in all of my students around the world in over 115 countries and in virtually every state in the United States. And hopefully I'll be able to teach you some things today. Now, before we begin, as always, we're required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, as you're taking a brief moment to view the disclaimer, if you haven't done so already, if you're new to my presentations and you'd like to get some more education on a daily basis, I would suggest copying down our handle here for Twitter. I post different information on a daily basis, anywhere from signals that our methods have generated and a little bit of information as to why they were generated. Also give you some little bits of financial wisdom, things I've accumulated along the way. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now remember, we're a little bit different from other webinars or other speakers. You may have seen that our only goal is simply to educate you. We don't tell our students what we think the market's going to do. We don't predict anything. We don't tell you what the perfect time frame is or the perfect market, what you should be trading, what group you should be trading. We don't believe in that. Remember, in order to become a consistent trader, you have to make your own trading decisions, not us. It's similar to someone wanting to learn, let's say, how to play golf. All right, you would hire a coach, someone to teach you how to swing in the proper position and the proper way to play golf. But in the end, that trainer is not, that coach is not going to play golf for you. You're going to have to do it on your own. It's the same way with trading. All right. We don't provide signals. We don't provide any type of market predictions. That's up to you to make. But what we do provide you is with sound, fundamental education that has stood the test of time. So as you can see here, my goal is not to force feed you signals or tell you what to trade. My goal is simply to teach you how to trade with a specialist edge. And when I first started trading some 44 years ago, I struggled tremendously. I was using probably the same things that you're using today to make your own trading decisions. And it really didn't work for me at all. So I was lucky enough to have some mentors. These were traders on the floor that changed my way of trading and taught me the same way I teach my students around the world. So hopefully I'll be able to instill that specialist edge in you in today's presentation. Now, since this is a class, I want to take as many questions as possible, but I'll do the same thing Jeff did. I'll take them at the very end, okay? I don't want to step into the next speaker's time. And oftentimes, if we stop for every slide to answer a question, we'll be here far too long. So if you do have a question, just wait till the very end. I promise I'll get to it then, okay? With that stated, let's begin today's educational presentation. And what I'm going to be talking about today is one of our premier continuation methods. It's called Strategy 3A. Now, let me give you some of the highlights of this particular method. As we said earlier, it's a continuation method, okay? Basically, it looks for an already established trend, and then we just simply look to jump on board. If you're still having trouble figuring out what a continuation method or strategy is, think of a train leaving the station, okay? A continuation method would be the train leaving and going in your desired direction. So it's already taken off, and you just jump on board, all right? That's what continuation trading is like. Now, the way we generate our signals is by using a unique Bollinger Band setting. Now, usually this setting is proprietary. It's just for the students who have purchased or are members of our Strategy 3A course. But guess what? We're going to show you what it is so you can actually apply this Bollinger Band setting at your leisure whenever you like. Now, this method is designed to trade quick, powerful trends, okay? Now, it can be applied to any market, any time frame, and any direction. That's the beauty of this. So if you trade multiple markets, if you trade currency pairs along with E-mini futures, that's great. In fact, when we first developed this, this was something that I used some 20 years ago because I was trading the E-mini futures. And we thought that this was a great E-mini strategy. But then our students started to branch out and they said, Steve, this works great on currency pairs. It works great on stocks. It works great on Bitcoin or commodities. So it actually can be applied to any market or time frame. Now, with all of our methods, we ask that you learn this strategy first, and it is required that you paper trade. I can almost assure you that if you start, your eyes are going to light up after you see how simple this method is and the results I'm going to share with you. I can almost guarantee, though, if you start trading with this on Monday morning, you will most likely lose money. And the reason is not because it doesn't work well, it's because you will most likely implement the rules incorrectly. That's what our beginning students do. They're too excited, they don't study and paper trade first. And then when I look at their work in review, I say, well, none of the rules are being applied correctly. You didn't do this right, you didn't do this right. So that's what we want you to do. Please don't just jump in feet first. Study, research, and paper trade this until you feel totally comfortable, all right? Our edge with all of our methods, with all of our strategies, upwards of 10 now, is consistency. Now, consistency is an awareness that we will have losses from time to time. That's perfectly okay. But a consistent method is one that's able to recoup those losses. So that's what we're looking for, all right? We're not looking for hitting home runs. That will happen every once in a while, but that's not our goal. Our goal is more of a 2-step forward, 1-step back approach, okay? All right, so remember, this is based off of a unique Bollinger Band settings. I know that probably the majority of you are familiar with Bollinger Bands. Many of you are aware of them, but there may be some that aren't. So let's just give you a brief refresher course on what Bollinger Bands are, all right? These are the standard settings on MetaStock and most of the platforms. Basically, the Bollinger Bands are 3 distinct lines. Now, the middle line or the middle band is a moving average. It's a 20-period simple moving average. That's all it is. Now, there are lines or bands above and below that. Now, the distance they are above and below is the same, and that's called the deviation. Don't ask me to explain this. Don't ask me to go in some long-winded explanation of the inner workings of the Bollinger Bands. All you need to know is that the upper band and the lower band deviation are set. This is their standard settings. They're set at +2. That's the distance or deviation. The upper band will be on top of the moving average, and then -2. That's the exact same distance. The lower band will be below the middle moving average. So if we plot it on this generic chart, it'll look something like this, all right? Here is the 20-period simple moving average in red. Here's the upper band, and here's the lower band, all right? And the deviation is the same, up to -2, okay? We're going to change things just a bit. We're not going to change the length of the moving average. We're just going to change the deviation. So let's look at the proprietary settings. And remember, once again, if you can't copy this down right away, if you can't find a pencil, don't worry. This is being recorded. You'll be able to look at this as often as you like in the recording, okay? We're going to leave the moving average the exact same, 20 periods. We're not going to change it at all. What we're going to change is the upper and lower band deviation, and we're going to go down to fractions. From a +2, we're going down to 0.382. And from a -2, we're going to -382, all right? So we're going down to fractions. I know a lot of you would say, well, Steve, this is a Fibonacci number. This must be based on some Fibonacci support or resistance. No, this was just the number that was given to me by my mentors. And trust me, I've experimented with every number, whether it's a Fibonacci, it could be just a prime number, it makes no difference. And of using this method for over 20 years now, it probably the best settings are 0.382 for the deviation. So this isn't really difficult, but feel free to experiment. Remember, we're not a systematic company where everyone has to trade the exact same way like robots. If you feel you want to experiment and alter these numbers a little bit, feel free to go ahead. We want everyone to be a part of the process. Remember, you're making your own decisions. This is just your guideline or your benchmark for this particular setting. So if we look at the standard setting, once again, these are the standard generic Bollinger Band setting. Once we alter them to our proprietary setting, the Bollinger Band should look like this. And you see how they're a lot more smooth, right? Look like almost like a river. Now, I know a lot of you may say, oh, that's just a moving average envelope, or those are similar to the Keltner channels. Once again, I've experimented with those indicators as well, and you just do not seem to get the same results. So feel free to experiment with other indicators, but for my liking, this the standard deviation proprietary setting of the Bollinger Bands works the best for getting the results you want. Okay, so now that you know the settings, let's look at the entry rules. Once again, if you don't have time to write this down, don't worry. This is being recorded. You'll be able to watch this as often you like, pause the tape, and watch it again, okay? These are the rules for going long. All right, first thing you want to do, step one, is obviously plot the proprietary Bollinger Band setting on your chart. Remember, this can be a 1-minute chart of the E-mini futures, it can be a weekly chart of crude oil, or a 4-hour chart of Bitcoin. Makes no difference, but we're going to focus on stocks just because that's the majority of our students are stock traders. So let's just focus on stocks for right now. All right, here's a chart in Costco, okay? So we're looking at this. It's going up. Maybe you're thinking it's gone up a little bit too high, but we want to first plot the Bollinger Bands, and there they are. That's our setting right there, okay? Now we go to step 2. We want to look for 5 consecutive price bars that close either on or above that highest Bollinger Band, okay? So if we look back at the chart in Costco, we see here that we're kind of oscillating above, below. We don't have 5 consecutive, but then what do we have here? 1, 2, 3, 4, 5 consecutive bars closing above. Remember, it doesn't say that they can't touch it, because right here we opened within the realm of the Bollinger Bands, but then we closed above. We just want 5 consecutive closes above. Now, when we identify that, we're going to enter to buy when price trades 1 tick, 1 unit of measurement above bar number 5. Obviously, we're looking at currency pairs. It would be 1 pip above, okay? 1 unit of measurement. Now, remember, it has to trade there. It doesn't have to close there. So we just want to see it trade there, intra-bar. So we're going to be buying right here if we trade, let's say, 1 tick above. And look what happened. On the very next bar it did, so we entered long, okay? And look what happened to Costco. Now, do you notice I didn't mention anything about earnings involved in the rules? I didn't talk about support and resistance. I didn't talk about moving average crossovers. I didn't talk about what the institutions were doing. I didn't talk about anything that most traders listen to, because once again, I listened to these same things 44 years ago and they couldn't make me a dime. It wasn't until I started listening to the most important thing, which was the chart right in front of me, the source of what I'm trading. The trading got a lot more consistent and actually a lot simpler. So I know a lot of you are saying, wow, this is amazing, but Steve, okay, where do I get out? Where do I place my stop, right? I'm sure you're probably typing away right now. I don't have the question and answer box open, but I'm sure that's where all your questions are. Well, in the course, if you become a course member, we teach upwards of 6 or 7 different ways to exit. Remember, it's your choice. So if you're the type of trader that wants to stay as long as possible, well, we have exit plans for that. If you're the type of trader that wants to get in and out, well, we have an exit method for that. So we have upwards of 7 different exit plans that you can choose from. We also have upwards of 6 or 7 different stop placement plans for you to choose from. If you're someone who likes to take a lot of risk, we have a stop placement for that. You like minimal risk, we also have methods for that. Let's show you just a standard generic way of trading this, okay? This is one of the most basic ways to trade it. All right, so once you find out where you're going to be entering, this is even prior to entry. You know you're going to be 1 tick above bar number 5. That will be your entry point. What you want to do is go back to the lowest low, which would be right back here, right? If we go back in time here, this is the lowest low, where you had that fractal that Bill Williams talks about and that Jeff was talking about. That would be right here. So basically, if price came down to this level, this is where you'd be stopped out. Now, you know where that is going to be even before you even enter the trade. And this point, it's roughly about 20 points. So you could say to yourself, wow, I can't risk 20 points. That's way too much for my account size. Or maybe you could say, oh, that's fine. Yeah, 20 points is nothing. I've risked 30, 40 points before. Remember, every trader should trade to their own means. We're not a systematic company where everyone has to trade the same signals. So let's say you can take this trade. You don't mind, maybe you're going to even buy the calls or whatever, some type of spread strategy. Your decision. All right, so you're going to be entering here, and if you lose, this is where you're going to be exiting. This is your risk, all right? Comes out to roughly about 20 points. Now, if you're the type of trader that likes to get it out quickly, that likes to take your profits and run to the next one, well, maybe you would sell at a 1-to-1 risk-reward ratio, meaning that you would make 20 points and then you're out. If you like to make a little more, maybe you'd make twice that amount. And if you wanted to have a really good risk-reward ratio, you'd make 3 times whatever your risk was. So let's say you decided on 3 times your risk. Well, that's where you would exit. You just simply take the risk, which is 20 points, and then triple it, 1, 2, 3, and that's your exit. So you basically made 60 points and you're risking 20. This is just a standard trading 101 style to implement here, all right? And you can apply this if you'd like. But remember, just practice this and see how it works for you. Let's look at the rules if you're going short. Now remember, if you're really a trader, you not only go long, you also go short. You don't have to short the stock. I know it's difficult sometimes, but you can actually buy puts or some type of spread strategy. It's up to you. But if you're the type of trader that likes to go short, maybe you're trading E-mini futures. You like to sell the E-mini futures. Well, let's look at this example here. Once again, step 1, plot the proprietary Bollinger Band. So we're looking at a chart here in DraftKings, okay? Someone looking at this would say, wow, this is kind of a sideways market. I don't know if I want to do anything with this market. But once you plot the Bollinger Bands, you get an entirely different feel, because for the first time, you're studying market behavior. You're not listening to an outside source the way we are all trained, either to go to a chat room or to listen to some guy on TV or to wait for the earnings. You're looking at the source, the chart in front of you. What's it telling you? Well, this brings us to step number 2. We're looking for 5 consecutive price bars that close on or below the lowest Bollinger Band. So if we go back to that chart here, we see that, well, we had 1, 2, 3, but then we closed above. So that negates the countdown, and we're in the realm of the Bollinger Bands. But what do we have here? 1, 2, 3, 4, 5. Remember, we're just looking for closes. It's okay if it touches. It just has to close below that. And we have to be in consecutive order. So we have 5 consecutive closes. So now we go to step 3. We're going to enter to sell when price trades. Doesn't have to close, but when price trades 1 tick, 1 unit of measurement below bar number 5. So as we look here, we see that here's bar number 5. So this is where we're going to go short. If price trades there, we're going short. Now, this is what's called a confirmation entry, because for all we know, the next bar could go straight up. And that way we didn't lose any money. If we had simply sold at the market, well, guess what? We'd lose and we'd get stopped out. But this way, we're waiting for confirmation that it trades below bar number 5. And as we see right here on the very next bar, it did. So we got short DraftKings. This was in May, and we have a nice little downward move, okay? How did we know the market was going to go down like that? Well, remember, we don't predict anything. We don't predict how high or how low something will go. We're just listening to the market, all right? I often tell my students, trading is really simple. It's the trader who makes it more difficult and more complicated than it has to be. If you're trading correctly, it's actually very boring, okay? If you're, have all these bells and whistles going on, you can't keep track of it. You got too many markets. You got a number of TVs going on, a number of screens, phones ringing, okay? You got too many people talking. It's not really trading. That's more like gambling, okay? It's more like you're in a sports book. But if you're really trading, it's just like fishing. You kind of go out in your boat, you cast your line, and you just wait, right? Very boring. That's the way real professional trading is. So this is a very simple, very boring way to trade, but as you can see, it's got some real high levels of consistency. Now, let's say you wanted to apply that very generic way to trade this. Well, we knew that we were going to get long right here. Short right here, okay? So we go back in time. We don't count the setup bar. We go back before that. And this was the most recent high. Now, you could use this high if you wanted more risk, but let's just use this one. It's a lot less risk involved. So that would be our stop placement right here, okay? So now we measure the amount of points if we entered here to go short and we got stopped out right here. What is our risk? I think that's roughly about 3 or 4 points, okay? Let's say it's 3 points. So you're only risking 3 points. So that feels pretty good, right? Now, if you wanted to get in and out quickly, you'd have a 3-point gain, and that would probably get you out somewhere here. Twice your risk would have a 6-point gain. Let's say we wanted to go for more, like 4 times risk. Well, we could have made a quick 12 points in about 3 or 4 days right here with 4 times risk. Trading is simple. Just get out of your own way. Quit overcomplicating things, and you'll start to become consistent. All right, so let's look at some more recent Strategy 3A examples. Okay, those were just for educational purposes. Let's look at some more current ones. As we look at this chart here on Pfizer, okay? Now, Pfizer is kind of slowly but surely going up. You could say to yourself, yeah, but it's kind of an arranged market. If I buy here, I know it's going to come all the way back down. I don't have a good feel for this. But what's the first thing we do? We apply the Bollinger Band setting. We see that we have a couple of closes above. We have one below, now one back in, then one below. But what do we have here? 1, 2, 3, 4, 5 closes above. So that's our setup. But we're not going to just buy at the market. We have to wait for it to trade 1 tick above bar number 5. Now, we wait, and we see that the very next bar we did. We could have entered right here, roughly around 40. Look what happened. I believe we have a nice little 12-point gain or so. Let's look at this example in TCO, okay? This is TCOM. This is Tripping Company. Let's say you're looking at this, you kind of like it, and then all of a sudden, wow, it turns on a dime and goes straight down. You say to yourself, whoa, I'm glad I didn't step into that, but I kind of still like the company. I kind of still like this as a purchase here because, you know, for all we know, it's so oversold again. So before you buy, what is the market telling you? Not some guy in a chat room saying, hey, this is oversold. You might want to buy some more. What is the market telling you? Well, we add the proprietary settings, and they're saying that we were originally above, but look what happened. Now we have 1, 2, 3, 4, 5 closes below. So I don't care what some guy is saying on TV or what some earnings report is. The market, the most important thing you should be listening to is saying it wants to go lower. Now, it's not guaranteed. Remember, nothing is guaranteed in the market, but this is a high probability setup. We're not going to just sell at the market. We're going to wait for it to trade right there, 1 tick below bar number 5. And it did on the very next one. It didn't close there, but that's okay. So you would have gotten short TCOM, and look what happened. Trading is simple. Just get out of your own way. Don't overcomplicate things. Here's that example we started out the presentation with in Adobe. Remember we thought it was overbought, that indicator you purchased that you have no idea what it's based off of, says it's overbought, right? Or maybe that $10,000 course you took on the institutions, they're saying it's overbought. Well, what is the market telling you? It's telling you that there are 5 consecutive closes above the highest Bollinger Band. That's a buy setup, okay? But we're not going to go long until we trade above that bar, and we did. So you would have gone long on the very next bar and potentially captured 120 points, okay? Here's an example now in Union Pacific. All right, this happened coming into this this month, just a few weeks ago. Obviously, it's been going down, right? But maybe you say to yourself, well, Steve, this is great support there. That's where the institutions are buying. They're never wrong, right? Because that's the big money. Trust me, you don't want to hear my opinion on the institutions. I traded with the institutions when I was on the floor. They had some of the worst track records of anyone I ever traded with. So I really wouldn't put a lot of stake into going whatever the institutions are doing. What is the market telling you? It's a lot easier to decipher. Well, once we apply the Bollinger Band setting, it's telling me that we have 5 consecutive closes below. 1, 2, 3, 4, 5. Now, it doesn't guarantee it's going to go lower. For all we know, the next bar, it'll go straight up. But we want to go short if it trades right there, okay? Now, it took a couple of bars to do this, 1, 2, but eventually did. We got short, and look what happened, okay? What happened to the institutional support? Now, a lot of traders always say, you know, they play the victim game like, wow, you know, gosh, I wish I would have known that this stock was going up. I would have taken advantage of it, but, you know, I never get the big flyers. I always miss those ones. Well, even though this can't be guaranteed, no one really knows when something's going to go straight up. Let's look at Moderna in hindsight, okay? This was coming into August. Had a tremendous move in July and then went straight up, all right? Could this strategy 3A, have helped us? Well, as we applied this, we would have seen that we were above. We had 3 closes above, then below, then back above again. 1, 2, 3, 4, 5. So right here in July, it was telling us it wanted to go higher. All we had to do was buy once it traded above this bar, bar number 5. That was July 15th. You could have entered, potentially captured 145 points coming into last month, okay? It's up to you. You could have gotten in and out and taken 10 points. You could have maybe taken 25 or 30, maybe 100. It's up to you. Remember, our philosophy is you make your own decisions. Our job as an educator is we provide you with the tools and techniques to help you make those decisions, but we will never trade for you, okay? We're not a systematic company. Now, the one thing is, though, we always suggest that you protect yourself or apply an exit plan, because so many times you can give away a good portion of your profit if you don't get out. As you see here, look what happened coming into September. Or to the downside. This is Boston Beer or SAM, S-A-M. Traders could say, gosh, you know, I've had this stock. How did I know I should have exited it? You know, I don't know. The guy, my stockbroker, said it was a great long-term investment, even though it's expensive. It's something to hold on to. They're a great company. Or, you know, that chat room I went to said to buy it, and I've got the calls, and I'm just getting killed. I've lost all my money. Well, remember, you should be able to make your own trading decisions. We provide you with the tools and techniques to do that. If you would apply the proprietary Bollinger Band setting, you would have seen way back here in July, we had 1, 2, 3, 4, 5 closes below. Now, even though it's touching this Bollinger Band, as long as it didn't close in there, it's still okay. So we're going to go short 1 tick below here. Took about 3 days, but we eventually went short. And look what happened. A week after you would have gone short, you could have taken advantage of this big drop to the downside. Obviously, there was some news or some event that caused it to gap down like that. This is what we mean by the market tells you just about everything you need to know. Why would you need to follow something fundamentally when we were short a week in advance of that big gap to the downside? Now, you can if you want to. We're never going to tell our students what to trade. We're just going to give you the information. But trust me, I stopped looking at fundamental news 44 years ago. And if I'm still here trading without looking at, I don't look at any fundamental news. I never know what the jobless claims are, the earnings are. I just look at what the chart is telling me. So if I'm here, I'm living proof that you really don't need it. But it's, once again, it's your decision. Potentially, you could have captured over 300, roughly about 335 points coming into September this month. Now, let's just show you some quick examples in other markets like Forex, E-mini, and even ETFs, okay? Because I want you to really be aware that when we first started teaching this was just an E-mini only strategy because of the way the E-mini traded with a lot of momentum. At that time, there wasn't as much momentum in the markets as there is now. And now you can apply this to virtually any market, any time frame. For example, here's a chart in the Australian dollar, okay? Nothing changes because we're looking at a 4-hour chart of the Australian dollar, a totally different market. The same process applies. We have 5 closes above. Here's bar number 5. We wait for it to trade 1 tick above, 1 pip above. And had you bought there, potentially coming into the beginning of September, just a couple of weeks ago, you could have captured over 160 pips, okay? That's roughly about $1,600 if you had stayed in that long. But remember, your exit is up to you. Here's an example in a 5-minute chart of the E-mini. This was a week or so ago when the market was falling out of bed. Same process applies. We're above, but now we oscillate within the realm, and now we have 1, 2, 3, 4, 5 closes below. Here's the 5-minute bar to get short. You could have got short the E-mini, and in just about a couple of hours, you could have made potentially 32 points. That's $1,600 per contract, just in a couple of hours. I want you to pay particular attention to this ETF. This is the Diamond. This is the ETF that represents the Dow Jones Industrial Average, okay? Now, this was just less than a few weeks ago. As we're looking at this, it looks like the market is kind of coming lower, but perhaps it's stabilized. Maybe we're going to go back up because the market always seems to bounce. But what is the market telling us? Well, once we apply the process, we see here that we're above, we're below, we're above. A few bars later, we're below. But now we have 1, 2, 3, 4, 5 closes below. This was on the 13th of September, less than a couple of weeks ago. So less than a couple of weeks ago, the market, not some guy in a chat room, not some guy in a webinar, not some earnings report, not some institution, the market was telling you it wanted to go lower. We don't know how low. We don't know how quickly. It's just telling us it wants to go lower. We have 5 closes below. So we're not going to go short or maybe use this as a market trend identifier until it trades below here, all right? So look what happened. The very next day on the 14th, it opened higher and then closed lower, and you could have gotten short, or you could have just used this to signal that, hey, we're most likely going to head much lower. And, we all remember how to use that risk rule, right? if you would have entered here, go back in time to the last short-term high, which is right here. So this would be your risk. Let's say you actually shorted this and you told yourself, well, if it doesn't go lower and it starts to go back up, you know, the trade didn't work. It's wrong, and I'll get out right here. So this is your risk amount. Now, let's say you wanted to make twice that amount of risk. Well, that's where you'd be putting your limit to buy or to cover, okay? Or if you had the puts, that's where you would get out and sell. And we all know what happened in the market last week or so, okay? Now remember, none of this was done because of news, what's going on in China or with COVID. This was all done because we looked at the chart. Now, if you want to, it's your choice. You can overcomplicate your trading as much as you'd like. It's the easiest thing in the world to overcomplicate your trading. Anyone, even if they've been only trading a couple of weeks, can pile on as many indicators, as many different, you know, trading rooms to go to, as many different earnings reports, as many different ways to follow the markets, information. It doesn't take a lot of character to do that, but it takes a lot of character to simplify your trading and to only learn to listen to the most important thing, which is the chart right in front of you. And the chart told us in advance that this market wanted to go lower. And I believe the market, the Dow Jones fell over 1,000 points in the next 3 or 4 days. Okay, so let's recap before we go into question and answer portion. Remember, it's a continuation method based on the unique Bollinger Band setting designed to trade quick, powerful trends. You can apply this to any market, any time frame, any direction. But please, 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 paper trade this. Don't start trading this Monday morning. I can almost guarantee you, you're going to lose. You're going to jump in and have the wrong count. You're going to have the wrong Bollinger Band setting, or say, I don't know how to do that with the Bollinger Band, so I'll just use another indicator. Trust me, you have to trade it this simple way and paper trade for a while. Our edge is built on consistency. Remember, consistency is an awareness there will be losses. That's okay. But what you want is a method that's able to recoup those losses. And strategy 3A, along with all of our other strategy methods, are very, very consistent. So as we close here, I want you to ask yourself a question before you ask me. Do you think this strategy could have helped your trading this past year? Well, I think if you're honest with yourself, your answer would be a resounding yes. So for that reason, we have a great Traders Summit attendee offer. We're going to offer you strategy number 3A course, okay? All right, you're going to get all of this information along with more, all the entries, all the different exits, all the stop placement, all right? This also comes with continued educational correspondence. That means you'll get my personal email address where you can contact me whatever you'd like, maybe to check your work, maybe to see if you have a question, I can answer it right there for you. You're going to have all this information right there in front of you. Right now, you just got the tip of the iceberg, but you're going to get the entire enchilada strategy 3A course with all the rules for entries, exits, and stops. But on top of that, we're also going to throw in an entirely different course. This is strategy 4. This is a pattern recognition strategy. It's not more of a continuation. It's kind of a hybrid between continuation and pullback. It's based on a pattern that generates over and over again, also in all markets and in all time frames, okay? Now, once again, we first started teaching this for stocks only because it was primarily the pattern we saw mainly in stocks, but now we see this pattern everywhere because of increased volatility. You can apply it to any market or time frame. For example, here's a chart here in PDD, all right? Looking at this, someone could say, well, yeah, it's going straight up, so this is most likely a continuation method, right? Probably bought somewhere here, but then look what happened. You have a nice upward trend, and it was broken. So where most traders would say, hey, time to get out, you know, sell this because most likely we've broken the uptrend. It's probably going to come all the way down and pull back a little. Well, this pattern was generated and a strategy number 4 buy signal was produced. And look what happened to the stock, okay? So you're going to get all the rules, all the information, and educational correspondence. In other words, you're going to be able to ask me questions whenever you like with strategy number 4. But we're also going to throw in some more bonuses on top of this. Not only are you going to be getting the add-ons for MetaStock for both strategy 4 and 3A, so you can look at the up and down arrows, you'll also be getting bonus number 2, which is our Secrets of a Stock Specialist course. This is a 3-hour video seminar. Some years ago, I was asked to speak at a seminar in Colorado, and they recorded it, and that's what this is. This is where I go into a lot more different edges and ways in which to trade. That's a $1,000 value. We're throwing that in as well. Bonus number 3, you'll get the PDF version of my book, Secrets of a Stock Exchange Specialist, okay? Now, this is where I go into a trade-by-trade account of what it was like to trade during the crash of '87 on the floor of the stock exchange. There aren't a lot of books or periodicals that deal in what it was like to actually be on the floor. So you'll learn exactly what it was like to be trading down there. And bonus number 4, we're going to take it up a notch with our Secrets 2.0 course. This is another nearly $1,000 value. This is where we really go to the advanced level of using advanced techniques and edges for trading. And last, bonus number 5, you're going to get the scanner capability on MetaStock to identify these strategy setups. You'll be able to scan for strategy 3A and strategy 4 setups. So these are great, great bonuses, all included, 2 separate strategy courses along with educational correspondence, okay? So let's break it all down, all right? All of this information, remember, it's not just E-mini your stocks anymore, even though we haven't changed the graphic. It could be applied to any market, any time frame. So normally, this would cost you over $4,400, okay? That's how much information is jam-packed in here. Over 40 years of techniques and methods I've accumulated in my own trading career. But we're going to discount that for all the attendees of the Trader Summit down to $297, all right? That's an over $4,100 savings, $297, less than $300, okay? But remember, this is for a limited time only. So if you want to take advantage of this, act now. Now, I know a lot of you say, well, you know, even $300 is a lot for me to come up with these days. And I totally understand. I know a lot of people may be struggling. But here's the problem. A lot of, we've seen in the past, a lot of traders, even with these great discounts, will watch the video. They'll wait for a couple of weeks, maybe even a month, and they'll say, you know what, my trading has gotten worse. That's it. I don't care. I'm going to come up with $300 to get that strategy 3A, strategy 4, and all the different bonuses. I'll contact Pro Trader Strategies. And then once you do, you say, well, that was for a limited time only. That offer is back up to roughly $4,400. So if you're really serious about taking your trading to the next level, just don't sleep on this. I would say this is going to last no longer than a week. And then after that, it's going back up to the $4,400 level, okay? Remember, invest in yourself. A year from today, you will have wished you became a member of these courses, especially for the price. Remember, you're getting nearly $5,000 worth of information that I've accumulated in 4 decades for less than $300. I can almost guarantee that most of you have lost more than $300 this month trading, right? So for that same amount, you could have really invested in yourself and gotten tons of information. Here's how to take advantage of this. Contact my sister site. That's Pro Trader Strategies. They're in charge of all of the discounts. They're in charge of all of the pricing, and they can answer your questions, you know, concerning that, and they can take your order over the phone. I would highly suggest calling them directly. There's absolutely no obligation. They have trading consultants manning the phones right now at area code 310-598-6677. They'd be more than happy to answer a question concerning the strategies and also concerning the add-ons and concerning the price, okay? So I'm going to leave this information up here. We have about 5 or 10 minutes left. I'm glad I went under. I don't want to take up the next speaker's time. So I'll open up the question and answer box. If you do have any questions, now is a good time. Someone's asking right off the bat, what are the settings for the Bollinger Bands? Okay, I'll repeat them once again. Remember, you have access to this recording once they make it available, and you'll be able to get those numbers from this, but I'll give them to you right now. So I'll wait for everyone to get a pencil and paper so you can write this down. All right, you all ready? Okay, now the Bollinger Bands have a setting for the simple moving average. That's the 20-period simple moving average. We're going to leave that alone. We're not going to change that at all. That's going to stay the same. The upper or lower deviation is what's going to change. That's usually set or formatted at 2. What you want to do is go down to a fraction, down to 0.382. So if there's a setting for the upper deviation, it'll be 0.382. And if there's a setting for the lower deviation, it'll be negative 0.382. I believe MetaStock just has a deviation setting, and you can just put in 0.382, and it'll automatically be the same for the upper and the lower. So it's very simple, but that's what it is. We're going to 0.382. Now, having said that, feel free to experiment. We have students that use 0.50. They like that better. We also have students that use 1 instead of 2. It's up to you. It depends on what market and what time frame you're trading and how this bets fits your trading style. Remember, we want you to be a part of the process. That's our philosophy. That's our concept of education. We're never going to tell people how to trade. We're giving you information so that you can ultimately make your own decisions. Remember, in my 44 years of trading, the only traders that are still trading are the ones that make their own trading decisions. And that's the point of where I want to instill in you. I don't want you to have to rely on what someone is telling you what to buy or what to sell. I don't want you to have to rely on some earnings report or some economic indicator that comes out. I want you to be able to look at a chart and in less than 5 seconds decide whether you should be buying or selling. That's the beauty of what we teach our students, okay? Let's see, settings for upper and lower bands. Yeah, we just did that. Steve, you were a market maker. Do you market makers move price to hunt stops? That's probably the most common question I ever got. And no, it's so silly to think of that. I wasn't a market maker. Market makers are mostly on the option pits. I was a specialist. Market makers are different from specialists. Specialists were specialized in making markets in only roughly about 50 or 60 stocks. These were equities. Market makers are mainly on the commodity floor and on the futures or on the, not currency pairs, but options, okay? And no, I mean, it would be silly. There's so much money. If you knew how much money was traveling in and out of the market, and if someone was moving a stop, I mean, was manipulating things so they could maybe pick up a couple hundred shares, I mean, that's silly. But traders are always looking for conspiracy theories because they always want to play the victim. But remember, if you're using sound fundamental market behavior, you'll never have to, think that someone's out to get you. Okay. How do you get over the fear of holding overnight for fear of gapping down? Well, that's once again a personal thing, but one of the main ways to do that is to paper trade. Okay. If you paper trade the markets you like to trade over a while, and you see the success of a method such as this, that'll give you the confidence to do it. You'll say, okay, well, there's a gap down, but you know what? I have so many winners, that's not really going to affect me. Sure, it's a little bump in my P&L, but overall, I'm still winning for the month. Whereas if you have a losing method, that gap down when you're on the wrong side can really do harm. So it's been my experience that when you learn how to listen to the market, when you're basing your trading off of what the market's telling you and not off of what some guy in the chat room is telling you, most of the time, you're on the right side of the gap. All right. I showed you that example in Boston Beer. Sam, remember where it gapped down tremendously? Well, we were already short a week in advance. How did we know? Well, it wasn't as if the CEO of Boston Beer called me up and said, hey, Steve, why don't you tell your students that there's going to be a really negative announcement coming out next week and they may want to get short or they may want to, buy the puts in advance. And no one did that. So how could we know that to go short? Because the market told us it wanted to go lower. So when you learn how to listen to the market, even though it's not guaranteed, oftentimes it's been my experience that you're on the right side of news events or gaps, okay? Steve, regarding the 5 candlestick count above or below the Bollinger Band, does the candle count start with the first candle completely outside the Bollinger Bands? No, remember, it doesn't have to be outside. The rules state that you're looking for 5 consecutive bars that close either on or above the highest Bollinger Band. So they could open within the Bollinger Bands and then close above, and that still counts as a valid bar, number 1, or bar number 3 or 4. Remember, we're just looking for bars that close consecutively on or above the highest Bollinger Band, okay? If you're going short, 5 consecutive bars closing on or below the lowest Bollinger Band, okay? Can learning during paper trading on futures 24/7 be valid for stocks? Well, sure. I mean, it's not the same market, but we're looking at, once you learn to look at and only focus on charts, they're pretty much all the same. Sure, they have different energy. Some charts may have a lot more whipsaw back and forth energy, the smaller time frame you go. But you're still looking at charts, and charts are just a reflection of what the energy is what's going on in the market. So once you learn how to listen to that and how to make your decisions based off that, it's a lot simpler. Trust me, I used to just have the most difficult time figuring out support and resistance, let's say, because someone would say, hey, it looks like good support here, right? And I'd say, actually, that looks like resistance on a different time frame. So which one was it? Or someone would say, hey, I think we're in an uptrend. I'd say, no, this is just a pullback in a downtrend. So which one was it? You see, when you use things that are left up to subjectivity, trading becomes difficult and complicated. But we teach only things that are cut and dry. 5 closes above or below, all right? There's nothing there for room for subjectivity. It's either going to be 5 closes above or below or no. That's it. It has to trade above bar number 5. Okay. Well, can it, maybe just touch there or whatever? No, that's the rule. It's very simple. When you bring in all these other things like earnings or all these other things like support and resistance, they're too subjective, and that's what makes traders fail, because you're pretty much just guessing. And I'm not saying this to be arrogant or condescending. I'm saying this because this happened to me. I mean, I was trained the same way of things you're probably using 44 years ago. And I always say this to my students: if it didn't work 44 years ago, it's probably not about to miraculously start working now. It's been estimated that upwards of 80 to 85% of all traders fail. And I think that's the reason, because we're trained to look at these things that are not very consistent. So that's our goal, to teach you things that have stood the test of time. Now remember, nothing works 100% of the time. There will be losses. That's okay. What you want is a method that's able to recoup those losses. We're just trying to instill a 2 steps forward, 1 step back approach, okay? Now I think I just have about 1 minute. I'll just take one last question. Does this strategy work on all time frames? Yes, it does. I showed you a 4-hour chart of currency pair. I believe it was it the British pound? I'm not sure, or maybe it was the euro yen. Also, I showed you a 5-minute chart of futures. We also have traders that use this on weekly charts for commodities. We also have traders that use this on 4-hour charts of Bitcoin. So yes, it does, okay? But remember, you must paper trade. That is not a suggestion. It is a requirement as a student of mine. You must paper trade to see it fits your nature, okay? I believe that's just about it. I think I'm just about out of time. I don't want to step over on the next speaker. He's got a lot of great information for you. I just want to say in closing, I hope you learned something today, and I hope you saw that we really want to instill this higher level of education in you so that you can ultimately make your own decision. We are first and foremost an educational company, and I hope you saw our attention to detail and our sincerity in really trying to teach you today. I want to thank you so much. I want to thank Jeff Gibby and the Online Trader Summit for inviting me to speak. And most of all, I look forward to all of you becoming students of mine in this great, great offer, okay? Thank you so much. Remember to contact Pro Trader Strategies. And with that said, I'll hand it back over to Jeff.
Okay, thanks, Steve. Appreciate it. I'm going to, I want to say thank you for coming. That was awesome. Great job as always. Let me go ahead and kind of make some changes here real quick. I see Oscar's coming through already. We're almost ready for you, buddy. Yes. All right. We'll do this. All right. All right. And then we'll share my screen. All right, real quickly before we get to Oscar, I do want to say special thanks to Stocks and Commodities for sponsoring the event today. They do a great job. We really appreciate kind of the work with us, them working with us for the last, 9 years. So we've been pulling together this summit and putting it out there and making it available. We really do appreciate it. So in addition, I want to thank our brand new sponsor today, CMT Association. CMT Association that does qualification courses for risk management, quantitative assistance to development, portfolio management, applied behavioral finance. They do certifications for some of the largest brokers on earth. So if you're interested in learning more about the CMT Association, cmtassociation.org. Thank you for their sponsorship there. I also want to mention our awesome Traders Action Pack. We've got the Steve Bigalow Candle Profit Systems, MQ Trader or Trender Pro 2.0, Tompkins Target Rich Trades, Big Trends, Learn MetaStock, and all of really the add-ons that we've taught today in one package. And it's yours. Normally this would be $3,836. It's some of my favorite add-ons, some of the best things that we've worked on over the last wow. And $19.74 is the price. So you can get that at metastock.com/summit deal. You can call us at 800-882-3040, and you can get it at metastock.com/sales chat. So let's go ahead and kind of go one further here. And I want to talk a little bit about Oscar. Oscar is somebody that Greg Lewis refers to as a force of nature. And I love Oscar. I would say that that's a pretty accurate assessment of how Oscar does in these classes. I love the passion that he brings with us when he comes and talks about the markets and, you know, the stuff that he does. To give you a little bit of background on Oscar, we've been working with him for a number of years. He runs a boot camp that he calls OmniCamp in Vegas. And you can also come and go in the chat room. I'm sure he's going to talk about this, but his website is live with Oscar. I love Oscar. Let's go ahead and get him going. Oscar, how are you doing today? Your mic's not on. But I will make you the presenter.
It's up to me to unmute the microphone.
Don't worry, I've made that mistake I think 4 times today, so no big deal. That's the anyway. I can hear you now.
Okay, so traders, thank you for tuning in. I know it's been a long day to present this before me. I think we owe them a round of applause. Good stuff out there. Jeff, thank you for having me. I love hosting or being part of your MetaStock events. So thank you once again.
Our stop's in?
Our stop's in? What's a stop?
It's all yours. I'll get out of the way. You guys are in for a treat. Let's get this going.
Okay, I have to hit show screen, and I think I'm on the air. Okay, traders, thank you for tuning in. Today, you've seen a bunch of presenters before me, and I'm sure they've had great software for you to purchase, and hopefully that will work out for you. What you're going to see with me is a little different because I don't actually have an add-on to sell you. I basically will say this. If you like what you see in this presentation, which is basically me offering you a few trading tips that you can use to move forward right after this presentation and see if you can spot things and help yourselves call markets more accurately. So, yeah, I've got nothing I'm actually going to sell you. What I will offer you is a free invitation to my free trading room. It is free for everybody at all times, so I'm not giving anything special. I'm telling you, no credit cards required. Show up and hang out with me. This trading room's slightly different. It's called Live with Oscar, but it's really Live with Oscar. I spent many years, 30 years in the trading pit since I was a teenager. And, you know, when the pits dried up, they sent us home, and I created a trading room, which I basically replaced my trading pit and all my friends with the trading room. So I'm there at all times, but it's Live with Oscar, Live with Oscar. You guys are there for everything. The birth of the children, the death of the dogs, you guys are there for everything. So if you like what you see here, come join me. Gentleman before me posed a question. Can you actually learn something from a guy in a chat room? Well, let me just say this. Please stick around. You'll certainly get educated and likely be calling me with Oscar at the end of the meeting. So let's see where some guy in the chat room, let's see what he can teach. Traders, one of the biggest challenges today is how to decipher all of the news coming at us. We're bombarded with news. It comes from every direction. News bits, news tips, you name it. Information about trading. It comes from all angles. And what are we supposed to do with that news? Does the news come out in the charts first? I think it does. And I think you can stop the confusion and stop listening to the internet, which no one knows if what's on the internet is correct or not, because there's no one to fact check the stuff that's out there. And, you know, it could be the Wild West, and it comes at you too often. If you ask me, and I can prove this over and over, the news is actually built in a daily chart, or any chart that you're looking at. The news is built into the chart. Too many traders try to take in this virtual fire hose of news and information, disseminate it all, and pop out proper market direction. I don't think Superman can handle that. So I can tell you this. A chart is merely a visual look at all of the fundamentals that are coming out there, including government reports, quarterly earnings, the possible cooking of the books from a bad CEO or a bad entity in the company, a CEO jumping off the bridge on the way in the morning. You're susceptible to many things that could happen, but the chart seems to understand all of that, and it understands Wall Street's algorithms at the same time. And I'm telling you that if you can read the chart properly, what you will find is that you don't really need to learn the news. You'll see it in the chart, then the news will come out, and you'll say, wow, the chart told me something was coming. It told me downside was coming. The news didn't really matter. And that is what I'd like to show you how to do while I'm here. If you would, please join me on a little journey down what I like to call chart lane. We'll see what we get out of this. You are looking at the crude oil chart. We'll start with something simplistic. Crude oil puts in a bottom on August 23rd. Does the chart know the news before it comes out? Well, the bottom comes in crude on August 23rd, and something else interesting happens. A top forms in NASDAQ right around the same time, just a few days later. What we call a flat top, or what I dub in Oscarism known as a flat top, forms right there, right when crude decides it wants to start heading up. Now, crude oil, trading above $74, $75 a barrel, you will see will start to weigh on our economy. Because, an example, I went to the gas station. I don't always fill up my cars here. My son will take them and fill up my wives and mine, the company cars or whatever. So, every few months I fill up a car. 4 months ago, I filled up my wife's car. It was $38. I was treated to filling up her car a couple of nights ago. It was $81. I don't know if you're going to call that inflation or not, but boy, oh boy, I bet that hurts everyone in their pocket. So if crude is about to go up, how does the market know instinctively and start to form a formation called a flat top to tell us the market's going to crack? Very interesting things happen here. So let's see, that's simplistic, right, Oscar? You go, okay, Oscar, listen, so big deal, crude bottomed and the NASDAQ top. How could that mean that news is in the charts? Well, let's see if there's any validity to my assumption that you can read the news and Wall Street algorithms right here in the charts. So let's look at another chart. This is the Dow Jones Industrial Average Daily Bar Chart. It happened to top out on 8/17. Drops down a little, forms what I call a flat top, just like you see in NASDAQ, and then the market begins to crack. Now, why would the market crack? We did not have Evergrande's collapse news at all. No one knew about it yet, but that's not true. Of course, people know before the public knows. Reactions take place. Those reactions hit the chart sees it before the public is going to find out. So Dow Jones tops out right here, and then news about the Evergrande, the biggest real estate company in all of China with $300 billion in debt. News circulates in the market, then puts in its move, and that allows you to say, well, Oscar, there was a flat top, absolutely. Told us it was going to crack, then the news came out. Because news comes out in the charts first. And you will see that in example after example, and you can find this for yourselves. I'm going to show you some things that are very simple to use. So if you are a high-level expert trader, you'll get this. And if you're brand new to trading, you'll also be able to use the information I'm going to share. I hope you will be able to. So let's move along. The next chart I'm going to show you is going to be more proof. So we get the top, as I mentioned, then the flat top forms, which is a technical formation of the downside. Boom, news comes out. What came out first? News came out in the chart. If there are questions, Jeff, I'm sure, can let me know what those questions are at the end of this session. I can't actually see them from where I'm sitting. We're going to stay with the Dow Jones Industrial Average chart, and now we're going to just take a look at a little bit more how the news comes out in the chart. So I say the news comes out in the charts first. You can find me anytime proving that in my trading room. Top comes in, as we mentioned, then the flat top comes in, and we get downside news. Boom, boom, boom. Well, how come the market bottomed on Tuesday? Before the Fed announcement, because a $1 trillion package got announced. It was absolutely going to Congress and likely could be passed. That news obviously didn't come out on Tuesday morning. It was already being talked about in D.C. And boom, the Fed two-day meeting and the $1 trillion package, the market puts in a bottom first, and then this news comes out. The market tends to know first. Now, the market's made up of humans. Humans tend to speak to one another, and when there's money involved between a human and an event, and there's money, lots of times humans do things to make that money come their way, which shows up on the charts first. You know, let's say it was a king. The king's about to make a major change in his kingdom that's going to affect the economy. And he tells a few people at the top, well, they've got time to run out, make changes, and put on positions and tell others. Boom, it hits the chart first, then the news gets posted. And simple as it sounds, it is out there if you know what to look for. So I can certainly show more examples, and I am going to do that here. Please remember, if you do have questions on this, keep them jotted. We'll get to you. All right, let's go to Bitcoin. So I showed you that in crude oil and the NASDAQ and the Dow. So now we go to something completely different. Bitcoin. Does the news come out in the charts first, even in a digital currency? Absolutely, positively. How do we know? Watching Bitcoin have a nice, fat, strong rally, right? And if you're looking, you can clearly see for yourself. Nice, strong rally. Bitcoin above the average, bull flag-ish looking thing, runs up, another bull flag look, runs up a third, and then boom, puts in a high, and out of nowhere that red bar comes in. Well, there's no bad news on Bitcoin that we know of. A bear flag forms. That's this blue formation. It usually tells us a market will drop. Bear flag forms. Must be news coming out somewhere. The news about Evergrande breaks right here. Well, the whole bear flag was formed. It was ready to go with a projection when it goes. Then the news comes out. Now, Bitcoin forms a bear flag long before Evergrande's news breaks. And if you think that wasn't what did it, you might be right. Here's what really did it. An announcement has been made. Even bigger news. Crypto has been banned and deemed illegal throughout all of China. That news came out on Thursday and Friday. Now, do you think that they were considering banning crypto in all of China? Do you think they thought about it when they released the news on this day here? Do you think they thought about it just that moment in time? Or do you think they were talking about it, told others about it, had meetings about it, hence the bear flag shows up? Market starts to go, the announcement's made. So first the Evergrande news comes out, gives us this drop out of the flag, and now the Bitcoin news comes out. That was the market projecting for us. It literally was projecting the next punch it was going to throw by showing us the bear flag. Some news will come out about crypto or Bitcoin. There it is in the chart. You would think it was just Evergrande, which of course from China, that's going to be big news. But it was probably even more, with two things creating that flag. Knowing that they're brewing in Beijing and speaking about, we're banning crypto, this is going to go out soon, let's do something about it, get crypto off our books or whatever, straighten out our books first, and then we'll send this information public. Boom, the information becomes public, but we're well aware of that. We are, because we know how to spot formations. So it's not just formations. You know, I have an entire Omni method that calculates exactly where we're going to buy and sell and where the stock goes, and it's for day traders. That's not what I'm showing you here, because that would require you coming to a 4-day session here in Las Vegas, where I would have to train you from Friday morning, straight through Friday night, Saturday night, Sunday night through Monday. And if you don't learn this technique, I'll kidnap you and keep you until Tuesday. But I only invite 4 people at a time, 5 maximum, and only a few times a year, to teach them the Omni method along with these formations. So now that you know where the formation is, what it is, and where we should go, because I teach projection calculations, then show you how to take advantage of that information. But that's not what we're doing here. That's intricate. We have a meeting to talk about that. This is something I want to be helpful to you. So I can absolutely do a projection of this bear flag, and it would show exactly how far it would drop. These are things I will teach and do teach to my Omniacs. But point being, news comes out in the charts first, always, always, always. You just have to know how to spot it. So now let's go take another look. I would say let's take a little walk down algorithm lane. So Oscar, you're showing us that yes, news does come out in the charts first, but those crazy, complicated Wall Street algorithms that are meant to scare us, and no one knows how they're calculated or what they mean, and so scary. And I kid you not, they're not. I'm going to show you, just like seeing the news in the charts, this is not scary. It's complicated because, you know, without the proper jargon from Wall Street, I'm not putting Wall Street down, but without the proper jargon, who would give them their money and trust in their behalf to trade for them if they taught all their techniques and showed that it's actually simpler than you think? So they have to make this complicated for more than one reason, for many reasons. And of course, for the sophisticated out there that want nothing to do with trading, it's got to sound good too. So we've got algorithms, and they sound great. And yeah, they're scary. But let's go see if we can figure out what those algorithms are. Can a chart tell you the news, the algorithms Wall Street is using, traders' reaction to the news? Yes. Can it give you the next direction coming? Absolutely. Ask the Omniacs that have been hanging around me since 1994. They see it. So let's go to the next segment here. Now we are looking at the E-mini S&P daily bar. Simple chart, right? Keep things simple, traders. Look at the numbers on here. 1, 2, 3, 4, 5, straight through 9. Do we really need to read the news to confuse ourselves when we've got something so simple that we can follow? Algorithms are not all that tricky. Now, I'll ask you to ask yourself a question. It's rhetorical. You don't actually have to answer it to me. But do you think, watching what I'm showing you here, do you think that algorithms are keying off of the 50-day algorithm here? Look, just bounces off, bounces, all the way up, boom, algorithm kicks it. All the way up, boom, algorithm kicks it. All the way up, boom, algorithm kicks it. It's basically very easy to spot for yourselves. And look at how they're starting to get long again at number 9. As soon as it gets under their algorithm calculation, down we go. As soon as it gets above it, the street comes in and buys. The beautiful thing about algorithms is they trigger one another. They're like contagious. It's like a yawn when you're tired and your friends come around. And, you know, algorithm goes after one company's algorithm goes after something, volume kicks in, spikes go up, flags fly, the other algorithms jump in, and they sort of become self-fulfilling prophecies in the direction they're going after that thing. But we can spot what they're doing and know when mentally to flip from buying dips to selling rallies in our trading approach. Where do you make that change? Exactly when Wall Street does it, where the algorithms are flipping, right here at the 50-day algo. It's just simple to see. It's absolute. And what are the odds that you'll have a bad trade? 1 out of every 8 or 10. I see 7 that work perfectly out of 10 or out of 9. This one went through. This one went through. But these bars weren't actively traded back then. It's a future, and this was when December was not active. Maybe the month before June was active. So maybe it would have held better. But as soon as this becomes an actively traded commodity trading month in even the S&P bull, algorithm kicks right in, and that is pretty clear. Anybody have any doubt that that's what's happening here? Very clear on that. If you do have questions or doubts about that, you save them for me, and I'll see if I can clear that up. So, do we actually need this fire hose of information to tell us what to do? Do you think you need an options calculator to tell you how to get in and out of these markets? You do not. You need to know when they're going to turn, but then how to approach the market. And methods that can be taught to you need no disk. You do need a computer these days. You can do it by hand, but that's messy. They need no disk. They need no download. They need nothing but a strong pair of eyes and somebody who believes in his conviction, her conviction. Because the techniques absolutely work. But the thing about technical analysis, which most people get wrong, is let's call these 9 things some formation. We'll call them bull flags. Let's say this was a bull flag, and we'll say this one didn't work because it went through the album. Bull flag didn't work. Bull flag didn't work. Bull flag did work. Ooh, bull flag did work. 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 Bull flag didn't work. Do you see the consistency? That's what I'm trying to point out to you. If you've got a technique in technical analysis and you find something, you must use it every single time you see it so that if, let's call those flags, if that flag is going to work 7 to 8 out of 10 times, the only way you'll ever know or get the consistency and the proper trading from it is to take the flag every single time. No deviating. Some will not work. That's why we put stops in. But it's a behavioral pattern that you must be in to be part of the market, to act, to feel like you're part of the market, to feel like the market is going to allow you to jump on its back and take a little ride. And we're day traders. We're only looking for a quarter turn. I don't want to go all the way around the track. That's for long-term traders. Quarter turns for us. We get in, market moves in a certain direction. If the stop doesn't get hit, we take profit. We're out for the day. And these charts always can point you in that proper direction. And the omni trades that I give out to my traders, we have a winning month just about every month, year after year. It's amazing. But because I stay out and I know that as a human, I couldn't possibly be smart enough to disseminate all that information and then say to my crowd, let's buy. That would make me a crazy person. That would mean that I'm making predictions instead of technical projections. Instead, I make technical projections in the Omni, and we put out our recommendation. We put out our results every month. I have those results, by the way, calculated by 2 separate entities. And if this entity agrees with that entity and they don't know each other, when they come together, if it's all the same number, I send it out to the crowd. And knock on wood, knock on my head, whatever it takes, we've been just winning almost every month, every year since I started doing this. So the Omni puts out fantastic trades because they're all based on technical analysis and not what Oscar thinks ever. I know better. I know I'm not smart enough to get this right, but I know the chart is, and let's go look at more examples. So we are now looking at the E-mini S&P, and we've switched over to looking at algos to see if we could just spot them in any sector on anything. So we did the S&P, and let's move along to another. So if it worked in the S&P, will it work on an individual stock, a single stock? Well, watch this. In the presentation for MetaStock 9-10 months ago, I used this very exact same chart, and it had a 77 algo on, 77 bar algorithm, average 77 bar algorithm. So the algorithm was working perfectly, and I'll go back where you can see one. I didn't bother doing the entire chart because way back. 1, it hits right here. 2, once again, it works really well. 3 works well. Right, gets down below, they try to sell it, gets back above, they buy, gets down below, they sell, tries to get above, can't, works well, drops again, works well. Number 6, right here, they flipped algos right here on number 6, and watch what they did. They just flipped algos on us, and I saw it, and I went, oh, you guys aren't going to get me. I get this. So let me see if I can pull this all into one chart so you can see it all. And I'll make it a little darker for you. This is what they did. These guys are so sneaky. I'm sorry, let's just make it darker first. So we're going to take this one, and we're going to go color style, thicken this guy. Let's get rid of the old-fashioned one, because you can see right here at number 1, that algo went out of style, and it just didn't do anything anymore. So let's now get that out of the way and go look at what they shifted to. How about that? The algorithm shifted. Look at number 1. It starts here. And it absolutely was telltale, easy to spot. Boom. 2. Boom. Once it holds, right back in, they buy it. 3. 4. Boom. 5 doesn't even get close, and away it goes. So that switch, they simply went from, and I have it written down here, so I'm just going to pull it up for you. They went from the 77-day algo to the 30-day algo. So now we just put this over this and say, here's a little secret to use going forward, traders. Tesla's fund managers, they love to use the 30-day algo. I don't know why. I don't care why. My job is to not reinvent the wheel. It's to put the wheel on my car and go down the racetrack. So I don't care why they're using it, and I'll never try to figure it out. I know what they're using and what to do about it. And so can you. It's really easy stuff. So we went from the 77-day, as you can see, clearly see was working, and we switched out to the 30-day, and that clearly started working. So now you've seen it work in E-mini S&P. You've seen it work on Tesla. Let's go look around, see if we can find any other charts where heavily traded on Wall Street, that's where you want to spot your algos, we can come up with an algorithm. And I'm sure we can. Let's look at Google. Look at this insane algorithm. My goodness, Google had a blast. The traders must have just loved stumbling upon this algorithm. So look at when it starts at 1 over here. And again, I'll try to take this little tool just for illustration. 1, it starts, we drop under the algo. 2, we get above it. Hold, number 3. We hold again. Oh, gets below it. Poof, 5. Now, this looks small. These are massive moves. I've got a lot of bars on this chart. This is a lot of movement in between these flips above and below 52 algo. So, boom, right here. In the fashion of a bear flag, the market gets under the algo and down we go. Number 6, it holds. Away we go. 7 holds. Up. 8 holds. 9 holds. 10. That algorithm is insanity. 11. That one holds. And then it goes cold. Look at how it just moves away from the market. It just goes cold. All right, so what'd you flip to, guys? You know what? I'm like a bloodhound. I'll figure this out. I'm going to sniff this out one way or another. So we flip, and here's what we flip to. And now you throw this algorithm on there, and you say, wow, that's exactly what they did, huh? At number 11 here, it just stopped working. Let me just get this out of the way with 11. At number 11, it stopped working, and that becomes number 1 for the new algo. Boom. Holds in 1, holds 2, holds 3. Now they're getting used to it. Look how well it's working now. Holds 4, holds the 5th time, breaks underneath, runs up to it, and we're at it right now. It's a do or die moment for Google. That used to be the 52 algo. Now it's the 25 algo. It's just Wall Street. It's the smart money of Wall Street who's running around from stop to stop, grabbing onto algos that work. And when the algos hit, they know when to get in, they know when to get out. They're not masters. It's not perfect for them either. Knowing information and then using that information are two entirely different things. That requires a boatload of integrity, mentality, and discipline. I can tell you what the market should do tomorrow with a high degree of accuracy. What will you, and me as well, what will we do with that information? That's a different story. I personally have been known to completely destroy good information. I pull it off the chart, I tell everybody we're going up today, and one thing leads to another, and I've had a losing day. I'm susceptible of that, 39 years deep in the business. So anyone can do that, but we're usually good at using our information. And we've got good information because it's all on the chart. And remember, this chart is just a visual look at everything Wall Street is doing and everything in the world that's going on, and government reports, it's all in the chart. And we can clearly see, I think I've already illustrated, we'll do more. We can clearly see what Wall Street is doing. We can spot the news, even though we don't know what the news is. We know if it's good or bad. And we can spot what algorithms Wall Street is using. And I didn't even put lines or anything. I didn't even draw this chart up yet. I didn't do any artwork to show you where to get in or get out. All I've done was show you the simplicity of knowing where it should make big turns. And I think you should be able to find this for yourselves. I'll certainly help you if you hang out with me. Let's go look. So it worked for Google. We know we were able to figure out what algo they were using, what algo they went to, and we know when it hits that algo, there's a very good chance it's going to work. Now, once again, when I mentioned calling these flags, you have to be brave enough to take the trade every time. This one, you had to get abused up for you had to get a little abused for a while. You were in the heater if you stayed in that trade, right? As day traders, we would have been in and out, whatever. But Once you get above, it worked. But my point is this: if these were flags, but now we know we're calling them bounces off the algo. You've got to be brave enough to use it every time. Why? Because 1 worked, 3 worked, 4 worked, 5 worked. So of the first 5, 4 of them worked for you. 1 of them gave you a little bit of a hassle first, but that worked for you. The consistency will be there if you take the trade every time you see it without deviating. And what happens is, as I was just mentioning, so you took a flag and it worked, and you took another one and it didn't. And you took a 3rd flag, that didn't work either. That's it for you. Your confidence is out the window. You are not taking the other 6 or 7 flags to find out what the consistency of 10 in a row was, right? You've blown it up. Well, same thing with Wall Street and these algos. Back here, if you were afraid to take all these trades, you would have missed out on some of the best trades. Remember, now I'm referring back to the blue. You would have missed out on some of the best trades in Google, right? Just by not following your plan. So again, we're going to make this average smaller just so I can prove my point. If you look at how many times using the 52 algo and closing your eyes when it gets there and reacting, look at how many times it worked for you really well. Now, the beauty of what we do is we never close our eyes and react to anything. It's not our style. We're never going to do that. What we do is we wait for the market to hold, start to go back up, and then we call it held and we get in. I don't play hero nor Superman, and I am not buying the first day right here at this algo. But I will certainly buy the second day or any other day once I see it hold. I'm not going to be with your money on the line or mine. I'm not going to just go in and say, I know I'm right, but the second the market shows me I'm right, because the market is always right, when it shows me I'm right, then I get in. So there are 2 rules, and for you traders that are listening, if you're writing anything down, write these 2 rules down. Rule number 1. The market is always right, always. Rule number 2, if the market seems wrong today, please refer back to rule number 1, and that is really good advice. You're wrong when the market goes against you, not the market. The market's never wrong. There's never been a day in 39 years that I woke up, seen the market move, knocked my account into outer space for being wrong, and said the market was wrong that day. I might have been wrong, but if the market goes up, it was right. That's what it was supposed to do. If the market goes down, guess what? It was right. Now learn how to listen to the market, and you'll be right as well. And that's what the purpose of this presentation is. I'm hoping to be able to show you in abstract, simplistic way how to listen to the markets for yourselves. Again, you can always join me in my free live trading room, the live with Oscar, no credit cards, no nonsense. But I'm not always talking about markets. I mean, it's live with Oscar, don't forget. So it's not 24 hours a day, Oscar, feed us market talk or else, because I do have to be human, right? We have to make jokes, and I've got to be dad, and I've got to do some stuff. But you want to live with me through these markets every day of my life, so one of us doesn't get up in the morning. You come join me, and you know I play around with fun stuff like this constantly. Let's see what else we can look at. So, Netflix, another big one. Look at the 25-bar algo on Netflix. I mean, what a field day these guys are having with Netflix. This is just more proof that the algos work, and they are easy to find, and you should not be intimidated by these algorithms on Wall Street. Just learn how to play. They're playing music. You have to learn how to listen to the music. So, the 25-bar algo, I mean, just look, I didn't bother doing the whole chart. I didn't want to drive you guys insane with this. I could go back 10 years or however many years Netflix has been around and show you. But look at how it just works. Look at this algorithm, how well. So Netflix tends to be a sloppy chart to begin with, and even on the sloppy chart, why do I call it sloppy? Just to make you understand that. It leaves gaps all over the place. There's gaps everywhere. It's just a mess, this chart. But it will still, an algorithm will still pick up, or Wall Street will still pick up on an algorithm. And you will find that even a chart as messy as Netflix, which basically jumps all over the place, it's up, it's down, it runs up really fast, and it falls apart. even in a mess like that. Who needs to read the news? We have Wall Street algorithms to follow, kids. We don't need the news. Wall Street is telling us what to do, even if you never bought a newspaper or read the internet in your life. So look at this algo and how well it works. And it works here, clearly. It works at number 3, clearly. It worked at number 4, even though you could jerk around a bit when it finally went. It went, boom. It worked at just about every instance. Look at how pretty this one worked. It just stayed away from the market, and when we got above it, an explosion took place at number 10. Beautiful, right? Look at 11. After that massive rally, right? Look at this. Rallies all the way up, 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 all the way to here. Look how far away it is from the algo. What does it do? Smashes back, bounces off the algo like it was meant to happen. So I hope you're starting to see that it's not my 39 years of time on Wall Street and experience. It's anybody can do this. My children can do this. I kid you not. So you can as well. All right, so what else? I probably looked at, I think I remember thinking about Apple, so I threw up an Apple chart. By the way, traders, do you know when I prepared these charts for this session I'm doing for you right now? Last night at about 9:30 at night, I sat down and went, well, let me grab a few charts, drop a few algorithms on there, show them a few techniques. I have nothing pre-prepared in the background. I have no PowerPoint. I've got no voodoo to show you. Oh, look how great I was back here. But moving forward, I've got nothing for you. I am the exact opposite. Everything I show you, it might have happened back there. I only project forward. This is just to help me project forward. So any of the videos I do at night, in those videos, I'm telling you what should happen the next day with my neck out there on the chopping block. So, you know, if you hang around me, you'll see I'm only using this information to show us how to move forward. All right, so Netflix, once again, 25-bar algo, looks fantastic to me. Let's go take a look at, let's see what else we have. Well, we were going to look at Apple. So, Apple, 40-bar algo, look at it. Look at the amazing work taking place around the 40-bar algo. Now, it's a simple but powerful technique. These techniques are simple but powerful. You can use them as soon as Monday or tomorrow, which is Sunday night when market's open. So watch. I just went to number 1 here because to load the whole screen with so many bars, you know, it makes it messy. So we start here. Number 1, look at the hole. Number 2, look at the hole. Number 3, look what happens when it gets below. It actually leaves a gap. Boom, and falls apart. Gap right here. And then when it gets above, massive rally up. Gets to it, has a little bit of indecision, and boom, drops through on number 5. Stays underneath it till number 6. Look what happens on number 6. We go all the way to here, that high, and we come back and smack into the algo again before it takes off once again at number 8. So you smacked into it at 7. Hits it again at 8. Now goes underneath. Boom, and the selling starts. That is how Wall Street's using the algorithm. I am not telling you to develop an algorithm or try to trade and hold any of these stocks or commodities. We're day traders. I'm showing you, if you don't have your own Omni, so to speak, whatever you want to call your Omni, then this should at least let you know if you should be a seller of rallies and be a short seller that day or that week, or a buyer of dips. And that's what this helps us with. It doesn't tell us exactly where to get it in or out, but it does point us in the proper direction. Let's see what else we have. So I've shown you that algos can easily be spotted. I've shown you that formations on charts are there to tell you the news is coming before it comes out. And again, I gave you a few examples. I could do this for the next 24 hours. If you guys wanted to sit with me for the next 24 straight hours, I could pull up live charts in front of you for those 24 hours and explain to you how this had to be news because see the formation, and then we could go grab the newspapers of the internet and we'll find the news that would have coincided with the formation. But guess what came first? Chart formation, then the news. That we can prove all day long. But so I won't bore you with too much of this, just a few more examples. hope I'm not boring you traders. I'm just trying to share some info. All right, so let's go with, does technical analysis really work? I showed you algos work. I showed you that formations will tell you the news. Yeah, what else is happening? It should be, I'm sorry, kids, I'm just reading. So I'm going to show you. All right, let's go here. Back to, does the news come out in the charts? Does the news come out in the charts? News is always in the charts first, and that's been the theme of what I want to prove out. NIO, direct competitor with Tesla in China. In China, you're told, by the way, you are not allowed to drive a Tesla if you live in a government, if you live anywhere near a government building, if you live actually in a government provided building, if you work for the government, if you know anybody in the government, if you breathe oxygen, drink water, or have hair, nails, eyes, you're not allowed to buy a Tesla because Tesla's spy on China. And this is what they say. I don't really care about their reasons, but facetiously, this is what they tell people in China, which means NIO is a pretty good, strong competitor. And how come we looked at Tesla's chart? I'm going to go back to that just for a moment, and then we'll come back to NIO. Tesla should be here somewhere. How come Tesla's chart has been going up like gangbusters? Watch this. Up like gangbusters. Up like gangbusters. That's Tesla. How come NIO is the opposite? Selling a lot of cars. It's competing with Tesla because news is in the charts already. Evergrande is a big piece of China and a big piece of every company and the Chinese stock market. And look, I am telling you that news is already in the charts. A competitor in China of Tesla who gets the help by the Chinese government to beat Tesla if they can in auto sales has been falling apart because they had the Evergrande news all before we did. Evergrande came out here. Why was it falling from here? The company itself has not changed at all. I've checked all their reports. Nothing has changed on this down move. They knew, charts knew, that the Evergrande news was coming out. It's not going to affect Tesla nearly as much as it's going to affect NIO out of China. Now, these are things that absolutely happen. The news is always in the charts first. And not only can you see algorithms and news, you can see tops and bottoms, and I'm going to find one for you because I've got so many good charts and not enough time. But I've got a really fantastic chart that I had shown you in videos before, and possibly I even showed it to you here in a webinar. So let's go to open and see if I can spot this. It looks like it is. I'm sorry. Oh wait, there we go. Check this out. E-mini S&P weekly bar. This is how I call the COVID bottom on YouTube, in my trading room, and maybe in a MetaStock conference at some point. I may have been doing a conference right around when COVID came. When COVID started, we had a massive crack. This one. Here's your COVID crack. Looks small, but this was enormous. Boom. When we got here, ask anyone who watches my videos, anybody in my trading rooms, anyone at all, I told them I'm breaking out one of my big guns, this yellow average right here, and I called a double bottom on this day when we hit the bottom and told everyone that's it, COVID lows are in, and we can start buying. Technical analysis allows you to keep things simple. The double bottom did hold. It held my average. It's a combination of the two, and I immediately waited for the hold and then told everyone who follows me, bottom is in. Look what happens immediately after the bottom comes in. The 17-week algo kicks in. Look at it. Boom. Look at this, number one. Look at that run. Number 2, 3. And it really, really gets interesting. Look at all those holds, including this week's drop. Has held and go back above the algo. I did not. There's 8 perfect holds here, and I didn't even bother with the 3 that came close. It was 11 times the algos bounced off of E-mini S&P 17-week out. How about that? These are things that I look at daily, keep in the back of my mind, and then, of course, incorporate. When I see the Omni's buying, I think I understand why. When I see the Omni is selling, Oscar's market navigation indicators, the Omni, I think I understand why, but I do not let this interfere with the Omni signals. Omni says sell, we're short sellers that day. If Omni says buy, we buy long that day. But I certainly will keep my eyes on this to make sure that at least I'm not walking into a freight train, walking in front of a freight train. Now, if I was running a fund, you might imagine I'd be using every one of those numbers, 1 through 8, to get my fund long. Because that's what you do when you're a fund manager. You use these algorithms to get you in and out of the markets. Jeff, I think that's about all I wanted to illustrate here. What I will tell you is this. Please join me at livewithoscar.com. It is completely free to you and no credit cards, no nonsense. I just need friends to hang out with me all day. So if you go to livewithoscar.com, if you had a membership, you'd log in. If not, you'd register. You simply register. We ask for nothing with username, password. Basically, that's it. Come join me. Once you get there, you'll be at this page, which is step 1 to entering the chat room. If you actually go through with it and come join me in the chat room, you will find me here, and I'll show you what the chat room looks like. Chat room is right here. I'm going to log into it now for a moment just so that you can see it, and I'll put it out in front of you. So what my trading room looks like, it's full of traders all day long. We're in the trading room. Your name would be on the list over here. We're writing to each other, but I am actually live on camera, the same view you're looking at now. I'm live in that trading room, plus the view behind me right there. So you get to see what I'm doing, and you get to speak to me. Now, the camera goes one way only. Me broadcasting out to you, I do not need to see some freak in his underwear at 3 in the morning. So I'm only broadcasting one way out, but you guys can ask questions, and I speak on the microphone, and I usually run this thing 24 hours a day, every day of my life. And that's about all I have to offer you kids. Come join me. Jeff, if there are questions, I'd be more than happy to answer them. If not, I will just divert my time back to you. And thank you so much for allowing me to have fun and present.
Thank you, Oscar. We do have quite a few questions, if you don't mind.
Okay.
All right. So I'm going to sum up all the algo questions at one time. Because we have quite a few about the algo, what it is, how you recognize it. So maybe if you could talk a little bit about that.
See this statement right here? These are simple moving averages. And that is what Wall Street keys off. I know that sounds ridiculous, and I know it sounds simple, but any pro in this industry will tell you that if you get something simple, you will find something that works. Wall Street's complicated, but it's simple. The things that they're actually bouncing off of are simpler than you might think. That is a 17-week average, so that would make it literally a 17-bar SMA. And that's all that is. Look, close, 17, simple.
Okay,
and what you have to do is find the average. I mean, I tried to. So using the word genius around me in the same room is probably not going to happen very often. However, I've been told by many that the genius in what I do is I've taken one of the most complicated things on this planet, which is the market, and simplified it and boiled it down to techniques that anyone can use because they really are simple. So I've learned to simplify the complicated. That's why it seems so simple to you guys. But what it took me to get to this spot, thousands of hours of crawling through this stuff. My fingernails used to hurt just by banging on keyboards and reading books to figure out what's happening out there. So I've done all that work for you. And now I can just present what I've learned and how to use it in a simple form to you. But it was really complicated to get there. And there is genius in taking something complicated and making it simple. That's a simple moving average. I can't tell you how complicated it was to figure that out, but that's what it is.
Jenna wants to know if you'll look at the QQQs.
Sure. Isn't that basically NASDAQ?
Yeah. Mm-hmm.
So we have a NASDAQ chart on this one right here. So we're looking at NASDAQ. How can I help you?
Oh, shoot. Let me see if she was specific.
What do I think it's going to do? Okay, so all right, let's stay with the simplicity.
She wanted to know if there was an algo on the NASDAQ.
We're going to stay simple. Look what's happening right here. What just happened here? If you want to keep it simple, expect them to continue buying. If you want to complicate it a little more, of course, you can come up with a lot of other scenarios, and you can go read the news, and you can find out what your aunt thinks, or grandpa. You could throw that in your analysis if you want, but I would advise you to read that right before your eyes. You can see what's happening. Then you can use simple trend line analysis to say, all right, so we should have trouble when we get there, but if we get above that, we have now taken out a decent sized trend line that tops the market. We've held this average so far. The news came out that they're moving $1 trillion package onto the floor this week. And then over here, Mr. Powell, I call him Cousin Jerome, gave us a little pep talk. So the fundamentals are in place. The technical is right before our eyes. And I say, go with it. And if you do not get above this area, then we have trouble again. If you get above that, algorithms will kick in and buy more. I hope that helps.
I think you should call him Uncle Jerry.
I call him Cousin Jerome.
Wanda wants to know if you have any thoughts for next week.
So for in which markets? This is for next week. I'm showing you. I'm looking at on NASDAQ on tomorrow, Sunday. I'll be looking at possibly buying that once I've done my Omni analysis. And let's, with that in mind, I think we have an E-mini chart here too, right? Let's go for that. The E-mini, let's zoom in on it. So for next week, I think that we should be looking at NASDAQ getting above that resistance just like the S&P did. It's already above it. And it's sitting above this average. So as long as my Omni gives me a green arrow, I am buying the dips on Sunday night. E-mini S&P,
Sorry, Oscar. Didn't mean to talk over you.
No
Slick Pete
worries.
wants to know if you look at BABA.
I'm assuming I already have this chart drawn up somewhere, but we'll do it fresh. And that's not it. You want to give it a symbol, sir?
I think it's BABA.K.
Okay.
Yeah.
Good. Okay. Do you have a parachute? Because if you own this stock, you better put your parachute in. So you do realize that the fundamental came out a long time ago, but before it started dropping. I mean, it started dropping first. Right about here. This is BA, right? Alibaba. Let me just give you this. So, right around here, we started to top. Actually, even further back, if I recall, back here, we started to top back here. Alibaba got themselves in trouble with the government, and watch how these things all work. Let's see if we can snap a trend on here too. Alibaba got themselves in trouble with the government at a different time. So, just to leave that trend line. All right, so the top comes in here on BA, Alibaba. Right about here, they started hearing from the government, and right about here, the government told them, we're breaking you up. You can no longer own lots of things that you own, certainly not media. You're getting out of the media business. You're too big. And that news came out here. However, absolutely when they were talking about that news, in Beijing, had to be here, right? News is always in the charts first. Now, with that in mind, if you look at this entire chart, it has no shot of coming back up for quite some time. Look at the damage that's been done, and you haven't even seen a capitulation kind of drop yet. And if I could squeeze more bars together, you must imagine there's a lot of money in here, a lot of money in this stock. It's a huge Chinese stock with a lot of U.S. involvement, right? So let's move this line over. So if you then take your channel and just sort of to define which way we're going. Even though I cut right through those bars, I'm just doing an illustration. Look at what's going on here. You've got a long way to go still, and then it's accelerating, which is even worse because of the acceleration that's starting to take place. Now, forget about this channel for a moment. Now you're starting to accelerate at a much steeper channel. So I would say, big problem with Alibaba. Big head and shoulders right here if you didn't notice that. And I certainly wouldn't be willing to stop, but you know, it first told you something was ugly, something was coming out because it put in this big old copying head and shoulders, and then things got ugly. See how there's always a way to read news is coming out? That head and shoulders had to be Beijing deciding what they were going to do with Alibaba. Then the news comes out, and you get this whole move from here. And then it accelerates from here. So it always comes out in the charts first, in my opinion. And as far as my opinion of this one, I wouldn't be long that stock. Certainly would sell rallies in it, but I wouldn't buy it. Anything else I can help you with?
Let's see. Let's see. What is the algo for NEO?
NEO. It could have been 30 or 25. You see the wheels? I'll get it. Let's see the lists. Oh, I never even tried to put one on here. I'm not sure what it is. I didn't try to mess with it. I'm not sure what that is, but I mean, let's just drop something on it. It's not that one. Sorry, I couldn't answer that. I mean, I would do it right before your eyes, but I can't give away too much.
All right, I think we got time for one more.
Okay.
Let's look at ZM.
Say again?
Zebra M, ZM.
Oh.
I think it's, let's see, if I'm not mistaken, that might be the S&P minis. ZM, I think C1 would be C, lowercase c, 1.
ZM C1.
I believe.
See what comes up. Let's try that again. You sure it's ZM C1?
No, I'm not. See, I'm sorry, Zoom. What am I thinking of? ZM.O. My bad.
I thought it was
my mistake. It's a long day. I hope you forgive me.
Okay, I understand. We already had Zoom in one. I've had Zoom in one of your presentations in the past. Let's get rid of it. Let's just look at fresh. So. Once again, I don't like Zoom. It's not a big gap. It doesn't create a lot of gaps. All right, so one gap here. This one wasn't actually a gap because it was filled immediately. I mean, it was, but it was immediately filled as expected. Even this one got filled with the full time. It doesn't leave a lot of gaps, right? And you've got a really ugly gap here. And what I think is a flag underneath that. I think this whole thing is going into a little flag here. So if you wanted my opinion, and especially looking at this low right here, let this be your deciding factor. See this low right here? You stay below that low, you expect it to continue low. Whenever you're in a market that dips down, by the way, and takes out the previous low, it's going to continue further. And you've had one day so far below that low. So, you know, don't go crazy and sell the farm yet, but you stay below that low a little longer. And I think what you'll find on the other end of that is going to be this. I think that will be the fate of this end. So let this low be your determining factor. You start selling rallies if we close below that low for a couple of days. So here's that low to watch for. Price would be, which we give you the whole thing. On that low, price is 275.80. Let's check this one. That one as well is 273. 273.20 is your price. If you settle below that for a couple of days, you have a problem. And that's your price here. And that would be my quick opinion of Zia. And I hope that helps. So remember this, I started with this. This was my theme. If there's anyone still there, was I able to properly express and depict that this is absolutely true? That not only does the news come out in the charts, but you can spot the algorithms that Wall Street's using. Was I able to illustrate that for you properly today? Jeff, if anyone's answering, let me know.
Well, nobody's answered that yet, but Wanda said, I must review all of this. This is super awesome. Great conference. Thank you so much.
Well,
and then about you in particular, everybody's saying you did a great job. I'm trying to find a good example, but yeah, great job today.
Well, once again, traders, thank you so much for tuning in. I love doing these events. And remember, I'm very easy to hang out with. I'm easy to find. I answer my own phone. I sit in my own trading room. And I hope that that question as to whether a guy in a chat room has got any knowledge for you, I hope I answered that for you. Maybe next time we won't feel it.
You did great. Carmen says, thank you for your good talk. I agree. Thank you for coming in. Oscar, it's always great to have you.
My pleasure. Anytime, I'm always here.
Larry says, thank you, Oscar. I learned something powerful today. I'm joining.
My pleasure. That's music to my ears, Larry.
So look for Larry on Monday in your room.
I will. I hope to see everyone who's watching today. Grab a free membership and join me in my trading room on Monday.
All right. Thank you very much, Oscar. Great having you. We're going to wrap up here. Let me just kind of get this going. Thanks again, Oscar. Livewithoscar.com. Or is it Live with Oscar?
It's both. It's okay. Live with Oscar, but you will be living with Oscar if you come hang out with me.
All right, very good. Thank you, Oscar. I always appreciate it. Always so good to have you on here.
Cheers and good luck trading next week.
All right, cool. We'll just do this real quick. Let's go ahead and go back here to me and go ahead and show. Let's see, where is my PowerPoint? Oh, there's Oscar. All right. I do want to thank everybody for coming today. I hope you enjoyed it. It's been a long day. I'd say we had a great collection of speakers. I'm really, really happy with how today went. I hope you agree. I do want to say very, very much thank you for all of our speakers today. They did a great job. I think we had an awesome day. I want to thank our sponsor, Stocks and Commodities Magazine. Get your free issue. You have until the 26th to fill out the form at metastock.com/tradersummit. Wanda, you asked the question, hey, can I get the recording on YouTube? I did paste the YouTube recording to the chat, but for anybody that came today, or even if you didn't come, you'll get the link in just about 1 hour from now automatically. So I do also want to thank the Chartered Market Technicians Association. They're such a great organization, and they do some of the some coaching and teaching, and they're just for some of the world's largest brokerages, and they do risk management, systems development, portfolio management, and behavioral finance. You can find more information about the CMT Association at cmtassociation.org. And finally, the Steve Bigalow of the MetaStock Summit Traders Pack is available today at a great discount. Normally, all of these add-ons that we've been talking about all day would be $3,836. Today, it's $1,974. You can sign up for that at metastock.com/summit deal. You can give us a call at 800-882-3040. You can chat online with either LS or Dave or one of our sales guys here today at metastock.com/sales chat. And I want to say thank you for coming. I hope you enjoyed it. I hope you learned something interesting that you didn't know before. And I hope you enjoyed the experience. So thank you for coming. Like I said, I hope you enjoyed it. And I hope to see you again at a future one. Try out the MetaStock program if you haven't. It's a great program. There's a reason it's been rated #1 28 years in a row. And I will see you at the next one.